the top anchors only on Modinomics, Saturday, 1st February 8 am onwards. Modinomics 2025.
Banking partner PNB, research partner Markets Mojo, stock and portfolio research, associate partner Axis Direct.
Bulls to Bears, conquer the budget the BT way. Insights by Shailender Bhatnagar, only on Modinomics, Saturday, 1st February 8 am onwards. Modinomics 2025.
Banking partner PNB, research partner Markets Mojo, stock and portfolio research, associate partner Axis Direct.
Good morning, ladies and gentlemen. Welcome to Business Today Television. The most awaited day for investors, traders and industrialists is upon us. Finance Minister Nirmala Sitharaman will unveil the annual budget for the next year to March 2026 in about 3 hours from now. The document assumes much more importance as it comes against the backdrop of a slowing economy, slipping markets, a record low on the rupee and of course rather bleak prospects for wage growth and job opportunities. It was fitting that it was Prime Minister Narendra Modi that set the tone for his finance minister by invoking the blessings of Goddess Lakshmi when he said to bless the poor and the middle class. Against this background, ladies and gentlemen, let's look at what the markets are telling us. The chart, the daily chart of the Nifty is upon you. Over the last 5 trading sessions, the Nifty has risen from a 7-month low to post a 3 percentage point rally in the last 5 trading sessions. Remember, this is the first weekly gain in the last 4 weeks. The previous 3 weeks have been relentless selling by foreign institutional investors, which has pushed the index to its lowest level since the first week of June. Not only that, the last 4 months have seen foreign institutional investors withdraw about $80 billion from Indian equities for a variety of reasons, the primary one being overvaluation of Indian stock markets and of course the drawback that is coming in from rising US 10-year yield and the strong dollar. When Prime Minister Narendra Modi said yesterday that he was invoking Goddess Lakshmi to bless the middle class and the poor, that sparked a rally in Indian markets, and that is evident in how the Nifty FMCG index and the Nifty Consumer Durables index and the Nifty Auto index rose anywhere between 1.2 and 1.8%. But overall, the last 4 months have seen a consistent month-on-month decline on the Nifty. This, ladies and gentlemen, has not happened in the last 20 years. And now, it is the annual document which everybody looks forward to in the next 3 hours to unveil what the next 1 year could be. The market is basically looking at a path for continued fiscal consolidation, a rise in capital expenditure to about 13-14% over last year, and of course, something critically needs to be done to kickstart demand as far as rural and urban India is concerned. The middle class, ladies and gentlemen, is feeling the pinch of rising inflation, stagnant wage growth and of course now declining markets. What we will do today is a series of guests who will come before the budget and during and after the budget to explain the aftermath of the document. Immediately with us is Mr. Anurag Singh, Managing Partner at Ansid Capital. Namaste Anurag and a very warm welcome to you. I believe it will be the late hour in New York. It's a pleasure having you here and thank you so much for your time. What are the 2 or 3 main expectations that you have from Finance Minister Nirmala Sitharaman who will unveil the document at about 11 am India time?
Yeah, good morning, Shailji. What an important day, and I think it is always nice to connect with you. Shailji, I think from a market perspective, I would say, market is foreseeing the slowdown in the economy. I think you refer to some of the things there. In terms of demand, the top line of the companies is stagnant for the last, I think top line is like mid single digits. That's the growth for the
Yes.
last 4 5 quarters overall for NSE 500 companies. So that indicates a significant general slowdown in demand in the economy. And I think companies are talking about it. I think from a market perspective, Shelji, we are saying that at least there should not be any bad news. What is the bad
Yes.
news of the markets? One is, higher capital gains tax and all. I think
Yes.
maybe FM would like to take a pause there.
Yes.
Second, Shelji, is, and you refer to it beautifully, the middle class, and actually, I don't know, we can debate that's not actually middle class, it is the rich class, because in India, let us look at the numbers, only 2 crore people pay taxes, right? So if those 2 crore, none of them can claim that they are middle class. So the middle class, usually the concept comes from Western countries, which is, which covers the middle 50 to 70% of the population, right? From 30th, 20th to 80th percentile kind of a population. That in India is pretty poor. So the middle class, which we refer to, is actually top 10% of the population or top five, which is rich. However, but the fact remains that it is very heavily taxed. I would refer to some of the economists, and I think notably Mr. Surjit Bhalla came out with a very good op-ed on this in one of the papers. And he said that the taxation in India has reached effectively 20%, which is comparable to OECD countries, but we are not an OECD countries, right? We don't get those kind of benefits from the government, right? So it should be around 14-15%, which is the norm in the developing countries. It has gone a bit higher. And this includes state taxes and everything, right? So, that is the essentiality, that the people who are paying taxes, you call them whatever class, but they are the ones who get basically nothing in return, but they're just funding this constant government machinery. The taxes in the last 48 lakh crore budget, about 12 lakh crore is income taxes. So about one fourth of the money comes from there. Another, about 15-16 lakh comes from borrowing. But I think the government spending doesn't seem to stop. So I think in all the expectation of the people who are actually paying taxes, and by the way, they are important, that please do not burden us with enough taxes. The economy is very heavily taxed vis-a-vis the benefits that people get from those. Look, that's important. Otherwise, that really doesn't encourage the right behavior from people, and that's the expectation, right? At least don't
So,
squeeze the economy, with taxation.
So, Anurag, I think you've hit the nail on the head when it comes to taxes being most likely pulled down during in the personal finance space, whether that's how should I say, tweaking tax slabs or introducing more incentives. Only time will tell. Yes, I think one of the pillars would be how to ease this tax burden, especially on the middle class that you mentioned. Now, what are your expectations on behalf of the market?
So now that's a bit detailed question, Shalji. And again, look, I'm sitting here in Chicago. I would not like to critique India in the manner that people who are in India can, right? It doesn't look nice, right? But let me pick out from what some of the major economists have been saying. So there are 3-4 points. I refer to Sujit Bhalla. That is the taxation point he made. That's a great point, and I'm sure that point is taken well by the government. That look, we are a very high taxed country, so don't think of further taxing. You can increase penetration and all that, but don't please tax us more, right? So that's one point. The other is by Arvind Subramaniam. He notably refers to 2-3 important points. One is that the the look, we can debate. Many people are saying there's a cyclical slowdown, but I tend to believe that the economy is undergoing a structural slowdown. And why
Okay.
we say structural, Shelji, and I'll give my reasons why I concur with Arvind Subramaniam. Look at the nominal growth rate of India for the last 10 years. So there is a pre-2020 period and after 2020, which was a bit of upheaval due to COVID. And then for the last 2 years, this financial year, the last one, the nominal growth was 10%. Let's not get into the debate of 8%, 7%. There is a nominal number and there is a deflator applied. There are controversies around that. The nominal GDP is 10% for the last 2 years. Look at the last 10 years, the average nominal GDP growth is also 10%. Now, 10% nominal GDP in an economy which has, you measure inflation, it is 4%, I would say 6%, 5%. Okay, that is not sufficient, Shalji.
True.
Why I'm saying it's sufficient? It is not good enough to, considering that we have a huge demographic dividend. India's median age is 30 years, right? And the aspirations that people have, they're not going to be fulfilled sufficiently with this growth rate. So I think much more needs to be done. And here let me quote Arvind Subramanian. His point is, he's saying people say, oh, there is a slow down and let us cut taxes and spend some do some fiscal spending, and then that will revive the demand. He's saying the demand is not there because people are not earning. There is a lack of organized sector jobs or sufficient growth therein, or there is lack of income. So structurally, because that's not there and that has never been resolved, we come back to this perennial nominal growth rate of 10%, which has become our.
So, Anurag, just hold your horses. What we'll do is we'll get our special correspondent Karishma Asudani to join us. She has been in conversation with Finance Minister Nirmala Sitharaman over the last so many months, and she will let us know what are the 3 or 4 most important things that this budget document is most likely to unveil. A very good morning to you, Karishma. What do you think the document will unveil about 3 hours from now?
Well, I think the priority has to be on the review of the Comprehensive Income Tax Act, which is expected to be addressed in FM's speech today. Let's not forget that it was during the last full budget, post-election budget, that Finance Minister Nirmala Sitharaman had said that this task of 6 to 8 months of a comprehensive review is being done to get done with the redundancies of the Act and to make it simpler for the taxpayers. It is also expected that a relief could come in for individual personal income tax payers on the new regime front. About 78% taxpayers have moved to new regime from old regime. There is a possibility government could actually increase the standard deduction from 75,000 to 1 lakh and also bring in relief with 10 to 12 lakh tax slab rates. Besides this, Shell, what is to watch out is their contribution towards the centrally sponsored social schemes, be it Manrega, be it the Kisan Nidhi scheme, where they have been trying to hold a strong fort. And a challenge amidst all this is fiscal consolidation. Are they going to achieve 4.9% deficit by March end? Because the first advance estimates have given a 5% advance estimate, but the absolute difference, also because of the fall in their GDP growth seen in Q2, because of low consumption, low purchasing power seen in the past few months because of elections, is of concern, and their fiscal glide path. Amidst all this, all that's happening with the new US president and his say on tariff policies, and India's subtle digression from its China +1 policy and accepting China as actually an important player for investments, is to be watched out for.
So, Karishma, tell me one thing. You're standing in front of North Block. How cold is it there?
It's very cold here, and I hope the chills will not be felt when she is reading out her speech during the budget.
Well, with that, Karishma, thank you so much. And we, of course, look forward to all the inputs that you will be providing us from the Parliament, from the North Block. and here's hoping that all of us get a much needed relief as far as taxes are concerned, and of course the government takes a lot of steps to ameliorate the pain that is there in the economy and of course bring in growth. Stay tuned with us, Karishma. We'll be coming back to you. Let's get Anurag back into the conversation. Anurag, you heard what Karishma has to say. Two things I wanted to understand from your side. There is this insistent and consistent selling by foreign institutional investors to sort of take advantage of any bump up that the market offers to press heavy sales. That could probably be because of the strong dollar and the hope and enthusiasm that the new US president brings into the economy. What is your reading of this FII sale number that we have touching about $84 billion over the last 15 odd months or so? Do you expect them to continue with this heavy sales in 2025 as well?
So, Shailji, let's understand it from a perspective of a foreign investor. First of all, I think it's not it's in no way it is a reflection of, I mean, in some manner, some way it is, but, and I'll touch upon that point. But foreign investors, some money is permanent and some 20-30% money is always tactical. It tries to chase the next big story and the flavor of the year. And then, thereby, because within the emerging markets, first of all, China was, doing some fiscal and monetary policy action, so it looks little attractive. Other emerging markets, Argentina, Brazil, are pretty cheap and also showing promise. So relative basis, the money can move around. You refer to the valuations in India, which were, obviously not very cheap. So if good money is made, the chances are that the story doesn't repeat, especially after 3-4 years, right? So that's one thing. But let me just also refer to another report by one of the economists, which is, and now almost everybody is saying, look, RBI has been holding rupee in a range. It's almost like a peg for the last 2 years. Now, what is the reason of that policy? There are hypotheses around that. We don't need to get into that. The reality is, rupee seems to be 6 to 8% expensive compared to the dollar. And the depreciation is kind of overdue. Now, if the rupee is anyways imminently going to 90, 92, then why would somebody put in money just now just to see the 5% off just because of depreciation? So that is the immediate reason why some money or on the margins also might be getting pulled out. Added to the fact that, the markets were rich. And third is, of course, the earnings are now not growing. We told you, for the past 5 quarters, top line growth is 5 to 7%. The earning growth is pretty much flat. When that is the scenario, then I think markets also need to take a correction. It is just the domestic money which is keeping it afloat. Otherwise, I think the sensible thing would have been, Shailji, to take a correction. Look, this is not a national reputation at stake. Market is buy and sell. If there is no value, then you should drop. There's no prestige on this, right? Ultimately, we are all there to make money.
Absolutely. And I think that's very well put, that as long as the rupee does not find its correct level to float, you will see foreign institutional investors pull out money piecemeal or in a consistent fashion that they have done. And absolutely, this 40,000 crore rupee that is coming in on a monthly basis as systematic investment plans by retail investors is one of the main reasons why you haven't seen a very sharp fall, but a normal gradual decline in many indices. The Nifty itself has corrected about 10 odd percent over the last 4.5 months. The Bank Nifty has fallen about 15%. Corrections on small caps and mid caps are far higher, and sectoral indices such as the auto index and of course FMCG index have fallen even more sharply. That's very well put, Anurag, that ultimately we are here to make money, and the fact that valuations matter is something that crores and crores of new investors who've come into the Indian market over the last 4 years are now realizing. These are bull and bear cycles, and that is how it happens. What we'll do, ladies and gentlemen, reach out to Chetan Bhutani. He's the associate editor at Business Today Television and find out from him. He tracks two major components of the economy, the infrastructure as well as the auto segment. Good morning to you, Chetan, and a very warm welcome. What are the hopes that the market has from Finance Minister Nirmala Sitharaman as far as infrastructural spending is concerned? That's been the cornerstone for the last three budgets and has not only buoyed the economy but also the markets. What should we look forward to? What kind of a number, Chetan?
Well, absolutely, Shail, you correctly pointed out. In fact, in the last 5 years, the government has spent over 54 lakh crore rupees in the capital expenditure. But however, and in fact, when you see the economic survey, it also says that over the next 2 decades, India has to focus on building infrastructure at a rapid pace. Again, the budget for 2025 will be focusing upon the infrastructure spending and of course capital expenditure as well. What we have learned at Business Today is the fact that approximately 5 to 8% hike is what the Ministry of Road Transport and Highways will get. Nirmala Sitharaman last year allocated about 11 lakh crore rupees for the budget for the entire year spending, but now Railways also is likely to get a little bit more allocation in the budget over a highway sector, because the government plans to develop more greenfield and brownfield projects to have more dedicated freight corridors, develop more bullet trains, so that, and 30,000 crore rupees worth of EPC contracts are pending, and to push in private investors and the private investors into the railways and the highway space, the government needs to spend more and bid out more projects. So the government will be doing its due. What my sources have told me is that in the budget that will be presented at 11 a.m., the finance minister would be pushing heavily for more capital expenditure and more capital allocation for the infrastructure space.
Right. So about a 10 to 11% uptick on capital expenditure allocation, which could be to the tune of about 11.30 lakh crore rupees. And that, ladies and gentlemen, has kept Indian equities, Indian companies afloat over the last maybe 36 to 54 months. Look at how railway stocks have appreciated. Look at how the smart rally has come into companies such as ABB and Siemens. Of course, for the last 4 months they've corrected, but overall the CAGR for this sector has been phenomenal. Now, Chetan, to a sector that you and I love, which is the auto space. You track it, and I enjoy driving a lot of cars. Now tell us, what are the expectations that the automobile space has from the Government of India as far as the budget document is concerned? Not only is the auto sector a very large employer, it is also a massive contributor to GDP. Chetan.
Well, absolutely, Shail. India is now in the top 5, auto manufacturing in India, and of course, in the last budget in June 2024, we saw the government did not allocate much of an amount for the auto space. However, what we understand from our sources is the fact that this budget that will be presented at 11 a.m. could see more allocation for the 3 government schemes that the government focuses upon, which is the PM E-Drive scheme, of course, for the electrifying vehicles, the FAME scheme, which is of course for faster adoption and manufacturing of electric vehicles, which is including more allocation, more incentivizing, giving more subsidies for manufacturing EVs in India, and of course its components in India. That is why, Shail, you're an expert here, but you know how the component manufacturing market is of course growing into the space. So the government with these 2-3 schemes and higher allocation here will definitely drive more growth in the auto space. The government would be of course wanting to incentivize new energy vehicles, because the government wants more use of ethanol in its vehicles. The government plans to go completely carbon free by 2030, eventually phasing out petrol diesel vehicles. So the government has to begin now to act if they really want to have new energy vehicles and give more subsidies and incentives as far as the auto space is concerned. However, we're not expecting much stops for petrol and diesel vehicles, of course, because the government's focus is on the EVs and of course the new energy vehicles that are currently in development.
Wonderful. Chetan, I am sure you have a very busy day ahead. Chetan incidentally joins us from Vijay Chowk, where Chetan and Karishma would be tracking the budget next to the parliament, and of course all the major updates that will be coming in will be via them. Thank you so much, Chetan and Karishma. Have a nice day, and I'm sure it's going to be very, very fruitful and very, very enjoyable. Let's get Anurag into the conversation. Anurag, you heard both reporters in terms of expectations on capital expenditure, the auto space, as also tax relief, and of course a host of other things that the budget document might like to hold. Now, coming to your own strategy for Indian capital markets, Anurag, given the correction is 4 months old, are there spaces which according to you have come into the valuation zone for maybe instigating some small buys, or are we still overvalued? You're not looking at Indian markets at all. What's been your philosophy?
So, okay, so before I come to the specific part of your question, Shalji, let me also just, on FII point, and again, I keep picking other people because I don't want to put my name into criticism. But I think this is also important that when FIIs are selling an Indian mutual fund flow that keeps buying the stocks at these prices, look, the prices are not right. And so whatever you buy at this price, it's long-term perspective. That's not, that portion of money is not going to give good returns. But I think this fallacy sometimes that domestic mutual funds propagate that, oh, had it been 20 years, and now I'm quoting Shankar Sharma ji, which is he's written a beautiful article where he says, oh, 20 years back, money would have, we would have fallen 20-30% on this kind of FIA selling. But this time, our investors have done dat ke samna, and, and we haven't allowed our markets to fall. Now, there is nothing more ridiculous than that, Shalji. Really, and you can understand, we are not protecting the borders of the country. It's not dat ke samna. It's a buying and selling has to have a rationale. Even if the market falls, there's no concern. But the point is, if you buy at a wrong price and say we have done dat ke samna, that's a pretty bad argument to make. Right? So I just
Anurag,
want
one
to
thing I have
there.
to say,
Yeah.
you've done a lot of effort in sort of finding out other shoulders where you could shoot your gun from, and you've basically listed your own thoughts and found out speakers who've sort of
Yes. Yes.
voiced similar ones, and you're quoting them, whereas actually these are your own thoughts. So that's a very nice
No,
strategy.
Nevertheless,
Nevertheless,
I concur. Yeah. But Shalji, the point is we have to be constructive in criticism. We have to say that, look, listen to all these people too.
Yeah.
It's not okay. But I concur to all these thoughts, right? I've been also saying that, for example, this not protecting the border, this is my philosophy, which is my statement. But yes, the thought comes from him as well. But I've been writing it on the same thing as well. Now to your question, Shalji. What do I buy? Look, now there is a perspective difference, and I want to explain that. Look, as an FI, my 90% of my fund stays within US, 10% goes to emerging markets. Now that's a mandate and that's a philosophy we follow. And within that 10%. So first of all, my 10%, my research will not be to find out 1,000 crore company in India, because that'll require too much effort and involve the kind of risk that we don't undertake. So as per our philosophy, and which is with many FIIs, they try and stick within the top 100 companies. They don't want to go below because, there are other risks, and, we don't have mandates for that, and maybe that requires much detailed work. So that is one point. So a limited point being, I'm not saying that there are not hidden gems there. They might be, but our research is more little skin deep out in India, whereas it is more extensive in US. That is first point. Second is, because of this flexibility of the 10% moving around, we might not have, because the capital can move around, it does move around, right? So currently we are pretty light in India, but that doesn't mean somebody who is based in India, he's not investing in global markets. So that's a good thing. I mean, good or bad, I don't know, but these are the constant that you have to live with. So their perspectives can be different, right? So let this be very open that, whatever I say, if I'm saying that I've been a seller, it doesn't mean that Indian investors should sell too, but it's just that my capacity doesn't, we don't have the capacity to figure out the hidden gems at this market. Now that brings me to the valuation. So Shalji, look, and let me just start with this small example. When I can buy a Google at a price earning multiple of 25, or a Meta at a price earning multiple of 25, or Apple at a price earning multiple of 30, these companies have gross margins around 50, 45, 50 to 60 to 70%. Then I don't have to pay a TCS of 40 multiple, right? It doesn't gel with the overall approach, right? However, the fact is, the Indian market doesn't allow the capital to move around freely, right? It is not there are capital controls. So there is capital, it has to chase within Indian assets only. So thereby there are some disequilibrium that exists. So that is also kind of let it be known as well, that that it also decides your valuation. That doesn't mean that TCS can't go up. Maybe it can, but it is difficult to justify, eventually. So Shalji, my allocation is purely in private banks. I like top three, four private banks in India. They are pretty safe, they are pretty stable, and we are long-term fund allocators over there. And we believe that ultimately these banks will ultimately capture the larger, even larger share of the economy. And that has been the India story. Aside, technology, I mentioned that, we find it expensive on a relative basis. We don't like that. FMCG, again, consumer discretionary, everything seems really expensive. So I think time would be when there is a little bit of blood on the street. That's the right time to buy those companies, not now. Fourth is very important. I think we've repeatedly discussed healthcare is a space which everybody is looking at in India, be it private equity, be it listed markets. India has one quality, Shalji, despite whatever we say. There is a top segment of India which is doing very well, exceptionally well, and which continues to do well. By the way, those are the people who say, "Why are you taxing us more?" Right? So they are pretty top people, and their kids study abroad, they do foreign vacations, they do everything, right? So hospitals in India are going to be in constant demand. So whatever, whenever you get them at a good price, be it other associate, laboratories, other things, anything related to healthcare outside of pharma. Is a bit of a hit or miss. It depends on a lot of other factors. But within healthcare, anything which is, associated with the healthcare delivery space is pretty good opportunity. You're not going to get cheap, because again, even if people fall sick, they're going to get treated. So it is recession proof also in some sense, right? So that is a good space where we find value, and it has actually performed pretty well also past 3-4 years, right? But everybody else has done as well, right? Good well. So basically, Shalji, private banks only. I'm not saying financials, but there might be froth in rest of the places. We don't like insurance. Insurance, typically, my sense, life insurance companies will not perform. They have not performed. Maybe that's a larger discussion, Bill, but only private banks and healthcare currently seem to be of good value. And what is the hurry? Invest 30% in bonds. If you made good money for 3-4 years, please, okay, if I want to leave the viewers with one thought, and my belief is that India wealth is created within Nifty 50, Nifty 100. Don't believe the other 400 companies, they've historically not created wealth, except for
Right,
the
Anurag.
past 4. So that will correct. That's my kind of leaving message, Shalji. I want to leave with.
Thank you so much, Anurag. It's been a pleasure listening to your views, and I hope you'll visit India soon, and we'll catch up on a couple of cups of coffee and dive deeper into valuations of the US market, whereas valuations of the Indian market. In fact, the economic survey actually points out that valuations are rich in the US markets, and if there is a correction there, then it will be a pain point for Indian stocks too. Be that as it may, thank you so much for your time,
Yeah.
Anurag, and I hope you have a nice evening.
Thank you, Shalji.
Okay, ladies and gentlemen, let's head back to the Lal Street, where two of our very good friends and guests are now joining us. Gaurang Shah, Senior Vice President for Geojit Financial Services, is with us, and is also Shivani Sarda, Technicals and Derivatives Analyst at Motilal Oswal Financial Services. A very good morning to you, Gaurang, and of course a very warm welcome to Shivani as well. With your permission, Gaurang, I'll start with the lady, and we'll take this conversation forward. Namaste, Shivani. What a pleasure to have you right there early morning. We've had 5 days of decent gains on all sorts of indices, all sorts of stocks, whether they are high beta, whether they are FMCG, whether they are pharma, whether they are index heavyweights. Is the worst behind us as far as the correction is concerned, or is this a dead cat bounce?
Very good morning, and thank you for having me, Shelji. So we've seen that the markets have witnessed an excellent recovery from the last 4 trading sessions. Bulls are definitely back on the street, and somewhere the pain point is looking, to be over right now. We're looking at unwinding at 23,500, which was quite a short covering move that helped the index with strength. India VIX has also cooled off before the event itself. So overall, strength is going to continue over here, and we are heading towards 24,000 levels with a crucial support at 23,350 marks.
Okay.
So index is all set for a good up.
Wonderful. In fact, the cheer that the last 5 days have brought to the market has been much needed. We've had terrible 4 months, and it's never happened, ladies and gentlemen, that the Nifty has corrected for more than 4 months in a row, and that is what Gaurang will answer. A very warm welcome again, Gaurang. 4 consistent months of selling. For the last 22 years that you and I have been in the market, this is a new record which we hoped that the market would not hit, but it has. What now, and what are the 2 or 3 major expectations that you have from the finance minister, who will unveil the budget over the next 2.5 hours?
Thank you, Shailji. Morning to all of you all, and good to be on this platform interacting with you. Expectations are always one too many, Shalvai, when it comes to budget. Knowing the fact that the Honorable Finance Minister has got her own limitations to deliver, but nevertheless, expectation to build up. So before I go on the expectation, the 4 terrible months that you spoke about was after almost 2.5 years of super phenomenal returns from the market.
Yes.
So I don't think anybody has to complain. Point number 1. Point number 2, despite of that historical lifetime high sell side figure from the FIs, we've corrected just about 12 or 14%. I'm taking the low of 22,800, which we saw very recently. So again, no reasons to complain. In terms of expectations, so, of course, certain sectors will be spotlight in the budget: defense, infrastructure, power, railways, and pushing the consumption theme, because that has gone to a new low, both in the urban, semi-urban, rural in India, on all 3 sides. So I guess that's where the Honorable Finance Minister will touch upon certain policies to make India much more attractive in terms of long-term FDI. When I say long-term FDI, I'm talking about 10 years, 15 years, 20 years and beyond. I'm not talking about the short-term P money that comes and goes off within 3, 4, 5 years, and then we are left in a lurch. So I think that's where I'll possibly look at, and making policies for Indian companies to compete globally and as well as perform locally, with fiscal prudence in mind and job creation. So I think these are the broad. And if I have to just take 2, 3 points from the economic survey that was put out yesterday, and the statement made by the Honorable Prime Minister Shriman Narendra Modi ji, then I think there is something positive that is in store today. This is an expectation, especially what is happening in the global arena and the news from the US from President Trump.
Fair point. In fact, the survey expects GDP to grow anywhere between 6.3 to 6.8% in the year to March 2026, and it, how should I say, in the sternest possible language, asks the government to move out of the way to provide better regulations, easing of doing business, and of course, exhorts states to follow the path of expanding businesses and creating jobs. That is what the document said, and the fact that Prime Minister Narendra Modi actually invoked Goddess Lakshmi in saying that she should bless the poor and the middle class, so that that itself sparked a very strong rally in FMCG counters, consumer durables, and of course the auto space. Getting Shivangi back into the conversation, that's a very sensible point that you mentioned, Shivangi, that you've taken most your trades off with 23,500 on the Nifty. But what about the Bank Nifty? Do you think that the worst is over? The Bank Nifty actually yesterday rallied very sharply. It rose to the extent of about 1.5% to 49,587. Your view on Bank Nifty?
Excellent short covering move, and after the consolidation of the last 2 to 3 sessions, we've seen that strength has been regained back here as well. Now, the interesting part is that heavyweights were performing from the last 2 to 3 months slowly but gradually. But the interesting part has been that from the last 1 week, the smaller banking names have also contributed to this index, and overall, the entire space is now showing strength. So we are expecting, this. There was a hurdle at 49,500. We've comfortably closed above the same. Now we're expecting this level to hold for the next up move towards 50,500. And of course, volumes have added, and IVs have also cooled off for Bank Nifty, which clearly indicates that put writers are quite comfortable here. So 50,500 is next what we're looking at, with a support of 48,850 levels.
Point. And this is very well said that over the last 5 trading sessions, it's the PSU banks. Look at Bank of India. It's appreciated from 90 rupees, which was the most recent low about a week ago, to somewhere like 112, 113. And that also included a stunning set of third quarter numbers, which the bank reported midweek. Gaurang, coming to you. This 4-month correction, especially on the PSU segment, has been very, very sharp and has sort of made many retail investors nervous. The point that you mentioned, that the previous 2.5 years have been so good, and wealth creation in the PSU space was the maximum. Given this background and the correction that we've seen, have some stocks, according to you and Geojit Financial, come in the buy zone as far as valuations are concerned, especially government PSU banks?
Well, Sushil, I think the sell side was more aggravated because of some sell side report from institutions, especially the foreign institutions. And if I have to reflect upon the earnings, not only in the third quarter, whatever we've seen now, but even in the second quarter, I think public sector banks did quite well. Some of the names which we have fundamental buy side report. So we are optimistic on PSU banks, SBI, Bank of Baroda, Canara Bank, Bank of India, PNB, and Indian Bank. These are the names wherein we have. But then the valuation was looking extremely juicy post the correction. And if you reflect the earnings, then I think it was screaming for a buy side long term investment idea. We maintain our stance, and we expect the entire banking sector to do well, both public as well as private, including some of the strong NBFC names which are diversified, or maybe some housing finance companies and small payment banks. Other than that, we are positive on oil marketing companies, oil exploration companies, and we are positive on defense related themes, power related themes. And this is where I believe the Honorable Finance Minister will also do a decent amount of budgetary allocation like she has been doing over the past couple of budget. And these two segments are priority sectors according to us, power as well as defense, including infrastructure, because we lack a lot in terms of the demand and the supply that we have. And of course, being self-reliant as far as exports, I beg your pardon, imports of defense equipment was concerned 3 years back. Now it is much better. So I expect these sectors to do well, and we remain positive on defense, oil marketing companies, public sector banks, and some of the names in engineering side, names like Engineers India Limited, positive there as well.
Okay, I'll request Shivangi to keep her view ready on Indian Bank and Bank of India. Meantime, I'll request the PCR to fire the long-term chart of Indian Bank. You'll see strength, and the fact that in the last 5-7 trading sessions, the bank has actually improved dramatically. It's just corrected about 2.5% in the last 3 months, and about 4% in the last 6 months, whereas many of the indices themselves have shown a very sharp decline. This modest correction in Indian Bank is mainly because of its financials, which Gaurang has alluded upon. But let's go to Shivangi. Shivangi, your view on Indian Bank. Yesterday's close was 555.75.
So talking about Indian Bank, we've seen that of course, the smaller names have now witnessed buying attraction in the banking space, And Indian Bank specifically has taken a good support at its previous resistance zones. So clearly, there has been a role reversal that has happened technically if you check the charts. Now, on the larger time frame, also we've seen a consolidation of the last 7 months, and now the stock is picking up and from the lower levels of the consolidation band. So definitely looks quite positive for a next good up move. Now we are, witnessing some sort of volatility. Of course, the budget volatility cannot be ruled out, but of course we are expecting good targets over here, and one could play this swing for 575 odd levels with a support of 550 zones.
Okay, Shivangi, I'm going to come back to you to ask your top two picks before the budget speech. Meanwhile, Gaurang, given the backdrop that you've mentioned in terms of hopes and expectations from the budget, any two stocks that you would be, how should I say, looking positively till about 11 a.m.?
You're throwing a difficult question at me, Shell. Not a guy who can answer for the next couple of hours. But yeah, if you ask me from a long-term point of view, keeping budget in mind and keeping the infrastructure growth story that I just alluded to in my opening remarks, I think something like we cover a lot of infrastructure companies, but
Yes.
if I have to pick one, then I think NCC Limited would be the one.
Okay.
There is a lot of expectation for APT, that is Andhra Pradesh and Telangana region, and
Yes.
this based out of there. So positive over there on the fundamental side. And if I have to look at power theme, then I'll give you three instead of two.
Okay.
Tata Power would be the other one in the power generation side, transmission as well as EVs charging stations. And from the defense side, a stock that was a flyer yesterday, BEL, Bharat Electronics Limited. So these would be my three budget themes, if you will, not from 4 hours point of view, but from a long-term point of view.
Fair point. You know, Gaurang, very early in my life, I realized asking questions is easier than giving answers. So I have stuck to them for a very long while. And of course, very well put. BEL, very, very strong show day before yesterday as far as the quarterly numbers are concerned. Let me just show you how Finance Minister Nirmala Sitharaman is now approaching the steps of the Ministry of Finance. She'll be just getting off the car and proceeding to brief her cabinet colleagues on the broad parameters of what the budget document will hold. And from then on, she will proceed with her team to the parliament, to the new parliament, and unveil the document. Reporters are now in front of this wonderful structure where I've spent about 20 years of my life manning this gate and looking at, hoping for very good news to come in. But that's how it is, ladies and gentlemen. The finance minister will very quickly make her appearance with the budget document, holding it in that red folder, and with her will come the entire team. What we'll do, PCR will just keep on playing these visuals in the side, and we'll keep our questions running. There she is. She walks into the finance ministry and will be out very shortly with that red document which contains the budget speech. Shivangi, coming to you. Two stocks for today.
So on my radar is, from the consumption space, the first being Tata Consumer. We've seen that there has been excellent short covering move over here. The stock has bottomed out on the weekly basis as well. And now 970, which used to be a previous hurdle, now is acting as a good support. Stock is very comfortable above its key 50 exponential moving averages on the daily frame as well. And looking quite positive. The volumes confirm that the price up move is sustainable. So 1065 is the targets that we're looking at for Tata Consumer with a support of 1000 levels. Now the second pick will be IRCTC. Of course, around the budget, we see there is a lot of movement in this counter, and it's giving a breakout from the downward sloping trend line, which means a trend reversal here on the larger time frame, and RSI is turning positive for this one. So quite positive, and we are expecting 850, 860 odd levels over here with the support of 805.
Fabulous. I think IRCTC was the stock of the day yesterday from the railway pack. It did phenomenally well, and as pointed out by Shivangi, it was amongst the top gainers. Tata Consumer as well. Two stocks that require your attention, Shivangi, is BEL, a very strong breakout post earnings, and the stock rose about 5.5% yesterday, if I am not wrong, and about 12% in the past 5 sessions. Shivangi, a build up before the earnings, very strong earnings, and a further build up post earnings. What are the charts telling you at 292.65?
BEL has been a consistent performer from the last 4 years. Consistent buying has been seen with good support based buying, and we've seen that although recently there has been some softness in the stock, but overall it's always managed to pull back, from its support levels. And quite positive momentum can be seen around from the last 3 sessions. We are witnessing strong buying here, and volumes have added in the last 2 days, which also confirms a good up move. So we could expect round about 310 levels for this one, and a 280 would be an important support to watch out for. Those who are in the buy trade also don't forget to trail their stop losses above.
Wonderful. So please keep an eye out on BEL. I'll request the PCR to fire the longer term chart of BEL, maybe 3-4 years. And 2 or 3 points will be very clear from this chart. One, what Gaurang mentioned, that in the last 36 months or so, a phenomenal amount of money has been made in PSU stocks in the broader market, and in particular defense counters. The price that you see 292 is actually a 1:1 bonus also. So this is actually a price of somewhere like 590 odd in the last 1 year. I'll request the PCR to fire a longer term chart. You will see how BEL has given supernormal returns, and that buttresses the fact that both Gaurang and Shivangi were talking about. Yeah, 2 years is 2x, 3 years will be even better. Can we fire a 3-year chart? Yes, 5 years is 9x. So that is the kind of wealth, ladies and gentlemen, that the market has created, and we are getting worried about this 4-month correction. One must have, how should I say, a balanced view in life, which Gaurang so very often talks about. Gaurang, coming back to you. So I have done all that I could to visually show our viewers what you were pointing out. But one very important statement that Prime Minister Narendra Modi made yesterday, and you alluded to as well, that Goddess Lakshmi should bless the poor and the middle class. How do you think the market has interpreted that statement?
I think I was very, honestly, Shell, I was very pleasantly surprised to see the market movement on Thursday, especially during the monthly expiry. And during the last 3 days, that is Wednesday and even on Thursday, intraday correction was witnessed at around about between 11 and 12 or thereabouts. Markets was trading high, it dipped because of some sell side, and then it again recovered. So that showed strength to me. And more importantly, with the kind of build up that we saw yesterday, just 1 day before the budget, Shell. More so we can give that credit to the economic survey report, and of course what the Honorable Prime Minister alluded to. So let's see what's there in store. I don't want to build up huge expectation, but normally, Shell, you know me, I don't really have budget expectations. But this time around, I have turned my side due to many global reasons, and more importantly, the kind of consumption and capex and credit offtake. These are things that we talk about, Shell. I expect this to be in top of the list in terms of priority for the Honorable Finance Minister when she starts delivering the budget.
Okay, Gaurang, hold your horses. We'll get back to Shivangi. Shivangi, Gaurang talks about how wonderfully well the Nifty reacted to the kind of short covering or maybe value buying that we saw over the last 5 trading sessions. Would you want to highlight some internal data in terms of advanced decline, in terms of your own observations that you might have had in the past 5 trading sessions? Out of 5, in 3, the Nifty ended at its day's high and continued with the rally the next day also. Shivangi.
Data point here, which I would like to show, which is the FII's long short ratio. So recently, we've seen that this ratio, sank to 11.1%, which is the recent low for this one. And I'm talking about the F&O data. So we've seen that, whenever in the last 3 to 4 years, this ratio has come down to maybe 10 to 15%, the market has taken a reversal from those levels. So this clearly indicates that there is a bottom formation here in the markets. Of course, the selling has been steeper this time as compared to the other times in the last 3 4 years, but we are witnessing some sort of stability here as well, and expecting this reversal to be sustainable here. Now, the magnitude of the DII's buying has also increased, which clearly shows that there is strength in the domestic market, which is being supported by all the players as well. So this is an interesting data point supporting the index.
Fair point. I think for the immediate short term, the trimming of the long short ratio is something that holds out a bit of hope for traders on the long side. But Gaurang, any bump up is met with heavier sales from foreign institutional investors. Your thought on our Gora friends, what are they thinking?
Well, how do I put it? I love them, yeah. They are the ones who make me invest in stocks at reasonably low valuation.
Yes.
Look, I don't look at what happens today, tomorrow, 1 week, 1 month, 3 months, 6
Yes.
months. I am really not bothered about what happens to the market, and especially what the Goras do. I am more concerned about what data points I believe in, what data points domestically I understand. Yes, global markets have their bit to do, have their impacts on our markets, and especially, don't be surprised, Shell, post today or even after the budget, by the time we wind up the market at 3:30 and maybe next week, there'll be one country where these guys can go
Yes.
in a market basket. I mean, so be it. I mean, we had we had FI selling. On the flip side, we had depreciated rupee against the dollar at lifetime low. So we had our own problems to take care of. I think we have taken care of them reasonably well. So if they want, they can sell more. I'll be more than happy. But I think they will turn tables, because I think from today onwards, if the budget delivers on the expected lines, and if the earning growth for the third quarter reflects on the fourth and the next financial year, then I think India would be the destination for the green bucks to come back.
As always, I have offered digital ghee shakkar to Gaurang many times, and I shall be sending it to him on SMS. Gaurang is the only market participant who's not on WhatsApp. Am I right, Gaurang? Or do you have a different phone which you've not shared the number with us?
No. I have 2 phones, one official, one personal, and in none of the phones I have WhatsApp and the X and the Y and the Z and the Insta of the world. I'm far away from that, Shell.
And that's the reason why there's so much of calm and peace on your face, Gaurang. You're not tuned into social media. I wish I was in the same boat as you. Shivangi, we've seen the pharma index run the other way around because of too many changes that came in from the US in terms of what President Trump mentioned about tariffs. Within the pharma space, what do you think is a good pick at lower levels?
So yeah, definitely pharma has been a recent favorite, and we've seen that the stocks did kind of rally in the month of December, but January kind of muted off and profit booking was seen thereafter. Within the pharma space itself, it's the diagnostic and hospital space which is looking more attractive right now at these levels. So I would like to shift a little bit focus here to the hospital name. I'm liking Apollo Hospital, which has taken a good support near about 6,600, and this one is poised for a good up move. Now the good part is that on the larger time frame, month on month basis, it has been respecting its upward sloping channel and looking quite positive. So this one will be on cards. And next targets that we're looking at is around about 7,050 and with a support of 6680 zone.
Very good morning to you, Gaurang and Shivangi. Good to be having you right on the budget day. Just a couple of hours from now, we will see the finance minister come out with that budget speech. Record 8th budget for her. Let us see whether this time around the middle class and the taxpayers are on top of her radar as well. Gaurang, I'm going to be coming to you right here. Do you think a lot hinges on this budget than the previous budgets? Because this is the time when we're actually hoping for some sentiment boosters to come in. 4 months of a long losing streak for the markets right here, something that's not been seen for over 20 years. Can the budget really turn the tide for the markets and for the D Street?
Sakshi, and morning to you as well. So my understanding is, and I was just speaking to Bhatnagar about my views on the budget. So my sense is, Sakshi, that budget is not the only platform wherein reforms and policies can be delivered. We've seen that in the past also. Post-budget, government has formed policies, have taken steps and measures, changed certain regulations to enable the growth and push the GDP and consumption to the next level. But yes, I do agree with you that keeping all that has happened on the local and more importantly global front, expectation is post the economic survey and the statement made by the Honorable Prime Minister that possibly today it would be not business as usual. I think the Finance Minister will definitely deliver, if not all, but on some of the expectations that we all have in the budget.
There is a green start as far as the Lal Street is concerned. You have a 101 point uptick on the Nifty. Shivangi, 23,600 is with us. That brings a lot of cheers to all those people who watch charts and levels. This was a major resistance that the market was hoping to overcome. Let's hope, as everybody has been, that this turns out to be an even better day than the last 5. Now let us look at stocks that are contributing to this. HDFC Bank, the highest weighted stock both in the Nifty and the Bank Nifty, is up 5.5 at 1705. There is a strong traction coming into TCS, 15.8 higher. L&T is 24 rupees higher. Bajaj Finserv 14 rupees higher. There is a mild red tick on Hindustan Unilever and Infosys, down about 4 and 4.5 rupees respectively. A green tick overall in the top index heavyweights. Let's shift focus very quickly to the F&O space. You have the infra space, ladies and gentlemen, doing pretty well. IRB Infra, I can't remember the last time I saw a 9% uptick on it, 63 rupees for you. Shriram Finance buzzing 3.4% higher. Polycab, Adani Green, Siemens. I think infra will be a very, very big play today. Bit of an uptick on Sun Pharma as well, 1752, and a quick dive into NSE 500, then we'll go back to our guests. Okay, so it's power and infra all the way. IRB, JP Power, Power India, Suzlon, these are the names that I see in top shape. Thermax up 3.5%. So that's how the market has opened. The Nifty now 70 points higher, 23,567. A quick look into defense. This is a space that was buzzing really well over the last 2 or 3 sessions. You have BEL 2 rupees 40 higher, 296. About Garden Reach 15 rupees 60 higher. Cochin Shipyard 16 rupees 70 higher. And of course you have HAL 17 rupees higher. So this is a very nice broad number. Advanced decline is 1389 versus 454. Sakshi, anything that you are observing?
Absolutely, a whole host of buzz, and we are seeing all these favorite stocks come back into action. Infra, railways, defense, power, PSUs, all of these stocks are actually coming back into flavor. We have more guests joining in with their views on what to expect from the budget. Vaishali Parekh, Vice President Technical Research and Analysis at Prabhudas Leeladhar is with us, and also joining in is Sharad Avasti, Head of Research at Smiths. Warm welcome to both of you, and thank you so much for taking the time out. Big day today to 2 hours from now, we will finally see whether the finance minister has given into all those long wish lists that have been coming to her for months and months in a row. Let me kickstart with Vaishali. Looking at what we are seeing in the pre-open rates, 23,550, 23,600. क्या अब की बार एक बार फिर से होगा 24,000 पार बजट के बाद?
Yes, there is a lot of optimism in the air, and well, now that we are seeing a good opening, I think we are going to witness a good wild swing. So for today, I would say 23,250, 23,300 should be the support levels, and about 23,650, we would be heading towards 23,800 to 24,000 levels. So yes, right now the bias is quite positive.
Right. Giving company to Vaishali is Sharad Avasthi, Head of Research for the Private Client Group at Smith's Securities. Namaste, Sharadji. I think it's the first time that we are welcoming you in the morning. Normally, we have you in the afternoon, and an all-important day for our viewers to listen to your very calm and collected and poised voice as to what your top expectations are from the budget and how is it likely to impact markets.
Yeah, thank you for having me on the show. Yeah, I think largely, sir, the budget would focus on the twin themes of consumption and capex formation. That will be the primary theme they would focus on. And most of the initiatives that they take, whether it's a tax cut or whether it's rate rationalization or some inverted duty structure correction, most of it would be directed towards increasing consumption. There could be something, on the home loan rates because in most metro cities, the kind of home loan rates or the reality rates that they are, I think this 2,40,000 or 2 lakh kind of exemption really makes not much sense for anyone to buy a home. It's only getting you part of the flavor. So I think that could be something that could be looked at. Similarly, income tax rate rationalization in some brackets, I think the government has to understand that, this mid cap is going to bulge, your per capita incomes are to double. So anyway, your tax inflows will be strong. But to spur consumption, I think it is high time because over the next, 6-8 months, maybe if you look at the economic survey, I think inflation is coming down specifically in India. How it shapes in US, etc., is something that's another ball game. But I think the focus would be on, spurring consumption through direct and indirect measures. And similar approach would be on the capex front as well. Though it's a hard job to balance both, but I think this would be an eventful budget which should lead to much more optimism in the markets and the economy.
Okay, eventful budget that could lead to optimism in the economy as well as in the markets. Vaishali, top key sectors that you will bet on today and key stocks that you're looking at for the budget day trade.
Well, of course, I would look at power, infra. That's the common sector which everyone would be focusing on. But I'm watching at the stocks technically, I think some of the rail stocks are also showing a lot of volume and momentum. So rail sector also should be the focal point. But basically infra related, so I would say along with that also cement, and the other sector is power. So NDPC, REC, these are the stocks that I would be focusing on. And back to the basics, the trends which are already intact. So Maruti is one of the stocks, auto sector. I would go on stock specific yet.
Okay, it's a bit of a buoyant market so now, and you see visuals of Finance Minister Nirmala Sitharaman and her entire team of bureaucrats joining her for this photo opportunity in front of the Finance Ministry in the North Block, and there you see the red jacket in which the budget speech is ensconced. From here, the Finance Minister will head towards her cabinet colleagues, give them a very, very brief outline of the major policy changes that are now in this document, and from then on, she will be headed towards the Parliament. Sakshi, any thought you would have on the lovely sari that she's wearing?
Yes, she always wears those lovely kanjivarams, and she's been donning those all through along. This is a record 8th budget. We've seen, shades of yellow, shades of white, shades of red, all across. And let's hope all of these colors are spread across her speech. Now, she's the one who holds the record for the maximum consecutive budget speeches that have been given. She got that last time around when she presented the budget in July. And this is again her record 8th budget. She also holds the record for the longest speech as well. So let's hope it's not as long as that, but it actually, contains all of our wish lists coming true too. So that's something that we are hoping for today. All right, let's look at the markets now. All the sectors, I think barring just a slight loss on oil and gas, rest of it looks in fine shape in today's trade. 23,528, we are a 20-point uptick. So we are going in with slight nervousness, I feel, and we are edgy, but let's hope if things turn positive. Sharadji, to you. Where do you think the maximum allocation, increased allocation will come in this budget? Everybody is clamoring for, okay, boost consumption, give us higher capex, improve manufacturing. Those have been the key pain points in the economy. But what specific sectors, if you can mention, will be mentioned in the speech today?
I think infra, healthcare, tourism, it would be the same line that they would beat on. Defense obviously will be one of the key sectors to invest in from the government's point of view. So I think the top priorities will remain very clear. Maybe you would have some, more impetus given to schemes like Manrega, etc., because to spur consumption on the rural side of it. And I think largely it would be a focus on infra, healthcare. Inclusivity will continue to be a theme. I think there should be some focus on the bottom of the pyramid. That is one space which has been languishing for some time now. So I think this is a mix. I think sector-wise it would be defense, railways, infra, healthcare, tourism. These would be the key sectors that the government would be looking at.
Right. Sharadji, your view on the fantastic set of numbers that BEL reported day before yesterday, as also on the stock price?
I think the numbers are pretty good, and defense companies will occasionally, surprise you as well as disappoint you because of the lumpy nature of the revenue booking that these companies do. I think BEML probably is the one which will have a more balanced approach and not have lumpiness in the numbers. But most of the other companies will have lumpiness because these are large gestation period orders. And the quantum is also large. So when the revenues are booked, it might show up in one quarter, might not show up in a few quarters. So you might get disappointed. But I think if you are holding to these stocks with, 1.5 year kind of horizon, I think it would be difficult to make money out of this. Maybe a BDL, Cochin Refinery or a HAL is available at attractive valuations. But rest of the pack, I think it's a bit fairly valued for an 18 to 24 month kind of view. And it would be difficult to make more money out of these ideas. But the big trigger could be if some of the export orders culminate into wins, then I think there could be further re-rating. I think that is the big trigger these companies are waiting for. But 1.5, 2 years, I think maybe across the board, most of them are priced to perfection.
Okay. Vaishali, your very quick view on BEL. There was a build-up on the stock before earnings. And post the earnings, it's on a flyer.
So, technically, I would say compared to all the other defense stocks, this is still a healthy chart. And I would say, 250 acts as a very good support. And we saw this stock retesting just a few days back. And from there on, it has surged. So, I think now near-term hurdle comes at around 300 levels. Once we see a decisive move about that, I think it's back on track for a target of 320, 330.
Okay, in fact, Shail, you were pointing out to the lovely sari that Finance Minister was wearing. I stand corrected, it's not a Kanjivaram. Why? Because Finance Minister is wearing a sari that was gifted to her by Padma Shri awardee Dulari Devi in 2021 for her Madhubani art, and that is what she is donning. There was a request from Dulari Devi for Finance Minister if you could please wear her sari on the budget day, and she has granted at least that wish for her, and I'm sure she will be the happiest today. Remember, this also if we were on India Today, I was there a little while ago, they would have tried to look at some reading of the fine print and saying that is there something coming in for Bihar. Last time around there were big announcements for their coalition partners. This is the first big budget in the full Modi 3.0 or NDA 3.0, if I must say. It's coming in. So I don't know if something of that sort is coming in the budget.
So Sakshi, I've been married for more than 2 decades and I know that one must never correct a woman. I knew it was not Kanjivaram, but I kept quiet.
But beautiful sari right there, Madhubani art, and Dulari Devi must be so excited to see that Finance Minister has granted a wish. Arun Kejriwal is with us.
Okay.
As far as the market expectations on the budget day are concerned, Arun, warm welcome to you and thank you so much for taking the time out. You've been seeing budgets after budgets. You've been seeing various governments present the budget and you've seen how the markets react to them. Does this budget really have in it to pump prime the economy, to put the GDP growth back on track and to also lift the D-Street spirits? Too much to ask from a budget?
A very, very important question. So let me give you a couple of points on it. This is probably the first time in the last 20, 25 years that I am trying to understand the budget where the street has virtually no expectations. There has been no pre-budget rally whatsoever. What you have seen in the market over the last 4 days is more of a corrective rally, if I could use that term. What do people expect? Some changes is personal income tax, where the bottom of the pyramid, you call it the middle class, you call it the lower middle class, have more disposable income. Of course, industry expects every time, some benefit or the other, and there are wish lists. But the number of wish lists that normally get sent are missing this time. So this is the budget where the street could get pleasantly surprised, in my understanding. So this is a make or break budget for Nirmala ji, and as it is the opening budget of 3.0 for Modi, I believe one should look at it a little more carefully because the fine print will say it all.
Right. Namaste Arunji. I'll just take a detour into the markets which have opened with a very strong advance decline ratio. 1418 shares are in the green versus 428 in the red. Across the board, Sakshi and I track 19 indices for you. 16 are in the green and the uptick is led by none other than the Alpha 50 index, up 1.5% at about 50,678. So that shows the mood of the market ahead of the document, which will be unveiled at 11 a.m. Across the board, you see a very strong uptick coming in. As far as the index heavyweights are concerned, look at Larsen and Toubro. So it's going to be an infra day today, and across the board you see a lot of infra stocks doing pretty well. L&T is up 17 rupees, 35.78. In terms of top gainers, you have Inox Wind. Again, the renewable space up 10% at 185. You have Suzlon 4.5% higher at 60.77. IRB Infra 5% higher. KNR Construction 4.4% higher, and the entire railway space is abuzz with gains. Railtel Corporation 3.7% higher, 422. Jupiter Wagons 4.5% higher. Rail Vikas Nigam Limited 4.7% higher. Arunji, I know it's a tough ask, but between now and 11 a.m., is there something that you're looking at positively in terms of stock prices?
I don't think one should bother about what happens over the next 110 minutes. It's mere speculation. It's market players trying to make a quick buck even before the budget starts. The action would start only once she starts. The first 5-7 minutes will give some idea of what she's going to do. Anything that happens now, it's like those advertisements that you see in a theater before the main movie starts, or maybe some trailers.
Okay, Sharad ji, let me come to you as well. What is the one big number that you feel the budget will be or the markets will be reacting to? There were years and years when the markets would either, crash or surge just on this one number called fiscal deficit. From the last few years, we have been given it to understand that it is important to pump in more money into the economy, even at the cost of fiscal deficit. Right now, the glide path to 4.5%, do you think that will be important for the markets to really look at? Or do you think all these asks on tax relief coming in, on welfare schemes, because we are in an election year again, how would you really look at all of these?
I think the fiscal discipline path will remain as it is. This government has always been very clear, barring the post-COVID era, which is a special situation kind of position. But if you look at it from 2014 till date, they have adhered to the fact that they want to remain on a fiscal discipline path. During these last 4 years, post-COVID, obviously your borrowings etc. went out of the way. You needed abnormal measures to just stay afloat. So it's like a person drowning, so then you really don't care about health and all that, what costs you're incurring, but you just want to save that person. So I think this was a very dire time where special requirements were there. But other than that, if you look at the way the government has been run, I think they would continue to streamline the fiscal deficit, and as you mentioned, they would want to be very straightforward on that. And regarding most of the tax cuts etc., yeah, I think the pocket rebalancing they will have to do. But to spur consumption, I think they will need to cut pockets somewhere. But largely, it will be focused on consumption and capex. And whether it will be at the cost of higher fiscal deficit, I don't think that will be the case. Maybe some areas will have some cuts here and there. That will help in spurring the tax cuts, etc. But not at the cost of higher fiscal deficits. That I think is a certainty with this government.
Arunji, this is a touchy topic as far as all those investors who've come into the market post-COVID. This consistent and insistent selling and profit booking that we are seeing for the last 4 months. Do you think the worst is behind us as far as 2025 is concerned? The economic survey actually makes a very valid point that even the US markets are at euphoric levels, and any correction there in this calendar year will have a similar impact on the Indian markets. Where do you stand in this debate?
So, Shell, without trying to contradict you, let's understand 25, we have just completed 1 month. We have 11 months to go. जैसे हिंदी में बोलते हैं ना, पिक्चर अभी बाकी है, बहुत कुछ होना है इस साल में. And you have certainly touched a touchy topic. The investor base has more than quadrupled since the time of March 20, and unfortunately, these people are experiencing a period of correction for the first time in their lives as investors. Just to give a statistic for all it is worth, this is the first time in the last 24 years when markets have fallen for 4 months in a row consecutively, something that has not happened since 2001. It's not just any other period. To your question on whether we have seen the worst, certainly not. Let's understand what happens in America will have ripple effects here. We have already seen foreigners continuing to sell, FPIs selling. Bond yields are at rates which are higher than the Fed interest rate, etc., etc. And this is probably the first time when, even on selling, they are able to sell at reasonable prices without breaking the market, because we have a very large base of investors who are willing to buy at any price. So this is a God-sent opportunity for FPIs, where without disturbing prices, they are getting an exit. So I think the worst is yet to happen. It doesn't mean that markets will fall 10, 20, 30%. It is just that this kind of depressed prices, markets going nowhere, having a downward tendency will continue for a large part of this year.
Absolutely. Vaishali, let me come to you. Again, we are looking at some buzz in the markets around the themes that we are expecting some relief on. The PSU space, railway space is buzzing. Some of the defense counters are buzzing. Infra, we did discuss. Real estate, that's buzzing. Maybe some announcements on affordable housing can kick in. What can you pick from the PSU basket particularly in terms of where the action could come in?
So actually, see, BEL continues to perform well. Besides that, I think look at stocks like CESC, NBCC. They are all showing PFC, Power Finance. They are all getting into momentum, and of course, not to forget this Hoodco. We have been recommending this stock as a budget-friendly stock right from 225 levels. It's again surging high. So I think these are the stocks which are showing momentum. And fertilizer stocks like GNFC and FACT, well, yes, and IRFC, many of these stocks are showing momentum.
Absolutely. These are pure budget plays, ladies and gentlemen, and they are frothy on about 1.5, 2 hours before the document. Remember, there were glory days which all of us have been privy to when the pre-budget rally started soon after Christmas was over. But this has been an exceptional year, and this has been an exceptional year because the last 3-5 years have been phenomenal when it comes to making gains. This is a painting that's being drawn of Finance Minister Nirmala Sitharaman. I hope she, does this. This is the rupee symbol that's also drawn with her, and with that arrow up, it seems that the painter wants to show that the rupee will appreciate. That is not really good news for the markets because the markets are looking for the rupee to depreciate. Arunji, given the backdrop that you've mentioned in terms of your expectations of the broader market, is it that in 2025 you will not come out with a shopping bag, or you will buy piecemeal and you will buy only relatively undervalued assets?
Sir, we have a market share which has got more than 7,000 or 8,000 listed stocks. Add another 100 that come in through IPOs. So you have plenty to choose from. Yes. And if there is a problem, it is where to allocate the money amongst those stocks which are identified. So never to say that there would be nothing that is available, but it would be a little more difficult than taking, say, one or two sectors and investing in that sector, whether it is from the top or picking from the bottom and doing it. You will have to be careful in stock selection, and you will be able to make your 15, 20, 25%, but randomly following stocks, looking at, don't take it seriously, but with a pinch of salt. Just hearing a casual guest on the show and taking a stock just because somebody said he likes it. It could have been said in a lighter tone. It could have been said in a comparative tone that compared to A, B looks good, and you go and invest, you could be in trouble. So there are plenty of stocks which are available, and making money in general would be tough, but making money for people who are prepared to put in their effort, I'm sure there will be money-making opportunities. And just to add to that thing, to give it some sort of color, there would be money-making opportunities in galore.
Okay, and in that background, I'll just request the PCR to fire the chart of Blue Jet Healthcare. When Arunji was with us in his last appearance, he had mentioned that you need to look at this newly listed company at a record high, ladies and gentlemen, somewhere like 766 today, 2.33% higher. So that's the reason why you need to listen to sensible people like Arunji, because in this complete dismay, when almost all parts of the market are falling like 9 pins, you get Arunji to pick outperformers, not only outperformers in the market, but those that hit record highs against the broader trend in the market. So thank you for this one. Do people continue holding Blue Jet Healthcare, or is there much more ahead, Arunji?
So if you were to ask me on a 12-month horizon, yes, there is more to follow. But if you are talking from a trading perspective, because there has been a very sharp run up in the share, there could be a short-term correction. One can never rule that out. But for an investor having a 12 to 18-month horizon, just stay invested. The company has declared its best ever profit. It has put in place the expansion. Some of it has come on stream. It has announced new expansion when the results were declared. So things are on track. Company is cash rich. It doesn't have debt issues. All these things warrant for a stellar performance going forward from this company as well.
Right. Okay. Sharadji, coming to you. I think the one question that also begs that begs our focus is whether the FII flows, the FPI flows will return to India post this budget. Are they also looking forward to some indication in the budget that would attract them back to our country? Was it only about valuations, or are there other things which are policy driven that are somehow not able to pull all that foreign money yet in?
No, I don't think they would be very aggressively looking at the budget. I think the focus of FII inflows would depend, on the interest rate and inflation trajectory, which is intertwined. And our opinion is that inflation would come down with due respect to what Mr. Trump would do in terms of tariffs. That could really, jack up inflation in the US and maybe delay. Because even if you look at the economic survey, you look at the report, it says that, the developed world has cut interest rates by anywhere between 75 to 100 basis points. But across the 10-year government securities, and even in the developed world, you have not seen any correction. Actually, the 10-year government yields remain steady because people are expecting that, Trump coming in, tariffs basically coming in would keep inflation high even in the US. So that might not result in a, sustained lower interest rate trajectory for the US. But I think till now, whatever tariffs he has spoken about is in a very calibrated manner. It's not something that you are going out with 40-50% tariffs all out of sudden. So I think it will be in a calibrated manner, not pumping up inflation in a jitter. And that should result in a sustained lower interest rate regime in the developed world further. And that should help, flows into emerging markets. So I think the large trigger would be how the interest rate trajectory shapes out, particularly the 10-year government security yields in the US. And I think that would sustain the momentum, bring the momentum back for FII inflows into most developing markets, more so for India. But certainly, I think the local level growth rates, even the economic survey hasn't really posed a very healthy growth rate for the future. So that is a problem area. So unless and until growth rate also picks up, I think that will be something they'll be looking at. And the quarterly numbers over the next quarter or so might be optimistic. So that might bring back FII inflows. But the big trigger, I think, would still be interest rates and the inflation trajectory in US.
Right. Thank you so much, Sharadji. And I think we should get you in the morning shows as well. Thanks to you and your presence, the markets are turning a darker shade of green. All indices are now in green. The top performing stock index at the moment is the most beaten down earlier, which is the realty space. So this is again a play on the budget, which is expectations on the loan front in terms of housing loans, maybe tax incentives are on the way. So that's how it is. Advanced decline is now 1,590 shares versus 551 that are in the green. Arunji, coming back to you, in terms of sector specific changes which the government might unveil in this budget, what are the one or two industry spaces that you are looking for given the political backdrop of this budget?
Oh, yeah, it's a very easy question, and I normally would expect Shail for you to give me tough ones. We have one neighbor, quite small in size, but who's sort of acting a little tough and trying to bully our country. For them, the key sector is textile. I believe to put things in perspective on the political front, score brownie points and whatever else you need, uh, incentives for the textile sector are certainly going to be there. I believe this could be a sector to watch out for post the budget. There could be a PLI scheme which comes in for new investments in this sector and for India to regain its rightful share in the global market as far as textiles are concerned. I believe this is one key sector to look forward in this budget. Besides this, the usual play infrastructure, railways, defense, make in India, all of this will want to just see that key number. How much has the allocation to these sectors gone up? There is no way that wagons will not be ordered. There is no way that you will have new tracks being laid out, etc., etc. All this is absolutely given. One other sector that could be a real booster from a stock market perspective is drinking water and sewage treatment. We want to have cleaner cities, people to enjoy better hygiene, etc. So all those companies involved in providing drinking water and treating of sewage could get some sort of an uptick in this budget where the allocation is increased and incentives are given for doing projects in this sector.
Right. Well, Arunji, thank you so much for being with us and as always sharing those pearls of wisdom on the budget day for all our viewers. Let's keep our fingers crossed and see whether this time around the budget will carry something that can pump prime the economy as well. Let's now welcome viewers another top guest who's joining right in. Remember, this is a non-stop budget coverage that we are doing for you on Business Today Television. Manish Sontalia, Director and CIO, MK Investment Managers, is now joining in. Manish, warm welcome. Good morning to you. Good to have you with us on Business Today Television. 1.5 hours remaining now before we see the final print on the budget and the speech starts. What's your one big expectation from the speech this time around?
I think alleviate the problems of the middle class in terms of consumer spending. I mean, that is very much the need of the hour. And, the consumption of the middle class has really fallen off the cliff. It's the largest that the economy got during the COVID. And, that is one area that should get a whole lot of impetus and which could actually, drive other things like your private capex, etc. Today, consumption itself is very weak. And that is also not driving the private capex. The government is doing its bit as far as the capital expenditure on the government side is concerned. Even that is falling short of expectation. So I think the task is tough before the FM. On the one hand, you will have the FRBM, sticking to 4.5% fiscal deficit. Last year, capital expenditure on government side will not be met. I hope that number 11.11 lakh crores, gets whittled down to at least 10 lakh crores, if not 11 lakh crores. And on top of that, you build in something like a 20% sort of an increase in the capital expenditure. I think these two things will, sort out most of the problems as far as the markets are.
Namaste Manishji, a very warm welcome. Shail this side. It's always a pleasure to listen to your well thought of views. At this point of time, in the PMS schemes that you have, what is the level of cash that you've raised, and are you looking to deploy it fairly soon, or will this be, a painful 2025 for bulls?
I mean, it's common knowledge that unless and until something drastic happens in this budget, FY26 is likely to be a year of consolidation. And, there's no way that one should expect the returns that came in fiscal 25, or not even fiscal 25, fiscal 24. Post the pandemic, the sharp run up because the moot point is that, for stock markets to do well, your corporate earnings have to do well. And corporate earnings today are not in a great shape. And that is something which will keep the lid on stock prices on the upside. So cash levels in a AIS scheme which I run is close to 10% as of now.
Okay.
And PMS, basically there will be hardly any cash because it's all.
Manish, now when ultra HNIs approach you to manage their money, have their expectations improved? Have they come to some kind of sense that the rally that we have seen in the past 3 years or so was unsustainable, and perhaps that one must be a little cautious ahead? Has that realization sunk in?
No, as far as the retail HNI customer is concerned, I think over the years they have matured quite a bit. It's no longer playing the herd mentality, which was there 20 years back. They are quite literate in terms of how the financial markets are going to move and what is happening in the global context, so on and so forth. But one thing is for sure is that the last 4-5 years of one-way non-stop rally in the markets have elevated expectations as far as returns from stocks are concerned. I think our job as fund managers is to set the expectations right and not keep elevated expectations of something like doubling every 2 years in terms of returns, etc., because that is quite far-fetched from the long-term returns standpoint which India has offered. Unless and until something very drastic happens, path-breaking reforms, etc., then it's a different trajectory. But I think as we see things as of now, I think even if we get a 15% on the Nifty 50 for FY26, it should be a very good return to look at when it comes to fiscal 26.
For down expectations, 15% would be a good one to see on FY26 in terms of returns on the Nifty. We also welcome Mr. Devin Choksi, MD of DR Choksi Finserv Private Limited, now joining in. Warm welcome to you, Devin sir, and thank you so much for taking the time out. Well, the budget day is yet again here. Do you think this budget has in it to do something for the markets that could not only help it retest the previous highs, but also probably go beyond it? Or do you think it's too much to ask from this budget?
Sakshi. Well, I don't think that it is too much to expect. I think economy is absolutely, on a firm wicket, which is a good sign. And what government has to basically take care of is few things. One, they lacked in implementation of whatever the measures that they announced in previous budget, particularly on the infrastructure spending side. If they end up putting up their acts together and start implementing whatever they have allocated, I believe that that would be the reason for kickstarting the economy and economic growth. I wouldn't be surprised if they do the allocation of around 12 to 12.5 lakh crores for infrastructure, as against 11.10 lakh crore which they had allocated in July 24 budget. And then efforts will be to implement that infrastructure program. That is what I believe will happen. Second most important aspect, they are tightly working on the roadmap given for fiscal deficit, which is fundamentally important. If they must bring down the inflation, if they must bring down the interest rates, I think they will have to work on the talk that they made on the fiscal deficit side, which is 4.5% target for this financial year. In my viewpoint, I think that roadmap will be available. The third point where I believe that they are holding significantly high level of opportunity is in the area of already announced programs in renewables, in semiconductors, in cloud computing, particularly data center related activities, and among all, I think the entire AI space that we are talking about. So in each of these areas, they would probably end up attracting significantly large sum of money. That is what my take is. Should that happen, I think this budget will cheer the market.
The pictures that you see are Finance Minister Nirmala Sitharaman briefing her cabinet colleagues, including President Murmu, on the outline that the budget document will have, which is right there in front of her. And from here, she will head to the new parliament to unveil the budget. I think those are the images that you are seeing. She's moving from the Rashtrapati Bhavan towards the parliament, but the markets are off to a flyer. This is the 5th day of gains. Actually, yes, this is the 5th day of gains, and the index itself is up 55 points, 23,563. Decent gains coming in the small cap space, the broader markets as well. And it's the PSU defense basket which is the top performer. Look at how Masgaon Dock is up 3.5%. You have a strong gain coming into Garden Reach Shipbuilders, which is up about 3.5%. Again, HAL, BDL, BEML, all of them showing very smart gains. Devin bhai, is this space, the defense sector, still a hunting ground for you, or are valuations still to correct? Devin bhai, the question was for you. The defense sector, have the valuations corrected substantially, or is there still room for fall? I think there's an issue with the connection with Devin bhai. Manishi, this question again comes back to you. The defense space, how do you see it at current levels? Have the prices corrected substantially, or is there more to go?
Shailender ji, railways and defense are flavors during budget times, and today is no exception. But having said that, I think valuations still are quite low. You really don't have too much of leeway as far as the spending side of things are concerned. FRBM of 4.5% fiscal deficit and 6.3% real GDP growth can't build in more than 10% revenue growth. Your capital expenditure at best could be 3.3% of your GDP. And that would include all the spends, right? And, where is the leeway to increase, spending on defense, etc., substantially? So, having said that, yes, there has been a pullback from the recent lows of the defense company, but I would believe that valuations still are growing.
All right, and let's also welcome another guest. We have with us in our studios a very special guest joining in. Punita Kumar Sinha, Managing Partner, Pacific Paradigm, is joining in. Warm welcome to you, Punita, and thank you so much for joining in on this special broadcast as well. Of course, all the conversation around what this budget could have. Could it really set the ball rolling for the economy and drive sentiments higher on the D Street as well? That's the big ask. But I want to first ask you, are you looking at more indications from Trump's commentary, or are you looking from Finance Minister's commentary this time around, Punita?
Well, that's actually a very important question, because I think what the Finance Minister can do is really focus on our domestic economy. But the markets are not just working on the domestic economy. There are a lot of the foreign investors in particular are impacted by what happens globally, and some of our companies also impacted by what happens globally. So President Trump's comments are just as important, because they control the external economy, and the Finance Minister can really control the internal economy.
Namaste Punita ji, and a very warm welcome to you. I must, I'm a little nervous asking this question, nevertheless I will. Who did you vote for in the US?
A vote is a private matter.
Okay, I have my answer. Okay, now let's focus on our markets. We've had this unrelenting selling by your foreign friends, who were Indian friends as well. Like they are taking away money from Indian shows back to the US. US 10-year yield, you know better than most of us put together. How do you see this trend? Will this continue? So far, $80 billion have been withdrawn in the last 15 months or so. Where do you stand on this equation?
Well, I mean, frankly, it wasn't that they were favoring one regime over another. It is simply valuation disparity. And the Indian stock market had gotten a little frothy, particularly in the mid and small cap space. And therefore, everybody knew that the valuations were not being supported by the underlying growth, and it was only being supported by flows. So, and the domestic flows predominantly. And the domestic investors don't have alternatives the way foreign investors have. The foreign investors can invest in China, they can invest in other emerging markets, they can invest in the US. There's just like a much bigger pool that to choose from. The opportunity set is far larger. So when you see valuations in India that are unsustainable because of what the growth and the earnings numbers were turning negative, earnings estimates were negative. So that's the reason people moved away, the foreign investors who could move away. And when if the market corrects sufficiently and the valuations become attractive enough and the growth story is supported and maybe today's budget may support some of that, then the money will start flowing back in. But right now what is important is that even our domestic investors are getting more cautious, and if you look at the SIP data, that is also showing that it has slowed down considerably. So a lot of investors are out of the market, especially the speculators, and are sitting on the sidelines waiting for some good news.
Absolutely. Let's get also Devin sir back into the conversation. I think he can hear us now. Devin sir, I think we're asking what exactly can we expect from the budget, what can push the markets higher, but let's also focus on what could be a dampener. What is it that we should not be getting in this budget document? What should the finance minister refrain from doing? What would that be?
Well, I think majority of the focus is basically on managing the fiscal deficits. And I'm talking about combined fiscal deficit between the state and the center. If any further freebies are given, which would lead to unmanageable fiscal deficit, that would be a disappointment, and that can possibly significantly affect, I think, the inflow of money from the foreign sources as well. So I will believe that I think the government and the finance minister probably will not tinker around with such kind of approach, wherein probably they would expand the deficit. On the contrary, I think they would try and bring down the deficit to 4.5% as we were talking about. Second most important aspect is it is expected that you raise money by way of selling some of the capital investments, particularly the PSU stocks. So far, I think this has disappointed the market. It has not happened. For some reason, I think if they have a roadmap ahead, in the sense, I think the market will probably accept this as a positive move as well. And that has a potential to attract a lot of new investment in the country, because that raise of money would definitely mean that the fiscal deficit will come down from what it is currently. So I would rather look forward to both the possibilities, more the possibilities at this point of time.
Your view, Punita, on this very touchy topic. What should the finance minister not do from 11 a.m. onwards?
You're talking specifically with respect to capital gains tax, I suppose. See, my view is slightly different. Having invested in other countries as well as India and even the US, the retail investors there are taxed higher on long-term capital gains, particularly in the US, and also the short-term capital gains tax is higher than what it is in India. So while the markets always hate increase in capital gains taxes, you also have to look at the state of our economy and the fiscal situation and the wealth creation that has happened in the financial, equity investors' hand. So there is a rural sector that's in distress, but then there is this whole equity market investor that has had significant wealth creation. So if the tax, you have to increase taxes somewhere. You can't keep penalizing the salaried employee. So if you increase the taxes here, it is actually better for the economy, may not be good for the stock market in the short term, but it will be a good source of revenues, and the market will absorb it eventually. Because if our earnings grow and the companies do well, then the equity markets will bounce back at some point.
Do you think, Punita, then there is a case to probably relook at the STT? Are we also being overtaxed when it comes to equity as well? Should there be a case to abolish that at least?
Well, it depends on, you have to balance the whole basket and see the mix, how you want to shift the mix and what will get better revenues for the government and what will hurt the least for the retail investor. I think it's a balancing act and it can be done. And it can be rationalized to some other jurisdictions. So, and I think maybe the markets won't like it short term, but eventually I think they'll absorb it.
These are the views that are coming in from the parliamentary building, and that's the motorcade of Finance Minister Nirmala Sitharaman heading towards Parliament, where she will be talking about the budget document 1 hour 7 minutes from now. Let's get Manish Bhai into the conversation. Manish ji, where do you stand in this debate? Should there be a combination of STT and long-term capital gains tax still to be deployed for better tax realizations, or does one have to go?
Shailenji, I think, foreign investors have really been very, not very happy about the capital gains tax that has got introduced. So, in any case, if you can reduce the capital gains tax, nothing like it. The markets are going to fly, and there is going to be absolute stopping of the selling that has been relentless from the foreign investors' point of view. Even the domestic investors will like it. But the best that can happen in the current situation where there is a clamor for resources, I don't think there's any tinkering of capital gains or STT that is going to happen. The best that can be done is just leave it untouched. And, that is the best that you can expect in this sort of a scenario. And I think one aspect that should be clearly avoided, but it's very much plausible, is that the government during the COVID actually reduced corporate tax, anticipating that private capex will pick up. But there's not been too much of significant pickup in private capex. And if you read the economic survey yesterday, and has been a direct hint that at the corporate sector that you should be lifting the ante along with the government when it comes to upping the private capex. So this is one expectation. So I just hope that in order to balance the budget, there is no increase in corporate tax rate. Because if you have to stick to FRBM, if your revenue budget can't be more than 10%, your real GDP growth is at 6.3, and your capital expenditure even at 3.3% of GDP, 12 lakh crores, anticipating a 20% increase on 10 lakh crores, the number which you will see for FY25. I mean, there is, and not too much of disinvestment happening because nothing really picks up as far as disinvestment is concerned. So I think two things will matter. One is the dividend that will be declared, that will be paid by RBI to the government, and the balance will be basically corporate tax. So these will be the two areas where there's going to be a lot of juggling that is anticipated as far as the balancing of the budget with 4.5% fiscal deficit is concerned.
Okay, I think Manish makes a very valid point when he says that the leeway that the finance minister has in terms of raising fresh revenues and giving relief to sections of the markets seems to be very less, and she has a tough balancing act to follow. Punita, the economic survey very clearly mentions that it's the private sector which now needs to pick up the baton from the government and start its capacity expansion. It hasn't done so in the last 3.5 years, despite tax cuts. Where do you stand in this argument? Do you think that corporate India has let down the economy, or is it because cheaper assets were available via the NCLT, which they could buy instead of create fresh capacity?
Well, the thing is, now I'm on board many companies on the private sector, and there it's not like the companies are avoiding investing. They're continuously looking for opportunities. Every company knows that the Indian consumer is a growth sector, and they are continuously finding ways to grow their companies and their bottom lines and their top lines. And so to the extent that they can find a rational return on any investment that will get them more profits, they will make that investment. So, for instance, in steel, I was on a steel board, and there they were looking to expand capacity rapidly. I'm on many other sectors. In the pharma, companies have so far been focused on the US generic market, but now increasingly they are also focusing on the Indian market, the Indian patient, and finding ways to reach out to them. So it's not like the companies are not coming up with proposals. It's also that it has to have a decent IRR and a return on equity for your stock market participants, for people like us who want to also hold the company's ROE and return ratios and also be accountable. So both the boards, investors are always looking at these ratios, and therefore the companies, to some extent, if they can't find the right asset at the right valuation or the right investment case where they can grow rapidly, they shy away from it.
Okay, Punita, it's time to thank you, but I want to ask you something interesting. How long is going to be the budget speech today, and which is the word that will be spoken the most in the budget speech?
That's an interesting thing. I haven't thought that. I suppose it will be your standard. I don't see it being different than what we've seen in the past, because there is a lot to be discussed given the state of the economy. And I think what will be discussed the most, the word could be potentially wages and employment.
Okay, last time it was tax. So let's hope wages and employment. That's something that Punita is betting big on. Thank you so much, Punita, for being with us and sharing those wisdom, balls of wisdom with all our viewers. Keeping our fingers crossed that we do get some goodies out of the budget speech today. Devin sir, quickly before we thank you as well, what is it that is your number one ask from the finance minister today?
Implement.
I'll take one.
Implement whatever the measures that we have already announced, implement it well. I think the government has possibly let down last year on the implementation front. And as a result of which, I think the economic growth has come down. I think if the economic growth has to come up again, then probably I think implementation of those measures are absolutely important. And I think, as I was making a point, I think these four areas, the renewables, the AI, the semiconductor, and computing, these four areas deserve to add into your PLI scheme for further attracting investments.
Okay, let me just take this opportunity to take the final question from Punita. I'll request the PCI to please show Finance Minister Nirmala Sitharaman. And the view is on this Madhubani sari that she is wearing, Punita. Any thoughts on the Finance Minister's choice of wardrobe this time?
Oh, I love Madhubani saris. I have a similar type of sari that I bought in Calcutta many years ago, similar white with Madhubani. I love all these ethnic saris, and I think it's great she's promoting it. And I think there'll be many more sales hopefully coming from this.
Which sari is President wearing? What is that kind of a sari, since you talked about your knowledge about saris more than me on the show?
So I think that's a Chanderi.
That's a Chanderi? Yeah. Okay, we'll find out in the fine print then. We'll find out.
And I have one more task to do. I think the better half is also watching. So I'll have to get this Madhubani from somewhere.
Yes.
It's easily available. I have exactly something similar.
With that, ladies and gentlemen, we'll again take a look at the markets. The Nifty is up 47 points. There is a sea of light green across the Lal Street. Spaces in the defense counters like Mazgaon, Cochin Shipyard, Garden Reach are in good shape. You have a strong move coming into railway counters such as RVNL, Railtel, IRCTC, IRFC. These are all pre-budget plays. Fertilizer is doing extremely well. Let's hope that the worst is behind us and that this budget document unveils something to look forward to from February 2nd onwards, in fact from 1 p.m. onwards, and this 5-day rally that we've seen now moves into a better and higher gear.
All right, viewers, it's time to take a very quick break, and we'll be back with another set of panelists. And don't go anywhere. Next 1 hour is going to be a discussion on what the budget document will be. Countdown has begun. We are inching closer to the final time. 11 a.m. is when Finance Minister speaks. Stay tuned.
Budget Day, the BT way. Catch all the action with our top anchors only on Modinomics, Saturday, 1st February 8 a.m. onwards. Modinomics 2025.
Banking partner PNB, research partner Markets Mojo, stock and portfolio research, associate partner Axis Direct.
Budget Day, the BT way. Catch all the action with our top anchors only on Modinomics, Saturday, 1st February 8 am onwards. Modinomics 2025.
Banking partner PNB, research partner Markets Mojo, stock and portfolio research. Associate partner Axis Direct.
Budget Day, the BT way. Catch all the action with our top anchors only on Modinomics, Saturday, 1st February 8 am onwards. Modinomics 2025.
Banking partner PNB, research partner Markets Mojo, stock and portfolio research. Associate partner Axis Direct.
Budget Day, the BT way. Catch all the action with our top anchors only on Modinomics, Saturday, 1st February 8 am onwards. Modinomics 2025.
Banking partner PNB, research partner Markets Mojo, stock and portfolio research. Associate partner Axis Direct.
Budget Day, the BT way. Catch all the action with our top anchors only on Modinomics, Saturday, 1st February 8 am onwards. Modinomics 2025.
Banking partner PNB, research partner Markets Mojo, stock and portfolio research. Associate partner Axis Direct.
Budget Day, the BT way. Catch all the action with our top anchors only on Modinomics, Saturday, 1st February 8 am onwards. Modinomics 2025.
Banking partner PNB, research partner Markets Mojo, stock and portfolio research. Associate partner Axis Direct.
Budget Day, the BT way. Catch all the action with our top anchors only on Modinomics, Saturday, 1st February 8 am onwards. Modinomics 2025.
Banking partner PNB, research partner Markets Mojo, stock and portfolio research. Associate partner Axis Direct.
Budget Day, the BT way. Catch all the action with our top anchors only on Modinomics, Saturday, 1st February 8 am onwards. Modinomics 2025.
Banking partner PNB, research partner Markets Mojo, stock and portfolio research. Associate partner Axis Direct.
Budget Day, the BT way. Catch all the action with our top anchors only on Modinomics, Saturday, 1st February 8 am onwards. Modinomics 2025.
Banking partner PNB, research partner Markets Mojo, stock and portfolio research. Associate partner Axis Direct.
Budget Day, the BT way. Catch all the action with our top anchors only on Modinomics, Saturday, 1st February 8 am onwards. Modinomics 2025.
Banking partner PNB, research partner.
Hello and welcome to Business Today. Good morning. This is Union Budget Day 2025, the 1st of February. Nirmala Sitharaman's 8th outing, wearing Padma Shri Dulari Devi's Madhubani sari and very clearly carrying the hopes of 1.4 billion people in that budget Bahi Khata. On the show now with us, Madan Sabnavis, Chief Economist at the Bank of Baroda. We also have TP Oswal, CA and international tax expert, and Subhash Garg, former finance secretary with us. Good morning to all of you. Let me go to you, Mr. Garg, first. If you were writing the budget today, what would your prescription be for an economy which is seeing lower growth, some amount of persistent inflation, and the fact that the consuming middle class seems to need a new deal?
Question. The setting for today's budget is somewhat somber. As you have also noted, the tax growth has been sort of not that great. The economic growth, nominal especially, is also somewhat down, less than 10%, much less than the assumed one. The government also is determined to come back to the fiscal deficit of 4.5%. So taking all these things, there is a resource constraint on the government. So you have to then take that into account while you draft your expenditure proposals. To my mind, the government has been very focused on increasing the capital expenditure, though this year the capex has been somewhat lower than what was planned. It might not exceed 10 trillion rupees or so. So I would suggest that I would have probably proposed that if you increase the capex further, improve the quality of the capex, because some of the capex which is going in, railways, BSNLs of the world, etc., is not very productive capex. So make the capex productive. That's one. Second, I think there is massive sort of resentment in the middle class, especially those who pay income taxes. That's not a very large number, by the way. Effectively, only about 3 crore people pay income taxes. Rest of the 7 crore get different kind of exemptions because of the 89C rebate and all. But the structure of income tax has been a very dated, problematic structure. Two pain points especially. Number one pain point, that the minimum threshold for the old scheme, which is where most of the taxpayers are, at 2.5 lakh rupees is a very low. It has remained unchanged for many years. Raise it to 5 lakhs.
Right.
There is absolutely no reason for not doing. And second thing, I think I would suggest that this 10 lakh slab which kicks in only at the income of 20 or 10 lakh rupees is also very low. Raise it to 25 and then they adjust. I think these would be the two top priorities. I think there would be something on the
Right. Let me go across to Madan Sabnavis before I go to the tax expert on the panel. Madan, let's try and decode this for our viewers from a different point of view, and you are an economist. Roughly 60% of all our GDP comes from spending by people. 30% is can be accounted for the fixed asset formation that happens, and the government of India's spending is 10%. So that accounts for the broad bulk. If 60% of GDP comes from personal spending, and we know what is happening to the overall growth trend over the past 3 years and projections for the future as well, do you think the budget's lever should be more directed towards this rather than continuously talking about capital expenditure, which is fine, infrastructure creation, which is fine, but also has its limitations given the structure of our economy? Madan Sabnavis.
Consumption and investment, it is interesting because whenever we are talking of anything to do with consumption, we are dealing with something which has to be done with taxes. When we are talking of investment, we are talking of something which has to be done with expenditure. Now, we should remember that the income tax has been one special case for the government where you're sure that you're going to collect your income irrespective of what happens. Okay, it's like GST will say that your economy grows, your GST grows. Economy doesn't grow, your GST will not grow. Whereas all of us are income taxpayers, we pay our income tax regularly, whether or not our company or our firm is doing well or not. So that's an assured kind of an income which the government is getting. So any kind of a concession which the government is going to give them, we should remember, would mean that their revenue is going to fall. So when I'm talking of boosting consumption by say 60,000 crores or 1 lakh crores by giving income tax concessions, it also means that their revenue is going to get affected. When we're talking of investment, I think it's the other way around. We look at what is the overall size of the budget, which will again be fixed based on what you think the fiscal deficit ratio should be. Let's assume that from 48 lakh crores, the size of the budget goes to 53 lakh crores. There is a certain amount which you will have to adjust for inflation for your regular items like your subsidies, pensions, salaries, so on and so forth. And then we have something to play around with, which goes into capital expenditure. So I think the two issues of them are very much necessary. It becomes easier to focus on the expenditure part because there is more discretionary power out there. Whereas any kind of a concession which is given on income tax, which will be affecting potentially our consumption, is something which we'll have to do carefully because it could affect the overall flow of income, which in turn could be affecting your fiscal deficit. So I'm not too gung-ho about large-scale concessions being given on income tax. There would definitely be a certain amount given, but we should remember that suppose I were the finance minister, can I actually let go 1 lakh, 2 lakh crores to make sure that that income tax people benefit and I can use that resources? It would be a bit difficult given the overall situation that we're not talking of GDP growth crossing 10.5% this year. It's not that we're growing at 13, 14% where I could actually think of these kind of large adjustments. So it's going to be more or less moderate adjustments in the income tax structure this time.
Moderate adjustments in income tax. That's a good point to take to Mr. Oswal. Mr. Oswal, given the nature of government spending, interest burden, and all the needs, including 4 lakh crore plus of welfare spending, what is the scope for some sort of tweaking or overhaul of our direct taxes?
You see, the experience has proved right, saying that reduction in the rate of tax increases the collection of tax. But if you reduce the basic exemption limit and increase it substantially, that will reduce your number of taxpayers. So you should not. Ours is an economy where 70% of the people don't pay tax. Only we have 9 crore taxpayers who are filing the return. Out of 9 crore, 6 crores are filing below taxable limit. So zero tax. Only 3 crores are paying some tax. But out of that 3 crore, only 1 lakh people pay 99% of the tax of the country. And if that be the case, if you want to give some incentive or benefit, what the other speaker has spoken is increase the consumption. And if you want to increase the consumption, Income Tax Act is not the basis because, those people are not paying taxes. Only 3 crore people are paying taxes. And for them, reduction or increase in the tax doesn't affect at all. What is required to be done is the GST. And if GST is so significant, 18% with surcharge, cess, it goes to 28% on most of the consumers' item, cars, fridge, television, your washing machine, all these things, I think it needs rethinking on the subject. And today, because the government is giving freebies, every state has started giving freebies, laborers are not available. And therefore, it is necessary for us to do your work yourself. And if you want to do your work yourself, you need all these gadgets. And
Right.
if you need these gadgets, you are paying taxes 28%. Nobody can buy it.
Right. Subhash Garg, basis what Mr. Oswal is also saying, I want to ask you a question about the overall policy preferences we have seen in the last couple of decades with regard to our taxation architecture. In school, all of us read that indirect taxes are regressive, direct taxes are progressive because they are linked to income. Given the fact that there are large constituencies, political constituencies, which you cannot touch, which you cannot tax in India, is India now faced with a structural problem in its taxes that the only option of increasing the tax revenue base on a collective basis for the entire union, states and center together, is the regressive route of indirect taxes, and that also has a negative impact on consumption and GDP.
See, the indirect taxes are there. It's not that the indirect taxes are not there. They form about 48% of the central government's total tax collection. Its direct taxes are progressive, which is sensible, that whoever has very large incomes should pay higher taxes. It's related to the level of income, which is what it should be. Those who have low incomes shouldn't pay tax, and in fact they should get some subsidy support for keeping their consumption. So I think logic of direct taxes being progressive. We don't have, by the way, a wealth tax in the country, so the rich are not actually getting too much taxed in this country. That's
Are you proposing that we should reimpose a wealth tax?
I have always argued that we should have a wealth tax in the country. Today,
okay, let's take that to the rest of the panel. Good point. Just pause there, sir. Madan, would you support this idea of wealth tax also to address some of the inequity that we have seen in our growth in the recent past? Madan, that question was for you. Do you support the idea of a wealth tax that Mr. Subhash Garg, former finance secretary, is advocating?
No, I don't think it's a fair thing, because when we have a progressive tax structure, we have a progressive income tax structure, and I'm having a progressive tax even in terms of, like, say, let's say when you're talking of wealth, suppose I'm buying, say, a house for, say, 50 crores. I mean, we're paying a stamp duty for it. So I think we should not be taxing the same things again and again. So I'm not too much in favor of a wealth tax, but definitely having a progressive tax structure where my income is being taxed, my purchases are being taxed. So as was mentioned there, the highest GST is paid on goods which are supposed to be used more by the affluent people. I think that's already being done. So doing it multiple times to my mind may not be an equitable thing to do. It's not a fair thing to do, actually.
Mr. Oswal, what is your view? Do you support this idea?
What was the reason why wealth tax was abolished? The collection was lower than the cost of collection, and therefore wealth tax is a bad idea. But particularly in a country like ours, where most agriculturists and most people don't pay taxes at all, only you are burdening the taxpayers further and creating an incentive for them to be not reporting correctly the income. I think we should encourage people, first of all, if you want to really get more taxes, bring the rich farmers and rich agriculturists into the tax net, and not the wealth tax. If all the taxpayers, all the people in the country become taxpayers, then you bring the wealth tax or bring other taxes, is understandable. But we have no desire, we have no political ability, and we have no any other reason for increasing the taxes on the agriculturists. And if that be the case, why talk about the wealth tax? Though this is talked by OECD, IMF, World Bank, but in our country, circumstances and the situation is totally different than those countries which they are talking about, because all those countries do not have agricultural income tax exemption. Okay. We are exception.
Can I explain the logic of what I am saying?
Okay, quickly, Mr. Garg, before I go to other guests, go ahead.
See, the value add, which is the GDP, which everyone pays, is about 4 trillion in this country. The wealth, which is owned by only about 1 to 10% of the people, is 15 trillion. That goes a begging. If you want a progressive taxation system in the country, it's not only the income taxes, it is the wealth, where the largest inequity and largest concentration is. People with billions of dollars of wealth pay no tax on the wealth, right? Except when they make a transfer or so. So there is a very sound logic. The system which was there in the country before 2015 was a very moth-eaten, very badly designed kind of system. That is not what we should. We should get the wealth, which is, as I said, $15 trillion in the country.
Okay.
That should be.
Okay. That's a fair point. Let me go across to Anand Goenka, Senior Vice President of FICCI and Vice Chairman of the RPG Group. Anand, welcome to the show. We are counting down to the Finance Minister's speech. At this stage, if you've been hearing what our experts have been saying, addressing inequity and also tweaking the tax structure, according to you as a producer, how important will be direct tax rationalization today in the budget for lifting the economy, growth, and also getting consumers back out into the markets?
I think it's a very important step to rationalize taxes, simplify it. That has been continuously happening by the government, and that should largely continue over time. I think two things that will really come out is it will help reduce the number of disputes over time. If there are too many layers and too many systems and processes in this, there can be more disputes, so that will come down. And the second is there'll be a release of working capital as well. But more importantly, I'd say putting money in the hands of the consumer, putting money in the hands of the middle and lower income by simplification and reduction of taxes will certainly help spur private consumption, private investment, which has not been happening for some time.
Anant, a follow-up. Why is it, according to you, that people in government do say on and off the record that private sector investment overall hasn't picked up to the extent that the government policymakers wanted, while after that tax break in 2019 September there was COVID, but COVID is over now. Is this a fair criticism of the private sector?
Your voice is not very clear, but I think your question is around why has private investment not picked up?
Absolutely.
Yeah, I'd say a few things. One is I feel if you look at the buying behaviors of the next generation, they are moving towards services, experiences. And if you look at travel, look at hospitality, there is a big shift. Hotels are fully booked up, flights are booked up. And so there is a clear shift towards the digital economy. And therefore, the product economy is not seeing that much of money going in.
Okay.
Second is, if you look at food inflation, that has been a little bit on the higher side. So at least at the lower income side, we need to work on bringing down food inflation by ensuring better supply side economics, climate resistant crops, better logistics. So that certainly will again release some money in the hands of the lower class, which will help invest in products which can spur private investment.
Okay. Let me go across to Harshvardhan Agarwal, President of FICCI and Vice Chairman and Managing Director of Imami. Harsha, welcome. Let me continue on the conversation that we are having, but I also want to bring in one more point. The economic survey yesterday making this very telling point that while corporate profitability is up, wage growth hasn't kept pace with that. The implicit comment there is that while companies are making more money, they are not paying employees as much, and that in some ways is impacting consumption and growth in India. Do you agree with that point?
I agree with that point, that corporate India is making profit and not paying to the salary, enough salary to the employees. See, because this is in a competitive scenario where everybody is looking for the best talent. If one company doesn't pay the right salary to a person, the other competitive company will, certainly take them up. So yes, the study is based on certain parameters. I think we need to look at that on what basis this data is being said. But, wherever, we have done our survey with our members. So what we have understood and what we clearly see that, the salary increase has been there for the employees, and hence I would certainly like to disagree to an extent there.
Okay, Harsha, tell me, what do you think is the single most policy measure, most important policy measure that our economy requires that? And after that question, I'll take the same one to Anant as well. But to you, Harsha, first, what is that single most important policy measure that our economy needs?
I think, what we need, are two very important things. One is the capex, which the government has been doing since some time, so to keep continuing that, because that has a big multiplier effect on the economy. And apart from that, how do we boost the consumption? Again, because that will have an effect on many other things, right from helping in bringing in increasing the private investment also, because that gives more confidence to the corporates if the consumption is robust, that yes, I can go ahead and invest more in my expansion or set up new industries. So these are the two, most important thing, where we would like to see something from the government.
Anand, that very same question to you.
I agree with Harsh's points, but to add one more point, I would say it is ease of doing business. The government has been on the journey, but we need to be globally competitive to export. Export is going to be our salvation in the long term. We have to grow export as a percentage of GDP or manufacturing, and if and to do that, we have to have logistics cost continuously coming down with further investment in infrastructure. We have to make sure we make the next generation reforms in labor, in productivity, and in energy prices as well. So I think if we cover ease of doing business, we'll be in a much better place over time.
Visuals on air that are playing out is the finance minister leaving after the formal approval that was provided at the cabinet meeting to the budget. We have seen her out and about since the morning. In fact, for viewers, those who may not know, Padma Shri Dulari Devi's sari, a Madhubani sari that's been worn and clearly sending a signal for local craftsmanship in India once again. But there's another point that the economic survey made, and I tag some news that we have picked up before the budget, which is that the government is also likely to indicate a new reform roadmap in the budget. It may not have all the details, but it will be a continuous rolling process. At least that's the hope. Harsha, what kind of reforms does our economy, do our producers need at this stage for that 8% growth target that the economic survey spoke about to be achieved?
I think what one very important thing we would like to see is, how does the center and the state work together? Like we have this GST council. Can we have the center and a state similar kind of a council in some of the other areas where it's a state subject, like land, like labor, etc. Because that will help in ease of doing business, and certainly, it will take the overall Make in India policy also much forward.
Okay, Anand, on the impact of AI, and this was again an economic survey concern that came up, and I'm linking it to that the political dynamics around employment, job creation, wage growth. The economic survey seems to be putting out this warning, and obviously both the center and states need to be cognizant of this. In your own view, is this a very significant issue as far as future employment generation is concerned? Will AI actually cause further problems for the youth in India?
I don't believe that AI will cause a problem. I feel that if you look, there has been technological change happening over decades and centuries, and every new major technological breakthrough that happens, there is a fear that jobs will get lost. But in fact, as you build skills towards newer and newer technologies, it only adds to potential jobs. It's only the reskilling that becomes very important, which we have to be right on top of. So in my view, AI is not a threat. I mean, a lot of concern about coders, for example, getting threatened with AI, but I think it'll make their lives more efficient. And you can't you still need the coding skill, for example, if you, even though you may use AI.
Absolutely. To extract the best out of an AI engine, you also need great prompt engineering skills. So skills change and you have to continuously adapt yourself. Time for just a couple of quick interventions before I thank you and get other guests on the show. Harsha, I come to you on the point of deregulation. If deregulation is part of the reform package statement that is likely, which parts of the economy and our companies will, according to you, benefit the most? Will it be the small and medium scale enterprises that can therefore benefit if deregulation begins in some form or the other?
I think overall it will have an impact on everyone. Yes, certainly it will have a major impact on the SMEs, no doubt about that. But even it will have a larger impact on the corporate India, because what we need is the governance, because there is so much of regulation. So how do we improve on that? How do we make the ease of doing business for the corporates? So from that perspective, it will help, I think, across, to the SMEs, large corporates, everyone.
Okay. Anant, one of the points that industry has consistently been talking about is taking a look at the manner in which certain sectors of the economy face constraints. I'll just give you an example to take this point forward. There are multiple regulations when it comes to municipal laws. There are other regulations on town and country planning. For labor, union codes, factories, contract labor laws, and then many others. Is this where the maximum effort should go in, and will that really help unleash the entrepreneurial spirit of Indians through all the companies that seek to make a difference?
No, I'm in absolute agreement. I think there is a lot of good work that has happened at a central level to make life easier. But we do see on the ground, when it really comes to setting up a factory, when it comes to purchasing land, there are still a lot of issues. So Harsh gave the suggestion about center state getting together to make life easier for businesses. And I think that's going to be, or can be, a game changer to make life easy. Exactly what you said. On the ground, a lot of challenges, but good intentions and effort in the center.
Absolutely. Viewers, we've had the FICCI president and the FICCI vice president here, both representing very significant sectors of the economy that they operate in, and their understanding of the ground level sentiment in the economy. Thank you very much for your time with us today. At this stage, let me welcome in Sunil Singhania, the founder of Abacus Asset Manager, one of the best known market voices. Sunil, morning to you, welcome. Let's take a look at the markets as we begin this conversation, and before we deep dive into the budget, just your sense of how the markets are reading today's event. This 1 week we saw a break from the previous 3 weeks, at least some amount of green coming back in significant manner. What's your sense, Sunil?
Good morning, Siddharth, and thanks for having me. Good morning to everyone. So obviously, as you rightly said, I think January has been a period of challenges and a period full of news flow. So we have had multiple news flow coming in from particularly the US, just pre and post Trump being sworn in terms of, safeguard duties and so on and so forth. And as a result of which we have seen wide swings in currencies, to some extent in metals, risk on, risk off. In between, we had this Chinese AI company causing disruptions in particularly the technology space. And in India, I think what we have seen is, a little bit of apprehensions, particularly related to the valuations. The earnings season did not start as well, though luckily last few days have been pretty decent. And I think there was generally a little bit of, nervousness, and that's what got reflected in the market, particularly the broader markets. As you rightly said, the last 1 week has been a little bit more reassuring. In fact, for the month of January, Nifty is hardly down 1-2%. Broader markets obviously are down a little bit more, the extent of 8-10%, but they went up also well. And then now we have the big event which is slated today. The good thing is that in the run-up to the event, there was already so much nervousness that normally the expectation built up and the positioning built up on the positive side, which we see in the run-up to the budget, is completely missing this time. And I think that makes us a little bit more optimistic, even for the near term, that if nothing negative happens, and in fact, if there is something positive which might come out of the announcements, then the market positioning is so light that you might have a near-term bump up. Having said that, I think this is a year which is going to be a year of consolidation. That is what our view is. And returns, we are always optimistic, but returns will be much more moderate than they used to be in the last 3-4 years. And I think that is the narrative which we've been giving for the last 6-9 months.
The global picture, Sunil, continues to send signals of volatility. Just hours before our budget, President Trump has initiated the tariff cycle that he has been threatening and talking about for many, many months now. That first round happening. There is also a threat for imposing tariffs on pharma that may pan out very, very soon. Taking that as the point, what would you say is important for the markets? This kind of a global cue or domestic cues that will emerge, including from the budget and hopefully with monetary policy action in the near future?
So, we are a very interesting economy. We have a lot of sectors and companies which are, domestic focused or domestic facing. But we also have a reasonable number of sectors and companies which are dependent on exports. And particularly the sector you mentioned, pharma, I think is predominantly dependent on US for our exports.
Yes.
Again, I think Trump has been making a lot of statements and he's been a very aggressive leader even in the earlier term. And last 4 years when he was not in power, obviously he had a little bit of angst. And once he has come back in power, I think the announcements are going to be multiple. Now, announcements are easy to make, but not all announcements can actually translate into to execution. The US will also be cognizant of the fact that putting up safeguard duties is fine. You don't create overnight manufacturing capacities, and particularly in sectors like pharma, it's very, very tough. The other thing is the reason why these sectors went overseas was that the cost of production overseas is a decimal, particularly in pharma, compared to what you do in US. So, it's easy to say that we'll put tariffs on pharma imports, but then, who's going to suffer? It's the customers, the consumers of the US and the insurance companies are going to suffer. So I think all announcements will not fructify into execution. Our advice has been that let 10, 15 days pass by. I think it's a honeymoon period for Mr. Trump. He's been making a lot of announcements. A lot of announcements may be logical from a country perspective, but as I said, all would not be translated into execution. So, our call has been that don't react on announcements, at least for another 10, 15 days, and then take a very, I would say, patient call.
That's a very important point that you make, Sunil, and I would say, itna dar kyun hai bhai? Because 40 years of outsourcing cannot be reversed in 4 years of President Trump, and he will not get another term, at least as per current US constitutional law and practices. I want to ask you one more point, and then my colleague Shailender Bhatnagar, who is also coming back into the show, also has a question for you. One of the observations about the slowdown and explanations really, because government spending, election impact is spoken about, that because of lack of decision making during elections, growth went down. I postulate that one of the reasons for the dip in growth is also on account of the RBI clampdown on fintechs, NBFC and the lending that was happening. Do you agree with that postulation, and therefore should equal attention to also be paid to the RBI to now step back from some of the harder positions that it has taken on fintech regulation or its concerns around a likely bubble being created?
No, it's logical, but it was necessary also. I think as a regulator, the central bank, the RBI, has a dual responsibility. Obviously, they would like the economy to grow and maintain decent liquidity conditions. And on the other hand, they would also like to ensure that lenders don't go overboard. And then there is a systemic issue in terms of bad assets or NPAs. And I think to that extent, last 1 year, the central bank, the RBI, has been a little bit more strict. And we have seen a few companies also being sort of told to slow down. I think now we have reached a stage where we can't afford, very, very tight liquidity because it's already showing in the consumption pattern. The September GDP numbers fell to less than 6%. And I think for India to become a developed nation or a Viksit nation, we have to grow 6.5%, 7% real and 10% nominal at least for the next 5-7 years.
Okay.
And that I think I would say that the central bank is already acknowledging that. We had just a few days back almost 1,50,000 crores liquidity infusion, and I think that also has helped the equity markets this week. And the economic survey also points to the fact that India has to grow at 6.3, 6.4% real, and with a 3.5% deflator, 10% nominal in the next 5-7 years. So we do expect that a balanced approach to ensuring that asset quality is not compromised, but liquidity is also maintained would be the way forward.
Namaste Sunil ji, a very warm welcome, and hello Siddharth. Thank you for having me over. Sunil ji, your view on the rate cuts which might possibly start in the middle of this week via the RBI, and your view on the rupee for this year. There is a lot of body of evidence which suggests that the rupee is still overvalued, and given that background, one really doesn't see foreign institutional investors bringing in fresh money.
I'm not an expert on both the subjects you touched upon, but I'll just give you my view as a financial sort of overseer. I would say on the interest rate front, this infusion of 1.5 lakh crores of liquidity by the RBI has already resulted in 10-year G-Sec yields fall to around 6.65%.
Correct.
I would say that the markets would be waiting for the today's budget announcements before taking a call there, because if everyone wants the government to focus on growth and capital expenditure. But at the same time, we also have to be cognizant of the fact of maintaining our fiscal prudence, which is a direction which the government and the RBI has given from time to time, including the finance minister in a last speech. So if we are able to maintain the fiscal deficit number, and if the borrowing plan is not significantly different from what the people are expecting, then the 10-year G-Sec yields might stabilize at these levels. And then there is a possibility that the central bank, maybe in February or the announcement after that, might look at rate cut. The only joker in the pack is obviously in the US. After the initial rate cuts, things were expected to be again moving towards rate cuts, but now the narrative is completely changed. And though we are not one-on-one linked, I think every country looks upon the leader, which is the US, to give some direction. So I would say I don't know whether it will be in February or not, but given what is happening, I think rate cuts in the current calendar year look very, very imminent. On the currency, I think rupee has been relatively stable compared to the other currencies. So in fact, if you see the last 3-4 months, rupee has appreciated against the pound, the euro, all other major currencies. Yes, we depreciated 1% in January, but now with Trump also talking about producing more oil prices from $80 have reacted to $75. And if there is a little bit more correction there, and hopefully the foreign outflows get converted into inflows, then the rupee should stabilize. So our view is a little bit more constructive on the rupee. Even if it doesn't appreciate, we don't see too much room for it to depreciate further.
Right, Sunil, thanks very much for your time with us today. Our viewers will continue our coverage. Just to recap some of the key headlines that we have in terms of what's likely and what's not from the budget. Around 10 odd minutes left, in fact 13 by one watch for the parliament session to begin. But Shail, before we go into some of the key market indices as well, on the issue of capital gains tax rejig, it seems by various reports that no change is on the cards in this budget. The second point, Shail, why don't you take that point? If there's no capital gains tax rejig, what is the sentiment play out going to be?
Siddharth, I don't think so that the market will be looking for a flip-flop. You increase it 1 year and then you pull it back the next year only to put it back a year later. I think the key that the market is looking forward to is changes in tax rates on the personal income tax front, and therefore you see this rally which is happening in broadly, but specifically in some parts of the market which are clued into this space. Look at how the FMCG index is performing since yesterday, when the Prime Minister said that I am praying to Goddess Lakshmi to bestow her blessings on the poor and the middle class. The FMCG index for the moment is flat, but yesterday it jumped fairly wildly. Ditto for the auto space. This is where disposable income typically goes in. 0.5% higher today, almost 23,000 on the Nifty Auto Index. My view is that you will see some extra money coming in the hands of customers, potential customers. And another thing that I am observing is that SIPs may slow down. So the 40,000 crores that you are seeing coming in the market because of the trimming that we've seen from the top, you just might see the inflows tapering off, and that money being used either to buy new stuff or maybe a different form of savings.
Okay, some more bits really that are being picked up, viewers, and before we get into domestic cues, I also want to take something that's been panning out as far as the international situation is concerned. Mr. Trump, President Trump has now indicated fresh tariff impositions, and remember, this had been said by the President and that action was taken. He is now threatened tariffs against the European Union once again, says the US has been treated very, very horribly. And remember, the first of that action panned out, that impacted US markets. This was the imposition of tariffs on two countries as well as the pharma sector. Shall, let's try and bring up the pharma stocks for a moment, and I want to ask you, if there would be tariffs on pharma, what kind of impact will it have on Indian companies? Because we have significant exposure to the US market, that remains the world's largest healthcare market, and our companies are also pretty decently exposed there.
Absolutely, anywhere between 50 to 60% of the turnover of top 5 pharma companies comes from the US geography, and Siddharth, they'll be very badly hit. The market has already taken cognizance of this particular potential disruptor. If you look at the pharma index over the last 10 trading sessions, you will see a fairly decent correction, and if you look at it from the point of view of the last 4 or 5 months, you will see that the pharma index was the top performer. It was providing support to the market when the broader market was falling. So pharma and IT were one of the biggest beneficiaries of the uptick that we saw over the last 6 odd months or so. Now, with that background in mind, I would imagine that there would be very strong negotiations by the government on behalf of pharma companies. If you remember, Siddharth, these 20,000 illegal Indians which the US is trying to send back to India, India has accepted them without a murmur, unlike Colombia. So the government of the day is cognizant of the fact that a lot of business risks are at play, and they must do all that they can to keep Mr. Trump happy.
That's very important, and I am reading at this stage and step in on that as well. Shankar Sharma, this is a story on businesstoday.in. Viewers, do log in immediately. Ace investor Shankar Sharma has questioned the economy's health after his view on a near empty Friday night in Mumbai. Viewers, log in to businesstoday.in. You have that story there. And he said, last night I went to a very happening nightclub rooftop lounge in Bombay, as he calls it. Friday night should have been packed, was just around 30% full. Monday. Now that's a tweet that he has made, and perhaps in some ways, Shail, bringing up that debate about whether it's a cyclical slowdown, whether it's a structural slowdown, and we have had various views on that matter. But what's your own sense regarding the economy? Capacity utilization not fully there, corporate earnings we have seen the kind that are coming through. What's your own sense, Shail?
Siddharth, I think that he didn't take two of us along, and that's the reason why he didn't get the right crowd. But Shankar will be joining us at 1:15 p.m. today. I'll ask it straight off the lion himself, and then give you the correct response. I think maybe Shankar, in his wisdom, chose a bar
Did
where
he go to the wrong place? Did he go to the wrong place?
Well, you said it, I didn't want to say. And
maybe a far too expensive place, given Shankar's wealth. Very clearly, it seems he might have gone somewhere.
And
else.
all his friends who used to frequent that bar were actually partying in Davos.
Yeah. You know, Arvind Subramaniam, former CA, has also weighed in, and that is also part of the story that I'm referring to you viewers. He said in a recent interaction, whether the economy is slowing down, the answer to this is absolutely yes. And he says that the slowdown is not just a cyclical blip, but a deeper structural issue. Now, if you take a look at the overall numbers, viewers, it's very clear that growth is declining, and if you take a different view of our economy, 60% of our GDP is on account of personal spending. 30% is on account of what we called asset formation. 10% is government spending. For years now, the government has done as much spending as it could have under that title of capital expenditure, but there are limits. The government has to borrow to continue to finance both its revenue expenditure and what we would say in terms of creating assets, the capital expenditure that it is doing, but there are limitations. Therefore, the big thing really in response to this slowdown has to be some sort of incentivization of that 60% of our GDP, because growth will create jobs and countermand the effects of artificial intelligence on jobs. The economic survey has also held that warning out. Shall, at this stage, around 5 minutes left for the Lok Sabha to convene, and we hope the proceedings there can get off very quickly. There is another observation that a colleague has sent on this Shankar Sharma tweet, which is the DLF mall also, according to one colleague who visited it, I don't know how he found time on a Friday night before the budget, but regardless, he also felt that it was far less crowded, nearer to empty than usual. So I don't know whether these anecdotal observations actually qualify for a major impact, but at this stage, take a look at the markets for us, Shail, and take our viewers through what minutes before the budget seems to be happening.
So first, a comment on the bar, Siddharth. One thing is for sure, he should have dialed either you or me, and we should have chaperoned him to the right bar, just as he does when I am in Dubai. So that's one point I'd like to make. And I think there is a case of a wide spectrum relief that people need, and middle classes in particular, who pay the taxes but they don't get the benefits of cheaper food and other goodies that are handed out by the political parties to win elections. So that needs to come, and Siddharth, it's amply evident by the market.
Well, there is some source-based news at this stage which can provide us some hints. India Today Network has learnt from sources that Prime Minister Modi told his cabinet colleagues that this budget is for the common man, that this is a budget of the aspirations of poor farmers, women and youth, that this is a budget of knowledge, again targeted towards these segments of the society. There are other inputs really, but Shail, the Prime Minister triggered significant amount of hope by his comment yesterday at the beginning of the session about the middle class as well as the poor. The middle class in focus, but a lot of experts seems to be suggesting that the government really doesn't have that much scope to do much. You buy into that view?
No, Siddharth. I think tax revenues have been buoyant, and more than their fair share have been coming in from the middle class. It's time that some relief is advocated. See, there are two report cards that the BJP is observing. One is the political report card, in which they are winning left, right and centre, and that perhaps gives them hope that their aggressive tax collection regime is not making that much of a dent into middle class incomes. But you know it, I know it. If upper middle class homes such as yours and ours are impacted, look at our kitchen bills. They've soared by about 2x over the last 3.5 years. Forget about lower income levels. They are very, very badly hurt. But the fact is that they are benefited by all the political freebies that are handed out.
Okay, more inputs from sources, and mind you viewers, this is just source based. We're just trying to give you a sense of what we are gathering. You will have to actually tune into the specifics of the speech. In terms of the fiscal deficit trajectory, the fact that the 4.5% number outlined for FY26, that is likely to be reiterated. There is, according to sources, the possibility of measures to increase consumption and announcements that, as sources say, to provide more money in the hands of people. Now we can debate what that will be. There is a clear hint that the new tax regime, which is the near zero exemption scheme, may get further incentivized. The likelihood of the old tax regime being tweaked in favor of salaried taxpayers, for example, or other income taxpayers is unlikely. There's also some sense that there might be a broad statement on GST, because remember, the GST is a federal council, center and states together take decisions and also don't take decisions, for example, on the proposals and recommendations to lower the impact, for example, on health insurance premium GST. So the fiscal deficit trajectory being reiterated, and also talking about the major challenges, including lower growth, the challenge from overseas, including the United States, as well as what external factors can buffet the Indian economy. But the big picture, as we count down minutes to the budget, and there you have live visuals. Let's go full screen. That's the Lok Sabha speaker coming in, and we are now likely to see the finance minister start with her 8th budget speech.
Nirmala Sitharaman, Vitt Mantri. सदस्यगण, बजट के बाद राज्यपाल अभिभाषण में आपको पर्याप्त अवसर दूंगा। मेरा आपसे निवेदन है, नहीं माननीय अखिलेश जी, आपने संसद की मर्यादा को आप बना के रखें। कभी बजट भाषण के अंदर इस तरीके का नहीं हुआ, ये उचित नहीं है, ये उचित नहीं है। अखिलेश जी प्लीज, मैं आपको मौका दूंगा राज्यपाल अभिभाषण पे, प्लीज। नो, ये तरीका ठीक नहीं है। नो, राज्यपाल अभिभाषण पे चर्चा होगी। नो तरीका।
Honorable Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, Deshamante matti kadoy, Deshamante manushuloy, meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health care, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas, focusing on Garib, Youth, Annadata, and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy, and innovation, securing energy supplies, promoting exports, and nurturing innovation. For this journey of development, our 4 powerful engines are agriculture, MSME, investments, and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms. Agriculture as the first engine. Now I move to specific proposals, beginning with agriculture as the first engine. Prime Minister Dhan Dhanya Krishi Yojana, developing agri-districts program. Motivated by the success of the aspirational district program, our government will undertake a Prime Minister Dhan Dhanya Krishi Yojana in partnership with states. Through the convergence of existing schemes and specialized measures, the program will cover 100 districts with low productivity, moderate crop intensity, and below average credit parameters. It aims to 1. Enhance agricultural productivity, 2. Adopt crop diversification and sustainable agricultural practices, 3. Augment post-harvest storage at the panchayat and block level, 4. Improve irrigation facilities, and 5. Facilitate availability of long-term and short-term credit. This program is likely to help 1.7 crore farmers. Building rural prosperity and resilience. A comprehensive multi-sectoral rural prosperity and resilience program will be launched in partnership with the states. This will address underemployment in agriculture through skilling, investment, technology, and invigorating the rural economy. The goal is to generate ample opportunities in rural areas so that migration is an option but not a necessity. The program will focus on rural women, young farmers, rural youth, marginal and small farmers, and landless families. The details are in Annexure A. Domestic best practices will be incorporated, and appropriate technical and financial assistance will be sought from multilateral development banks. In phase 1, 100 developing agri-districts will be covered. Atmanirbharta in pulses. Our government is implementing the National Mission for Edible Oilseed for achieving Atmanirbharta in edible oils. Our farmers have the capability to grow enough for our needs and more. 10 years ago, we made concerted efforts and succeeded in achieving near self-sufficiency in pulses. Farmers responded to the need by increasing the cultivated area by 50%, and government arranged for procurement and remunerative prices. Since then, with rising incomes and better affordability, our consumption of pulses has increased significantly. Our government will now launch a 6-year mission for Atmanirbharta in pulses with a special focus on Tuar, Urad and Masoor. Details are in Annexure B. Central agencies such as NAFED and NCCF will be ready to procure these 3 pulses as much as offered during the next 4 years from farmers who register with these agencies and enter into agreements. Comprehensive program for vegetables and fruits. It is encouraging that our people are increasingly becoming aware of their nutritional needs. It is a sign of a society becoming healthier. With rising income levels, the consumption of vegetables, fruits, and Sri Anna is increasing significantly. A comprehensive program to promote production, efficient supplies, processing, and remunerative prices for farmers will be launched in partnership with the states. Appropriate institutional mechanisms for implementation and participation of farmer producer organizations and cooperatives will be set up. Makhana board in Bihar. For this, there is a special opportunity for the people of Bihar. A Makhana board will be established in the state to improve production, processing, value addition, and marketing of makhana. The people engaged in these activities will be organized into FPOs. The board will provide hand-holding and training support to makhana farmers and will also work to ensure they receive the benefits of all relevant government schemes. A national mission on high-yielding seeds will be launched, aimed at 1. Strengthening research ecosystem, 2. Targeted development and propagation of seeds with high yield, pest resistance, and climate resilience, and 3. Commercial availability of more than 100 seed varieties released since July 2024. India ranks second largest globally in fish production and aquaculture. Seafood exports are valued at 60,000 crore rupees. To unlock the untapped potential of the marine sector, our government will bring in an enabling framework for sustainable harnessing of fisheries from Indian exclusive economic zone and high seas, with a special focus on the Andaman and Nicobar and Lakshadweep Islands. For the benefit of lakhs of cotton growing farmers, I am pleased to announce a mission for cotton productivity. This 5-year mission will facilitate significant improvements in productivity and sustainability of cotton farming and promote extra long staple cotton varieties. The best of science and technology support will be provided to farmers. Aligned with our integrated 5F vision for the textile sector, this will help in increasing incomes of the farmers and ensure a steady supply of quality cotton for rejuvenating India's traditional textile sector. Kisan credit cards facilitate short-term loans for 7.7 crore farmers, fishermen, and dairy farmers. The loan limit under modified interest subvention scheme will be enhanced from 3 lakh rupees to 5 lakh rupees for loans taken through the KCC. For Atmanirbharta in urea production, our government had reopened 3 dormant urea plants in the eastern region. To further augment urea supply, a plant with annual capacity of 12.7 lakh metric tons will be set up at Namrup in Assam. India Post, with 1.5 lakh rural post offices, complemented by the India Post Payment Bank and a vast network of 2.4 lakh Dak Sevaks, will be repositioned to act as a catalyst for the rural economy. Details are at Annexure C. India Post will also be transformed as a large public logistics organization. This will meet the rising needs of Vishwakarmas, new entrepreneurs, women, self-help groups, MSMEs, and the large business organizations. Our government will provide support to NCDC for its lending operations for the cooperative sector. MSMEs as the second engine. Now I move to MSMEs as the second engine, which encompasses manufacturing and services with a focus on MSMEs numbering 5.7 crores. Currently, over 1 crore registered MSMEs, employing 7.5 crore people and generating 36% of our manufacturing, have come together to position India as a global manufacturing hub. With their quality products, these MSMEs are responsible for 45% of our exports. To help them achieve higher efficiencies of scale, technological upgradation, and better access to capital, the investment and turnover limits for classification of all MSMEs will be enhanced to 2.5 and 2 times respectively. This will give them the confidence to grow and generate employment for our youth. The details are given in Annexure D. To improve access to credit, the credit guarantee cover will be enhanced. First, for micro and small enterprises from 5 crore to 10 crore rupees, leading to additional credit of 1.5 lakh crores in the next 5 years. Second, for startups from 10 crore rupees to 20 crore rupees, with the guarantee fee being moderated to 1% for loans in 27 focus sectors which are important for Atmanirbhar Bharat. And for well-run exporter MSMEs, for term loans up to 20 crore rupees. Also for the micro enterprises, we will introduce customized credit cards with a 5 lakh rupee limit for micro enterprises registered on Udyam portal. In the first year, 10 lakh such cards will be issued. Fund of funds for startups. The alternate investment fund, AIFs, for startups have received commitments of more than 91,000 crores rupees. These are supported by the fund of funds set up with the Government of India's contribution of 10,000 crore rupees. Now, a new fund of funds with expanded scope and a fresh contribution of another 10,000 crore rupees will be set up. A new scheme will be launched for 5 lakh women, scheduled castes and scheduled tribes, first-time entrepreneurs. This will provide term loans up to 2 crore rupees during the next 5 years. The scheme will incorporate lessons from the successful Stand Up India scheme. Online capacity building for entrepreneurship and managerial skills will also be organized. Measures for labor-intensive sectors. To promote employment and entrepreneurship opportunities in labor-intensive sectors, our government will undertake specific policy and facilitation measures. To enhance the productivity, quality, and competitiveness of India's footwear and leather sector, a focused product scheme will be implemented. The scheme will support design capacity, component manufacturing, and machinery required for production of non-leather quality footwear, besides the support for leather footwear and products. The scheme is expected to facilitate employment for 22 lakh persons, generate over 4 lakh crore rupees, and exports of over 1.1 lakh crore rupees. Measures for the toys sector. Building on the National Action Plan for Toys, we will implement a scheme to make India a global hub for toys. The scheme will focus on development of clusters, skills, and a manufacturing ecosystem that will create high-quality, unique, innovative, and sustainable toys that will represent the Made in India brand. Support for food processing. In line with our commitment towards Purvodaya, we will establish a National Institute of Food Technology, Entrepreneurship, and Management in Bihar. The institute will provide a strong fillip to food processing activities in the entire eastern region. This will result in 1. Enhanced income for the farmers through value addition to their produce, and 2. Skilling entrepreneurship and employment opportunities for the youth. Manufacturing mission, furthering Make in India. Our government will set up a national manufacturing mission covering small, medium, and large industries for furthering Make in India by providing policy support, execution roadmaps, governance, and monitoring framework for central ministries and states. Details are in Annexure E. Given our commitment to climate-friendly development, the mission will also support clean tech manufacturing. This will aim to improve domestic value addition and build our ecosystem for solar PV cells, EV batteries, motors and controllers, electrolyzers, wind turbines, very high voltage transmission equipment, and grid-scale batteries. Investment as the third engine. Now I move to investment as the third engine, which encompasses investing in people, investing in the economy, and investing in innovation. Investing in people. Saksham Anganwadi and Poshan 2.0. Saksham Anganwadi and Poshan 2.0 program provides nutritional support to more than 8 crore children, 1 crore pregnant women and lactating mothers all over the country, and about 20 lakh adolescent girls in aspirational districts and the Northeast region. The cost norms for these nutritional support will be enhanced appropriately. Atal Tinkering Labs. 50,000 Atal Tinkering Labs will be set up in government schools in the next 5 years to cultivate the spirit of curiosity and innovation and foster a scientific temper among young minds. Broadband connectivity to government secondary schools and PHCs. Broadband connectivity will be provided to all government secondary schools and primary health centers in rural areas under the BharatNet project. Bharatiya Bhasha Pustak Scheme. We propose to implement a Bharatiya Bhasha Pustak scheme to provide digital form Indian language books for schools and for higher education. This aims to help students understand their subjects better and in their language. National Centers of Excellence for Skilling. Based on the initiative announced in the July 24 budget, 5 national centers of excellence for skilling will be set up with global expertise and partnerships to equip our youth with the skills required for Make for India, Make for the World manufacturing. The partnership will cover curriculum design, training of trainers, and a skills certification framework and periodic reviews. Expansion of capacity in IITs. Total number of students in 23 IITs has increased 100% from 65,000 to 1.35 lakh in the past 10 years. Additional infrastructure will be created in the 5 IITs started after 2014 to facilitate education for 6,500 more students. Hostel and other infrastructure capacity at IIT Patna will also be expanded. Center of Excellence. Center of Excellence in AI for Education. I had announced 3 centers of excellence in artificial intelligence for agriculture, health, and sustainable cities in 2023. Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores. Expansion of medical education. Our government has added almost 1.1 lakh undergraduate and postgraduate medical education seats in 10 years, an increase of 130%. In the next year, 10,000 additional seats will be added in medical colleges and hospitals towards the goal of adding 75,000 seats in the next 5 years. Daycare cancer centers in all district hospitals. Our government will facilitate setting up of daycare cancer centers in all district hospitals in the next 3 years. 200 centers will be established in 25-26 itself. Strengthening urban livelihoods. Our government has been giving priority to assisting urban poor and vulnerable groups. A scheme for socio-economic upliftment of urban workers will be implemented to help them improve their incomes, have sustainable livelihoods, and a better quality of life. PM Swanidhi scheme has benefited more than 68 lakh street vendors, giving them respite from high-interest informal sector loans. Building on this success, the scheme will be revamped with enhanced loans from banks, UPI-linked credit cards with 30,000 rupees limit, and capacity building support. Social Security scheme for welfare of online platform workers. Gig workers of online platforms provide dynamism to the new age services economy. Recognizing their contribution, our government will arrange for their identity cards and registration on the e-Shram portal. They will be provided health care under PM Jan Arogya Yojana. This measure is likely to assist nearly 1 crore gig workers. Investing in the economy. Public-private partnership in infrastructure. Each infrastructure-related ministry will come up with a 3-year pipeline of projects that can be implemented in PPP mode. States will also be encouraged to do so and can seek support from the India Infrastructure Project Development Fund, which is a scheme to prepare PPP proposals. Support to states for infrastructure. An outlay of 1.5 lakh crore is proposed for the 50-year interest-free loans to states for capital expenditure and incentives for reforms. Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects. Regulatory and fiscal measures will be fine-tuned to support the plan. Jal Jeevan Mission. Since 2019, 15 crore households representing 80% of India's rural population have been provided access to portable tap water connections. To achieve 100% coverage, I am pleased to announce the extension of this mission until 2028 with an enhanced total outlay. The mission's focus will be on the quality of infrastructure and O&M of rural piped water supply schemes through Jan Bhagidari. A separate MOU or separate MOUs will be signed with the states and union territories to ensure sustainability and citizen-centric water services delivery. Urban sector reforms. Building on the July budget proposals, urban sector reforms related to governance, municipal services, urban land and planning will be incentivized. Urban Challenge Fund. The government will set up an Urban Challenge Fund of 1 lakh crore rupees to implement the proposals for cities as growth hubs, creative redevelopment of cities, and for water and sanitation purposes announced in the July budget. This fund will finance up to 25% of the cost of bankable projects, with a stipulation that at least 50% of the cost is funded from bonds, bank loans, and PPPs. An allocation of 10,000 crore is proposed in 2025-26. Power sector reforms. We will incentivize electricity distribution reforms and augmentation of intra-state transmission capacity by states. This will improve financial health and capacity of electricity companies. Additional borrowing of 0.5% of GSDP will be allowed to states contingent on these reforms. Nuclear energy mission for Vikasit Bharat. Development of at least 100 gigawatt of nuclear energy by 2047 is essential for our energy transition efforts. For an active partnership with the private sector towards this goal, amendments to the Atomic Energy Act and the Civil Liability for Nuclear Damage Act will be taken up. A nuclear energy mission for research and development of small modular reactors with an outlay of 20,000 crore will be set up. At least 5 indigenously developed small modular reactors will be operationalized by 2033. Shipbuilding. The shipbuilding financial assistance policy will be revamped to address cost disadvantages. This will also include credit notes for shipbreaking in Indian yards to promote the circular economy. Large ships above a specified size will be included in the infrastructure harmonized master list. Shipbuilding clusters will be facilitated to increase the range, categories, and capacity of ships. This will include additional infrastructure, facilities, skilling, and technology to develop the entire ecosystem. Maritime Development Fund For long-term financing for the maritime industry, a maritime development fund with a corpus of 25,000 crore rupees will be set up. This will be for distributed support and promoting competition. This will have up to 49% contribution by the government, and the balance will be mobilized from ports and from private sector. Udan regional connectivity schemes. Udan has enabled 1.5 crore middle-class people to meet their aspirations for speedier travel. The scheme has connected 88 airports, and operationalized 619 routes. Inspired by that success, a modified Udan scheme will be launched to enhance regional connectivity to 120 new destinations and carry 4 crore passengers in the next 10 years. 4 crore additional passengers in the next 10 years. The scheme will also support helipads and smaller airports in hilly, aspirational and northeast regional districts. Greenfield airports will be facilitated in Bihar to meet the future needs of the state. These will be in addition to the expansion of the capacity of Patna Airport and a brownfield airport in Batra. Western Kosi Canal project in Mithilanchal. Financial support will be provided for the Western Kosi Canal ERM project, benefiting a large number of farmers cultivating over 50,000 hectares of land in the Mithilanchal region of Bihar. Mining sector reforms. Mining sector reforms, including those for minor minerals, will be encouraged through sharing of best practices and institutions of a state mining index. A policy for recovery of critical minerals from tailings will be brought out. Under the special window for affordable and mid-income housing, SWAMI, 50,000 dwelling units in stressed housing projects have been completed and keys handed over to home buyers. Another 40,000 units will be completed in 2025, further helping middle-class families who were paying EMIs on loans taken for apartments while also paying rent for their current dwellings. Building on this success, SWAMI Fund 2 will be established as a blended finance facility with contribution from the government, banks and private investors. This fund of 15,000 crore rupees will aim for expeditious completion of another 1 lakh units. PM Gati Shakti data for private sector. For furthering PPPs and assisting the private sector in project planning, access to relevant data and maps from the PM Gati Shakti portal will be provided. Tourism for employment-led growth. Top 50 tourist destination sites in the country will be developed in partnership with states through a challenge mode. Land for building key infrastructure will have to be provided by the states. Hotels in these destinations will be included in the infrastructure harmonized list. The following measures will be taken for facilitating employment-led growth. Organizing intensive skill development programs for our youth, including in institutes of hospitality management. Providing mudra loans for homestays. Improving ease of travel and connectivity to tourist destinations. Providing performance-linked incentives to states for effective destination management including tourist amenities, cleanliness, and marketing efforts, and introducing streamlined e-visa facilities along with visa fee waivers for certain tourist groups. Continuing with the emphasis on places of spiritual and religious significance, in the July budget, there will be a special focus on destinations related to the life and times of Lord Buddha. Medical tourism and heal in India. Medical tourism and heal in India will be promoted in partnership with the private sector along with capacity building and easier visa norms. Investing in innovation. To implement private sector-driven research, development, and innovation initiatives announced in the July budget, I am now allocating 20,000 crore rupees for this purpose. A deep tech fund of funds will also be explored to catalyze the next generation startups as a part of this initiative. In the next 5 years, under the PM Research Fellowship Scheme, we will provide 10,000 fellowships for technological research in IITs and IISc with enhanced financial support. The second gene bank with 10 lakh germ plasm lines will be set up for future food and nutritional security. This will provide conservation support to both public and private sectors for genetic resources. We will start a national geospatial mission to develop foundational geospatial infrastructure and data. Using PM Gati Shakti, this mission will facilitate modernization of land records, urban planning, and design of infrastructure projects. A Gyan Bharatam mission for survey, documentation, and conservation of our manuscript heritage with academic institutions, museums, libraries, and private collectors will be undertaken to cover more than 1 crore manuscripts. We will set up a national digital repository of Indian knowledge systems for knowledge sharing. Now I move to exports as the fourth engine. We will set up an export promotion mission with sectoral and ministerial targets driven jointly by the Ministries of Commerce, MSME, and Finance. It will facilitate easy access to export credit, cross-border factoring support, support to MSMEs to tackle non-tariff measures in overseas markets. A digital public infrastructure, Bharat Trade Net, for international trade will be set up as a unified platform for trade documentation and financing solutions. This will complement the Unified Logistics Interface platform. The BTN will be aligned with international practices. Support will be provided to develop domestic manufacturing capacities for our economy's integration with global supply chains. Sectors will be identified based on objective criteria. Facilitation groups with participation of senior officers and industry representatives will be formed for select products and supply chains. Through this, there are huge opportunities related to Industry 4.0, which needs high skills and talent. Our youth have both. Our government will support the domestic electronic equipment industry to leverage this opportunity for the benefit of our youth. A national framework will be formulated as guidance to states for promoting global capability centers in emerging Tier 2 cities. This will suggest measures for enhancing availability of talent and infrastructure, building bylaw reforms, and mechanisms for collaboration with industry. Our government will facilitate upgradation of infrastructure and warehousing for air cargo, including high-value perishable horticultural produce. Cargo screening and customs protocol will be streamlined and made user-friendly. Reforms as the fuel. Over the past 10 years, our government has implemented several reforms for convenience of taxpayers, such as faceless assessment, 2, taxpayer charter, 3, faster returns, 4, almost 99% returns being on self-assessment, and 5, Vivad Se Vishwas scheme. Continuing these efforts, I reaffirm the commitment of the Tax Department to trust first, scrutinize later. I also propose to introduce the new income tax bill next week. I will detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Requirements and procedures for speedy approval of company mergers will be rationalized. The scope for fast-track mergers will also be widened and the process made simpler. As proposed in the interim budget, we signed bilateral investment treaties with 2 countries in 2024 to encourage sustained foreign investment, and in the spirit of First Develop India, the current model BIT will be revamped and made more investor-friendly. In the last 10 years, in several aspects, including financial and non-financial, our government has demonstrated a steadfast commitment to ease of doing business. We are determined to ensure that our regulations must keep up with technological innovations and global policy developments. A light-touch regulatory framework based on principles and trust will unleash productivity and employment. Through this framework, we will update regulations that were made under old laws. To develop this modern, flexible, people-friendly, and trust-based regulatory framework appropriate for the 21st century, I propose 4 specific measures. A high-level committee for regulatory reforms will be set up for a review of all non-financial sector regulations, certifications, licenses, and permissions. The committee will be expected to make recommendations within a year. The objective is to strengthen trust-based economic governance and take transformational measures to enhance ease of doing business, especially in matters of inspection and compliances. States will be encouraged to join in this endeavor. An investment friendliness index of states will be launched in 2025 to further the spirit of competitive, cooperative federalism. Under the Financial Stability and Development Council, a mechanism will be set up to evaluate impact of the current financial regulations and subsidiary instructions. It will also formulate a framework to enhance their responsiveness and development of the financial sector. In the Jan Vishwas Act 2023, more than 180 legal provisions were decriminalized. Our government will now bring up the Jan Vishwas Bill 2.0 to decriminalize more than 100 provisions in various laws. I now move to fiscal policy. In the July budget, I had committed to staying the course for fiscal consolidation. Our endeavor will be to keep the fiscal deficit each year such that central government debt remains on a declining path as a percentage of the GDP. The roadmap for the next 6 years has been detailed in the FRBM statement. Revised estimates for 2024-25. The revised estimate of the total receipts other than borrowings is 31.47 lakh crore rupees, of which the net tax receipts are 25.57 lakh crore rupees. The revised estimate of the total expenditure is 47.16 lakh crore rupees, of which the capital expenditure is about 10.18 lakh crore rupees. The revised estimate of the fiscal deficit is 4.8% of the GDP. Budget estimates for 25-26. Coming to 25-26, the total receipts other than borrowings and total expenditure are estimated at 34.96 lakh crore rupees and 50.65 lakh crore rupees respectively. The net tax receipts are estimated at 28.37 lakh crore rupees. The fiscal deficit is estimated to be 4.4% of GDP. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.54 lakh crore. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 14.82 lakh crore rupees. I will now move to Part B. Indirect taxes. My proposals relating to customs aim to rationalize tariff structure and address duty inversion. These will also support domestic manufacturing and value addition, promote exports, facilitate trade, and provide relief to common people. Rationalization of customs tariff structure for industrial goods. As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate. 2. Apply appropriate cess to broadly maintain effective duty incidence, except on a few items where such incidence will reduce marginally. 3. Levy not more than 1 cess or surcharge. Therefore, I propose to exempt social welfare surcharge on 82 tariff lines that are subject to a cess. I shall now take up sector-specific proposals. To provide relief to patients, particularly those suffering from cancer, rare diseases, and other severe chronic diseases, I propose to add 36 life-saving drugs and medicines to the list of medicines fully exempted from basic custom duty. I also propose to add 6 life-saving medicines to the list attracting concessional custom duty of 5%. Full exemption and concessional duty will also respectively apply on the bulk drugs for manufacture of the above. Specified drugs and medicines under patient assistance programs run by the pharmaceutical companies are fully exempt from BCD, provided the medicines are supplied free of cost to the patients. I propose to add 37 more medicines along with 13 new patient assistance programs. Support to domestic manufacturing and value addition. Critical minerals. In the July 2024 budget, I had fully exempted BCD on 25 critical minerals that are not domestically available. I had also reduced BCD of 2 other such minerals to provide a major fillip to their processing, especially by MSMEs. Now, I propose to fully exempt cobalt powder and waste, the scrap of lithium-ion battery, lead, zinc, and 12 more critical minerals. This will help secure the availability for manufacturing in India and promote more jobs for our youth. To promote domestic production of technical textile products such as agro-textiles, medical textiles, and geotextiles at competitive prices, I propose to add 2 more types of shuttle-less looms to the list of fully exempted textile machinery. I also propose to revise the BCD rate on knitted fabrics covered by 9 tariff lines from 10 or 20 to 20% or 115 rupees per kg, whichever is higher. Electronic goods. In line with our Make in India policy, and to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20% and reduce the BCD to 5% on open cell and other components. In 23-24 budget, for the manufacture of open cells of LCD, LED TVs, I had reduced the BCD on parts of open cells from 5% to 2.5%. To further boost the manufacture of such open cells, the BCD on these parts will now stand exempted. Lithium-ion battery. To the list of exempted capital goods, I propose to add 35 additional capital goods for EV battery manufacturing and 28 additional capital goods for mobile phone battery manufacturing. This will boost domestic manufacture of lithium-ion batteries, both for mobile phones and for electric vehicles. Shipping sector. Considering that shipbuilding has a long gestation period, I propose to continue the exemption of BCD on raw materials, components, consumables, or parts for the manufacture of ships for another 10 years. I also propose the same dispensation for shipbreaking to make it more competitive. Telecommunication. To prevent classification disputes, I propose to reduce the BCD from 20% to 10% on carrier-grade Ethernet switches to make it at par with non-carrier-grade Ethernet switches. Export promotion. To facilitate exports of handicrafts, I propose to extend the time period for export from 6 months to 1 year, further extendable by another 3 months if required. I also propose to add 9 items to the list of duty-free inputs. Leather sector. I propose to fully exempt BCD on wet blue leather to facilitate imports for domestic value addition and employment. I also propose to exempt crust leather from 20% export duty to facilitate exports by small tanners. Marine products. To enhance India's competitiveness in the global seafood market, I propose to reduce BCD from 30% to 5% on frozen fish paste, surimi, for manufacture and export of its analog products. I also propose to reduce BCD from 15% to 5% on fish hydrolysates for manufacture of fish and shrimp feed. In July 2024 budget, to promote development of domestic MROs for aircraft and ships, I had extended the time limit for export of foreign origin goods that were imported for repairs from 6 months to 1 year and further extendable by 1 year. I now propose to extend the same dispensation for railway goods. Time limit for provisional assessment. Presently, the Customs Act 1962 does not provide any time limit to finalize provisional assessments, leading to uncertainty and cost to trade. As a measure of promoting ease of doing business, I propose to fix a time limit of 2 years, extendable by a year, for finalizing the provisional assessment. I propose to introduce a new provision that will enable importers or exporters, after clearance of goods, to voluntarily declare material facts and pay duty with interest but without penalty. This will incentivize voluntary compliance. However, this will not apply in cases where department has already initiated audit or investigation proceedings. For industry to better plan their imports, I propose to extend the time limit for the end use of imported inputs in the relevant rules from 6 months to 1 year. This will provide operational flexibility in view of cost and uncertainty of supply. Further, such importers will now have to file only quarterly statements instead of a monthly statement. I now come to my direct tax proposals. In Part A, I have briefly underlined taxation reforms as one of key reforms to realize our vision of Vikasit Bharat. In respect of criminal law, our government had earlier ushered in Bharatiya Nyaya Sanhita, replacing Bharatiya Danda Sanhita. I am happy to inform this august House and the country that for new income tax bill will carry forward the same spirit of Nyaya in its drafting as well. The new bill will be clear and direct in text, with close to half of the present law in terms of both chapters and words. It will be simple to understand for taxpayers and tax administrators, leading to tax certainty and reduced litigation. Reforms, however, are not a destination. They are means to achieve good governance for our people and economy. Providing good governance primarily involves being responsive. The Tirukural captures this in verse 542, which reads, "Vaanokki vaazhum ulagallam, mannavan kol nokki vaazhum kudi," meaning, just as the living beings live expecting rains, citizens live expecting good governance. Our government is committed to keeping an ear to the ground and a finger on the pulse and responding while balancing our national building efforts. The following measures will detail just how our government will, under the guidance of PM Modi, has taken steps to understand and address. I repeat that sentence, sir. The following measures will detail just how our government, under the guidance of PM Modi, has taken steps to understand and address the needs voiced by our citizens. My tax proposals are guided by this spirit. The objectives of my proposals are as follows. Personal income tax reforms with special focus on middle class. Rationalization of TDS and TCS for easing difficulties. encouraging voluntary compliance, reducing compliance burden, ease of doing business, employment and investment. I will come to my proposal on personal income tax towards the end. TDS and TCS, rationalization for easing difficulties. I propose to rationalize tax deduction at source, TDS, by reducing the number of rates and thresholds above which TDS is deducted. Further, threshold amounts for tax deduction will be increased for better clarity and uniformity. The limit for tax deduction on interest for senior citizens is being doubled from the present 50,000 rupees to 1 lakh rupees. Similarly, the annual limit of 2.40 lakh rupees for TDS on rent is being increased to 6 lakh rupees. This will reduce the number of transactions liable to TDS, thus benefiting small taxpayers receiving small payments. The threshold to collect tax at source, the TCS, on remittances under RBI's liberalized remittance scheme, the LRS, is proposed to be increased from 7 lakh to 10 lakhs. I also propose to remove TCS on remittances for education purposes, where such remittances is out of a loan taken from a specified financial institution. Both TDS and TCS are being applied on any transaction related to sale of goods. To prevent such compliance difficulties, I propose to omit the TCS. I also propose that the provisions of the higher TDS deduction will now apply only in non-PAN cases. In July 2024, the delay for payment of TDS up to the due date of filing statement was decriminalized. I propose to provide the same relaxation to TCS provisions as well. The government under the leadership of Prime Minister Modi believes in Sabka Saath, Sabka Vikas, Sabka Vishwas and Sabka Prayas. In line with this, we brought in updated return facility in 2022 for voluntary compliance by taxpayers who had omitted to report their correct income. Our trust in taxpayers was proved right. Nearly 90 lakh taxpayers voluntarily updated their incomes by paying additional tax. Taking this trust further, I now propose to extend the time limit to file updated returns for any assessment year from the current limit of 2 years to 4 years. I propose to reduce the compliance burden for small charitable trusts and institutions by increasing their period of registration from 5 years to 10 years. It is also proposed that disproportionate consequences do not arise for minor defaults such as incomplete applications filed by charitable entities. Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. In my speech in July 2024, I had promised that all processes, including giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. So I'm happy to announce that digitalization is being made operational now. In July 2024, we brought in the Vivad Se Vishwas scheme to resolve income tax disputes pending in appeal. The scheme has received a great response, with nearly 33,000 taxpayers having availed of the scheme to settle their disputes. I have a few proposals to promote investment and employment. It is proposed to provide a presumptive taxation regime for non-residents who provide services to a resident company that is establishing or operating an electronics manufacturing facility. I further propose to introduce a safe harbor for tax certainty for non-residents who store components for supply to specified electronics manufacturing units. Presently, the tonnage tax scheme is available only to sea-going ships. The benefits of existing tonnage tax scheme are proposed to be extended to inland vessels registered under the Indian Vessels Act 2021 to promote inland water transport in the country. Extension for incorporation of startups. We continue to support the Indian startup ecosystem. I propose to extend the period of incorporation by 5 years to allow the benefit available to startups which are incorporated before 1/4/2030. In order to attract and promote additional activities in the IFSC, I am inter alia proposing specific benefits to ship leasing units, insurance offices, and treasury centers of global companies which are set up in IFSC. Further, to claim benefits, the cutoff date for commencement in IFSC has also been extended by 5 years to 31/3/2030. Category 1 and Category 2 AIFs are undertaking investments in infrastructure and other such sectors. I propose to provide certainty of taxation to these entities on the gains from securities. To promote funding from sovereign wealth funds and pension funds to the infrastructure sector, I propose to extend the date of making an investment by 5 more years up to 31st March 2030. Personal income tax reforms with special focus on middle class. Democracy, demography, and demand are the key support pillars in our journey towards Vikasit Bharat. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, average income of 1 lakh per month other than the special rate income such as capital gains under the new regime. This limit will be 12.75 lakh for salaried taxpayers due to the standard deduction of 75,000. Slabs and rates are being changed across the board to benefit all taxpayers. The new structure will substantially reduce the taxes of the middle class and leave more money in their hands, boosting household consumption, savings, and investment. In the new tax regime, I propose to revise tax rate structures as follows: 0 to 4 lakh rupees nil, 4.8 lakh rupees to 4 to 8 lakh rupees 5%, 8 to 12 lakh rupees 10%, 12 to 16 lakh rupees 15%, 16 to 20 lakh rupees 20%, 20 to 24 lakh rupees 25%, and above 24 lakh rupees 30%. To taxpayers up to 12 lakh of normal income other than special rate income such as capital gains. I read that again. To taxpayers up to 12 lakh of income other than special rate income such as capital gains, tax rebate is being provided in addition to the benefit due to slab rate reduction in such a manner that there is no tax payable by them. The total tax benefit of slab rate changes and rebate at different income levels can be illustrated with a few examples. A taxpayer in the new regime with an income of 12 lakh rupees will get a benefit of 80,000 rupees in tax, which is 100% of tax payable as per the existing rates. A person having income of 18 lakh rupees will get a benefit of 70,000 rupees in tax, that is 30% of tax payable as per existing rates. A person with an income of 25 lakh gets a benefit of 1,10,000 rupees, that is 25% of his tax payable as per existing rates. Details of my tax proposals are given in the annexure. As a result of these proposals, Honorable Speaker, sir, revenue of about 1 lakh crore in direct taxes and 2,600 crores in indirect taxes will be foregone. Mr. Speaker, sir, with this, I commend the budget to this august House.
Item number 2, Srimati Nirmala Sitharaman.
Sir, with your permission, I rise to lay on the table the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management Act 2003. Medium-term fiscal policy cum fiscal policy strategy statement and macroeconomic framework statement.
Item number 3, Srimati Nirmala Sitharaman.
Sir, with your permission, I rise to move for leave to introduce the Finance Bill 2025.
प्रश्न ये है कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें, मेरे विचार में निर्णय हाँ वालों के पक्ष में हुआ, हाँ वालों के पक्ष में अनुमति प्रदान की जाती है। माननीय मंत्री जी, अब विधेयक को पुनर्स्थापित करें।
Sir, I introduce the bill.
Thank you. सभा की कार्रवाई सोमवार दिनांक 3 फरवरी 2025 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है।
Well, this is the big budget that had been anticipated, and clearly the headlines as we bring up the markets to take a look. There has been a significant rationalization in personal income tax, and in the finance minister's words, the new regime provides some amount of tax giveaways the basic 0% slab is now applicable for all income excluding capital gains up to a limit of 12 lakh. That's the clear big headline. Budget 2025 delivers on expectations of middle class India. Prime Minister Narendra Modi's hint yesterday coming true just 24 hours later. The new slabs very quickly: 0 to 4 lakh nil, 4 to 8 lakh 5%, 8 to 12 lakhs 10%, 12 to 16 15%, 16 to 20 20%, 20 to 24 25%, and about 24 lakhs 30%. So if you see these 7 slabs, the narrowing of bands, the rates moving, and the finance minister making the point that 80,000 benefit at 12 lakh, 70,000 benefit at 18 lakh of taxable income, 1.10 lakh benefit at 25 lakhs. The key point here being that this seems to be for the new regime, because that was the word from the finance minister. But my colleagues Shailender, Bhatnagar, Sakshi, Batra here keeping a very close eye on the markets during the speech. And coming to you, Shail, how are the markets responding to these budget provisions?
Siddharth, you have to look no further than Hindustan Unilever, Britannia, Colgate, Nestle, and the entire FMCG pack. This was the first sector to take a hit. You remember the comments coming in from the CMD of Nestle and the CMD of Hindustan Unilever in the second quarter earnings, when they said that the middle class seems to be disappearing. Look at the rise that you've seen on the index itself, up 2%. So this is one of the most important things that has come up, the blessing that Goddess Lakshmi has bestowed via Finance Minister Nirmala Sitharaman, that household disposable income will rise and staples are the ones that are doing best. Look at how autos have moved up, especially two-wheeler stocks, Hero Motors, entry-level cars via Maruti. These are the sectors that are doing very well, auto and FMCG, Siddharth.
Sakshi, add to that, because I must also point out, I did not hear anything on corporate taxation. The fine bill of the finance bill, the fine print will tell us. But remember that 15% special rate that expired for new investments. I don't know if something's been said or done on that, but there seems to be clearly PIT along with pain points of TCS and TDS being reduced to some extent. Sakshi.
Absolutely. Income tax. That's the biggest headline, like you point.
Yes.
Going to be the most important to watch out for next week. So there is more to it that the markets will look at beyond today as well, as to what really happens on the taxation aspect. Apart from these sectors, 100% FDI and insurance, that was being expected earlier as well, and that is being seen. So you see across the board on the insurance stocks, the reflection will come in. This was being largely expected as well, and this is going to bring in all that money that the insurance sector was waiting for. So that's another one that everybody is looking at. Apart from this, we'll also look at a whole host of these smaller sectors, leather sector, where some of the customs duty has been reduced as well. So you'll see all of those stocks like Relaxo footwear, all of them reacting positively in trade. And apart from this, of course, it's the agri-related stocks. Those are also in focus. Remember, seafood exporters stocks have surged in trade today. Stocks like Avanti Feeds, Apex Frozen Foods, those are the ones that are also buzzing in trade. So these smaller sectors have got those benefits.
Absolutely. And let's go across to our guests who are joining us now. Remember, this has been one of the shortest speeches by the finance minister in recent times. Almost under 75 minutes. Probably 72, 73 minutes, but we are joined by Nishchal Maheshwari, market expert, as well as Ketan Dalal, the managing director of Catalyst Advisors. Ketan, to you, put in perspective what's happened on the taxation front.
Sorry, I didn't get you, Siddharth. What front?
Ketan,
okay, got it. No, so Siddharth, as you mentioned, there is nothing much on the corporate tax front, and I don't think anything was expected. On the personal income tax front, of course, the non-taxability up to 12 lakhs is a pleasant surprise. I think it will definitely boost consumption. I'm sure Nischal will have to say more about it. I think the big elephant in the room, Siddharth, is the fact of the new income tax bill, which is likely to be introduced next week. And that of course will have a very long term effect. I'm not sure when it will come into effect from, but one thing is the simplification, which was the original remit and mandate of the committee which was appointed. But the larger issue is not just simplification of language, but there are substantive things that need to be done. For example, ESOP taxation, outdated clauses regarding mergers and acquisitions and restructuring facilitation, etc. So that really is the big daddy in the room. But on TDS and TCS, more should have been done. But I think whatever has been done is useful. I think we should remember that TDS is a situation of a taxpayer, corporate or otherwise, actually doing the government's job of collection.
Absolutely.
And the kind of compliance and the uncertainty around that is certainly something which is anathema to the ease of doing business. But anyway, whatever has been done is helpful.
Okay, Nishal, your quick thoughts and comments, and before you speak, just one quick data point for everyone to consider. 20 years, income tax exemption limits have moved from 1 lakh rupees to 12 lakh rupees. That's one clear data. 2005, 1 lakh. In 12, it went up to 12. In 2014 to 2.5. In 19 to 5. In 23 to 7. And now at 12 lakh. Nishal, your thoughts?
Afternoon, everybody. I think a very good budget, basically. And one thing is very clear. After maintaining 4.4% as fiscal deficit, the FM has been able to give all these kind of tax benefits to the middle class. So I think I was looking out for two things. One was basically the benefits to the middle class, and second is the what kind of capex budget is going to be allocated, which we have to go through the budget documents to see whether how much growth has been put over the 11 lakh they spent or they put for spending last year. But I think the FM has used this budget because there's the first budget for this third term of Mr. Modi's government. I think they have outlined the policy and they have outlined those 6 sectors basically which they want to work upon in the next 5 years. And I think that is very, very encouraging. Some of the things basically where they have said that they want to do is agriculture, taxation, urban development, power, SME and mining. I think it's a mix of the two basically. So they have reformed the taxation side on the personal side, thereby boosting consumption. And they have reformed on the side of power and mining, which is going to be definitely a big capex pusher in the coming years. So I think a very good budget basically.
Nishal, since you spoke about some of the fiscal related numbers, just to recap for our viewers and then we can go across our panel. The FY26 budget estimate for total revenue is close to 35 lakh crore, 34.96 to be precise. Net tax revenues are estimated at 28.37 lakh crore. The total expenditure is projected to be at 50.65 lakh crore, crossing that 50 lakh crore number for the first time. If you do a comparison over the revised estimate for the current financial year ending March 31st, the revised estimate put out today is 47.17 lakh crore. The capex number RE for the current year is 10.18 lakh crore. We don't have the breakup of what it is projected to be, but if you take a look at net borrowings, the net borrowing by the government, and that's a big determinant for bond rates and the market also in terms of Government of India's borrowing, 11.54 lakh crore. So, Shail, the point that Nishal makes, and perhaps very clearly, I would say, and if we can put that up on the screen, the consumption booster budget, given the overall macro numbers of the government, this is clearly the consumption booster that the markets were looking for. Is that your reading as well, Shail?
Yeah, Siddharth, I think you have 1 lakh crores that is coming in the form of direct benefit from this increase in the tax slab. And 2 lakh, I think the number was something like 5,000 crore rupees from indirect, it's 2,600. And that's clearly evident. Nishalji, namaskar, this question is for you. We've seen FMCG and auto being thrashed black and blue over the last 4 months. Do you think with these initiatives, at least there will be a lot of money in the hands of, the youth, people who earn sub 15 lakhs, sub 18 lakhs, and you see two-wheeler stocks doing well? Maruti has reported record high sales just now. Within the auto space, what would you bet on against the backdrop of this budget?
So, Shail, yes and no. I think as far as FMCG is concerned, the more concern about FMCG is the inflation. It is the inflation basically because that's a very low ticket item, and it's getting impacted at the rural level, and that's why the inflation is still causing a problem. But definitely the discretionary demand with this kind of money suddenly in the hands of people, I think so definitely two-wheeler stocks are to be watched. My money would be put on two-wheelers because I'm saying if you look at it, a 25 lakh guy basically saving 1,10,000, so easily he can buy a two-wheeler. Even a 17, 18 lakhs basically he's saving 80,000. So I'm saying two-wheeler is the place to be in at the moment. I think that's where we should be, and smaller cars. So definitely Maruti.
Okay. Let's also take Harendra Kumar, MD of Institutional Equity, Elara Capital, now joining in. Hi, Harendra. Tell us your first take on the budget, and do you think this is good enough for getting the markets back on track?
Yeah, it is indeed, actually. So I think while it is cognizant of the short-term stress in the economy with respect to consumption, it doesn't, move away from its long-term trajectory with respect to capex or putting the building blocks in place for the economy. So I think the bigger shift, that is, of course, the focus on energy with respect to the nuclear reactors, the focus on shipbuilding, so that India can be a large export economy, the improvement in the logistics with the India Post. I think that is an endeavor towards making India Post like China Post, which was a catalyzing agent for Alibaba and other companies. So I think while it is focused on the long term, the consumption budget is only to correct any anomalies that were coming in the economy for the short term. So I'm not sure if a 1 lakh stimulus would mean a structural buy on consumption stocks for year, because they've had their own challenges with respect to products, their competition, and market positioning. So yes, it will give a short-term breathing space for the FMCG and other consumption stocks. But I think if you're doing portfolio allocation, we should be keeping our eye on the structural pivots that the government is making.
Okay, I want to bring up 2 points, and Harendra, for you and others on the panel as well. This one is to do with a specific amount of FDI for insurance companies going up to 100%, with of course the condition that the entire premium that is generated has to be invested in India. The second is the property sector, consequent to some of the changes that have been made with regard to with regard to two self-occupied properties in that regard. Shail, anything that we can see in the market reaction for these two specific areas?
Not really, Siddharth. I think the best of action is limited to FMCG, to auto, and to some extent life insurance companies that have been doing very well. Some more numbers have come in. The government hopes to raise 47,000 crore rupees via sale of equity assets and other public enterprises. So this is the disinvestment target that has come in. Fertilizer subsidy is seen at 1,68,000 crore rupees, food subsidy at 2 lakh crore rupees, and petroleum subsidy at 1 lakh, I think it's 12,100 crore rupees. Harendra, coming to you, with this budget as a background, what exactly do you foresee foreign institutional investors doing? Is this enough for them to at least pause on their selling mode, or given the bounce that we've seen in the last 5 days, you will see a very heavy net number coming in from today itself?
Shail, I would not say from today itself, but I think there are 3 or 4 large catalysts that will play up for the markets, irrespective of the budget that was. I think one was that the Trump tantrum that was underplay with respect to the money flowing back to the US will find its bottom when the rupee touches 88 or somewhere near that. And historically, we've seen that rupee dollar trade is the reason why money goes out. So I would expect that that's nearing its end now. So that's a large positive. Number two, the Indian large caps are extremely cheap. Net net, I would say that the Nifty should end in the positive for the new calendar plus financial year. The selling that's happening in the FMCG should stop. So all in all, it's not such a bad scene for the markets. For the headline Nifty, that is what I would say.
Advisors on board with us on the panel discussion. Ketan, good morning, good afternoon, and thank you so much for taking the time out. Tell me, what stood out for you in this budget? Has it come to expectations, and how would you rate it out of 10?
One of the things which did stand out, and we did get some indication of that in the economic survey, is this deregulation and sort of government getting out of the way. The finance minister did make an announcement that the committee would be set up for the deregulation. It talks about a year. I just hope that it does not get postponed, and it does not mean that during the interim steps will not be taken pending such a committee, because that's simply too long a period. Whether one looks at are some RBI regulations, certain LODR regulations for SEBI, compliance under tax, which of course will be a separate basket. I think this whole issue of ease of doing business is not just a cliche, but I think we all know that on the ground, this is a very big problem. So while it did stand out, I was a little disappointed at the fact that it's talking about submitting a report within 1 year. Because you see, if you submit a report within 1 year, when will you actually get the ease of doing business reforms actually done? So I think the better way would be, and I hope it actually happens that way on the ground, is to take out bits and pieces and start implementing that. Now, whether it is land records issue, whether it is SEBI regulations, anything which reduces compliance and makes it easy. I mean, the finance minister did talk about having moving further to a trust-based regime. But one needs to walk the talk and see more of that on the ground. So that is one. The other thing that stood out is the absence thereof, which is, there are three sectors which really hurt the middle class in terms of cost and inflation. And one is housing, second is education, and third is medical. So on housing, so for example, interest reduction at 2 lakhs is simply too low. So whether it is definition of what is affordable, deduction, there's nothing on that. I don't know whether the new income tax bill will contain that and from when. The second is education costs are very high. And, when one is talking of skilling, one really wishes something had been done on that. And third, as I mentioned, on the medical front, while certain other steps have been taken, medical costs are very high. And, say, Mediclaim deduction is so low that it becomes difficult for people. And there is, in the economic survey, there was a reference to out-of-pocket expenditure, and people spending a lot of money on out-of-pocket expenditure because of low Mediclaim deduction. They tend to take lower policies, and that leads to a significant outflow. I would have wished that something on these three parts would have been there. Of course, they have done it in a general way in the tax rates, but I really wish these would have been there as well.
At this stage, let me also welcome in Gokul Chaudhary, President of Tax. Gokul, the question that we are wondering, and we've been trying to go through the fine print as well. We also have Mukesh Bhutani, founder of BMR Legal, on the screen. I can see. To you, Gokul, first, all the changes on the PIT front, the question that is being asked in the studio here, they apply to the new tax regime. Any clarity through the fine print?
Well, it's too early to talk what's in the fine print because we're all reading through it. But I think the finance minister did deliver, at least for the middle classes, the blockbuster news of saying, 12 lakh rupees is the new threshold, beyond which only there will be tax. And under that, of course, there's an exemption. So I think for the salaried classes, where it's 1275, I think this is a pretty strong reform that she has proposed.
Mukesh, coming to you, summarize the developments on the tax front and what you make of them, Mukesh.
I think what appealed to me the most is the reformative tax agenda for customs. One is, in 1 year, if you look at Finance Bill 2 of 2024 and the Finance Bill of 2025, they've reduced and simplified it now by bringing it down now to 8. Also, there is several changes in the tariff structure, which seems to suggest that there are certain segments of manufacturing that are going to receive more attention. Whether it's got to do with life-saving drugs, critical mining, 12 critical minerals have been exempted. So these minerals go to cater to certain forms of manufacturing. Shuttle loans being exempted, and a whole bunch of changes on the basic custom duty rates for electronics. Now, you tie in this with some of the income tax changes wherein government has introduced a presumptive taxation, and I'll just read out what the ambit of the law is. It says India should be a global hub for electronic system design and manufacturing under a comprehensive program for development of semiconductors and display manufacturing ecosystem. This is a scheme that needs to be formulated by the Ministry of Electronics and Industry. So this segment has received a lot of attention. The other reformative change coming back on the customs is the statute of limitation for reopening. But that comes with a rider. All the past cases that have been reopened will not be impacted. But now they have prescribed a threshold of 3 years as the statute of limitation for reopening customs. Now, that again goes to address the ease of doing business, because reopening was a big headache for large businesses and focused upon the question of certainty, so on and so forth. So I think these two really stand out to me as the most important part of the tax proposals.
Okay. Let's get Nishchal and Harendra into this conversation. Mr. Maheshwari, there was this talk in the economic survey to push the growth to 6.3 to 6.8% in the year to March 2026. In this backdrop of the budget, do you see any concrete schemes which might push growth from 5.8 to at least 6.3?
Shail, is it for me or Nishchal?
For both, I'll let Nishchal take the first shot.
Sorry, Shail, I just missed the question.
Is there anything in this budget that takes the growth up from 5.8 to 6.3 as the economic survey had projected?
Definitely, Shail. I think there are two legs for growth in any economy. One is capex and the other is consumption. And consumption is what has been lagging for the last 1.5 years. I very seriously think there has been a lot of debate saying that the private sector is not coming in for capex. And my view continues to remain basically saying that private is only going to spend capex basically when they see demand. And when the demand is low, basically, I don't think so private is going to start doing capex just because government is doing capex. So I think government has bailed the cat. They have now started pushing the demand side of it, consumption. So I definitely see upgrades happening in the 26 numbers of most analysts.
Okay. Harendra, would you take a shot at this?
Yeah, so I think what people should actually focus, number one, is on agriculture. I think the agricultural growth assumptions for the new fiscal are buoyant. I think with respect to the monsoon, falling inflation, and the demand that is coming up in the fishery segment. I think the government's focus on the fishery segment has been very strong over the last 4 to 5 years, and that's growing at around 9 to 10%. And there is an extension of incentives for that space this year. So I think adding on top to the other layers of agriculture, fisheries is going to go up. Second is horticulture. I think the new demand for Udaan, etc., is to catalyze horticulture, which is also showing a lot of traction. So I think agriculture shall surprise on the positive for the new financial year, and we should keep our eyes on that. Number two is textiles. I think the Bangladesh problem is helping Indian textile companies get fresh additional demand. The big variable out there is cotton, and cotton has been India's bugbear. And the budget focus clearly on resolving the volatility in the cotton output in the country. So if that's resolved, the textile stocks can get a re-rating. So many micro changes that were playing up into our GDP calculation have been corrected if you go into the minor sectors. So a lot of opportunities there. Yes, there, I think 6.3 to 6.8 is achievable. The other big variable is liquidity tightening. See, we got into the slowdown because we had unreasonable tightening, and the government's gone out and starting to loosen up already. So I think the follow-on rate cut in February after this budget should trigger a rally in banking stock as well. So I think we should be back to our trend growth now after this budget.
Gokul, I had a question for you. What can we expect next week in the new bill that has been promised to come out? What is likely in that?
Well, I think two aspects. One is the fact that the finance minister has kept to her word, which she made in last budget, which was in the summer of 24, to say, I will revamp the Income Tax Act, I'll make it simple, provide greater certainty, I'll provide greater clarity. I think she's firstly sticking to her commitment to be able to deliver to the country a new tax code. Secondly, she has made it very clear that the verbosity of the law is going to be reduced by nearly 50%, which means that the volume of the law goes down. She's also committed upon the fact that she's going to make it far more simple so that the litigation opportunities go down, or the interpretational issues of a dispute go down. So I think she's quite committed upon this process. Given the finance minister's propensity to be workmanlike in her deliverable, I would expect that the revised tax code will be certainly an improvement over what we have currently.
Okay. One quick question to Ketan Dalal before we thank him. Ketan, in terms of the unfinished agenda that you notice after all of these announcements, what would you say?
No, so I think Siddharth, as I said in the beginning, this new direct tax bill, which Gokul was also referred to, is of course one unfinished agenda, and the other, of course, on the ease of doing business. That's a big one. You see, on the new direct tax bill, if I may take the liberty of supplementing what Gokul mentioned, litigation is a major bugbear today. We have about 40 lakh crores involved in litigation today, 5.5 lakh cases, for example, at the commissioner appeals level, some 60,000 cases at tribunal level, and so on and so forth. And one of the reasons for that is the lack of time limits. And this is what is one of the reasons causing the problem. So I don't know whether the new income tax bill will address those kind of issues, because litigation does really need to be addressed. And as I said, the second part is the ease of doing business. I really think it really needs to be speeded up far more than it is, because it on the ground, one sees in board meetings, in a 4-hour board meeting, 2 hours, 2.5 hours spent, 3 hours spent on compliance rather than on business issues and strategic issues. And that is not a great use of, as Uday Kotak once said, return on time invested. Neither for the directors, more important for operating management on an ongoing basis.
That's a good term, Ketan. ROTI, not just ROCE but ROTI, return on time invested. Mukesh Bhutani, I know you, Mukesh Bhutani, you also have to go. So one quick question that I had for you, and this relates to the larger point about ease of doing business. Regulatory overreach is now a global point that's being discussed in America and in Europe, and there's much hand-wringing in Europe. How positive is this move, even if we can argue whether we should have waited for a year for a committee's report or just started things one by one?
It's reformative. I wish we had looked at it a couple of years back. So as you correctly pointed out, if the committee is going to give a report and it's going to take a year, then I think we will have to wait for these reforms to be rolled out, because bear in mind that there would be many legislative changes that will be required. If the entire overall of the regulatory framework spans across, say, 10 or 20 economic legislations, you're looking at that many number of bills being introduced in the parliament, and some of the bills may be big enough for it to be referred to the standing committee on finance, which will delay the entire process. But I think that what would have made sense is that whilst the committee reviews rehauling of the regulatory mechanism, I think we should continue as a nation to keep on liberalizing. Whether it's gets got to do with decriminalization of various laws. So we saw many changes which sounded to me more like tokenism. So, for example, decriminalization of default for TCS. Last year she did TDS. This year she did TDS. So all of this is incremental, piecemeal, but I would have expected that there are many, many low hanging fruits purely from a regulatory standpoint, whether it's got to do with SEBI or competition law or many, many regulations that need to be decriminalized. The other thing is that we also need fair degree of regulatory reforms at the state level. For example, subjects such as water, pollution, environment, land. I mean, there is a whole laundry list of issues that needs to be looked into. So I think the government will do well by laying down a playbook of regulatory reforms which states can adapt to loosen up, because we've really seen an overhang of regulation and the discretionary powers that are being given to the regulators. And that's what makes businesses feel very nervous about it.
Thanks very much for that perspective, Mukesh, and thanks, Ketan, as well. I just wanted to address a point that came up during our discussions and with all our guests and my colleagues here. On the capex numbers, Shail, Sakshi, and all our guests, the latest numbers that we have, the target for FY26, which is called the budget estimate, is 11.21 lakh crore, and the budget estimate for the current financial year was 11.11 lakh crore. So on the face of it, it's just a 10 lakh increase. However, please note that the revised estimates for the current year show that there has been a 8% miss. So while the target was 11.18 lakh crore, only 10.18 has been spent. So that is due to the Lok Sabha election. So Shail, this point that's come up constantly, what led to the decline in growth? First 6 months because of lesser government spending. However, as we discussed in our earlier shows, government spending only accounts for 10% of GDP. Private fixed asset formation accounts for 30%, 60% is by people spending. Now, you added that 1 lakh crore number. So clearly the big question to answer at this stage is, what does this budget do at the macro level to boost growth? Is the consumption booster enough as we have been running? Do you have a better sense of that particular issue, Shail?
Siddharth, I think for the moment, the markets are completely lopsided, and they're only looking at FMCG and auto as being the biggest beneficiaries of this tax cut. What also we've forgotten is that this is a Bihar-centric budget, and there was a lovely meme going around in the capital market WhatsApp groups that land rates in Bihar have doubled in the last 1 hour or so.
Well, that's clear, and this was a story, viewers, that was broken by our colleague Karishma Asudani on businesstoday.in and Business Today Television several days ago, that there will be a Bihar flavor, a Bihar tadka or a litti chokha, choose what you like.
Makhana.
And Makhana, and Nikhil Kamath also commenting about that. Okay, I see more faces on our rolling coverage here. And Radhika Rao is here with us. Radhika, welcome, ED and Senior Economist at DBS Bank. We just spoke about the capex numbers because I had managed to get hand on the fine print. Viewers, if you are looking for more numbers, the budget documents went up just a little while ago, 10-15 minutes ago, on the India budget website. So you can go there for fine print. But Radhika, your key takeaways from the budget?
Certainly, I think if I were to look at the quantitative aspects, I think it's quite clear that fiscal consolidation, they've been uncompromising about it, right? Despite a very wide-ranging objectives in terms of stakeholders, from agriculture to MSMEs, to also pushing for manufacturing sectors, improving the ease of doing business. Despite all of that, I think fiscal consolidation has continued. In fact, if anything, they have bettered on the fiscal 25 target, and they expect to better on the FY26 target as well, in terms of the deficit target. And I think before going into this budget, we had written, one of our notes that we need to see another thing, which the finance minister has spoken about in July, which is that it won't just be about deficits anymore. It's going to be about deficits aligned with debt. So if you see the text, in fact, you can see that for the next till fiscal 30, they've put out a roadmap of where the deficit should be and where the public debt will go. So that is very interesting as well. So taking a much more holistic view. So coming to just this year and the year that we are going into, I think it's quite clear that fiscal consolidation is going to continue. Fortunately, they haven't really increased the capital expenditure budget too much. It was quite clear that just setting aside 11 or 12 lakh crores is not going to solve the problem. I think there are some, measures that we need to do to improve absorption of this money, and I think their focus will be on that. So I'm good to see that that has not been taken up even further to make it more ambitious. So overall, I would think quite an inclusive, balanced budget. Trying to take a lot of stakeholders along towards Viksit Bharat, as well as in the very near term to be more pro-growth.
Radhika, just one quick follow-up before we go to our other guests. There's a bunch of announcements that you can put under the category of investing in the economy, and one of them I just want to bring up for all our panelists as well. An outlay of 1.5 lakh crore is proposed for a 50-year interest-free loan to states for capital expenditure and incentives for reforms. And in fact, there's also this announcement for a second asset monetization plan for a 5-year period, 2025 to 2030, to plow back capital of almost 10 lakh crore into new projects. So Radhika, I don't know if you managed to go through this fine print, read it for us in terms of what its implications mean for state level projects as well as the asset monetization plan.
I think this follows up with what the center has done in the past 3-4 years, which is that, realize that just center putting aside 11 lakh crores is not going to mean much. Within that 11 lakh crores actually is this money that is given to states as interest-free or concessional. So I think it's just a follow-up in terms of the quantum. Obviously, it's been going up. But when you look at the state finances, you also realize that all of the money that has been allocated to them sometimes has riders, meaning, that money will only be given out if they meet certain requirements. And the second one is that because the states have of course, different states doing different things, but there is also an emphasis towards more revenue expenditure, especially the states which had elections coming up. So they haven't really been able to, spend the required amount, just like the center. So from that sense, I would think it's a good signal. It's telling you that the money is being put more and more towards a very clear agenda. But I think, again, the proof of the eating is in the pudding. So what happens then is to realize that, to recognize, identify projects that need that amount and be able to set that aside. So capacity constraints, easing capacity constraints at the center as well as the state level become very important. But I think it's overall directionally, it's a big positive because the center realizes they can't do it alone, and then the end mile support is required by the states as well.
Okay, one of the key questions that keeps coming back, Shail, Sakshi, I know you have questions, but I just want to quickly say that it's still not clear. Although I would tend that this is towards the new default tax regime, the question is still being asked, these tax changes, are they also applicable to old tax regime, those who don't switch? Sorry, we don't have a clear answer, but over to you.
Sakshi.
Actually, I don't think that this will be applicable to the old tax regime. This is clearly because there was just very shortly, Finance Minister briefly said that it's for the new tax.
I would say let the experts take a call on that. Yeah. But clearly, markets seem to still be in a zone of, what should I say, Shail? Are they cruising along? Are they in comfort zone, or have they overcome the budget announcements?
Siddharth, it's absolutely a lopsided market, as I was telling you. Only auto and FMCG stocks are in the pink of health, if that can be a term used, after a battering of about 4 months. But the broader markets are undergoing a bout of profit booking. That was because you had a relief rally for the last 4-5 days, and that's being sort of sold into. Let's get both Nishchal and Harendra into this conversation. Nishchalji, as always, coming to you first. From the point of view of 1st February onwards, how do you allocate fresh capital in a market that has corrected substantially and is now past the hump of its main event for the calendar year?
I don't know basically whether we passed the main event, because the main event is still in the US. And Mr. Trump is Mr. Trump is going to keep on giving us all the events all through the year. So I think that is where the problem lies, because I think budget will be a one-day event. Maybe Monday people are going to analyze it and it will be done and dusted. But I think the main event still remains to be the US economy, how it's going to do, what kind of policies Mr. Trump is going to bring in. I think market is going to go back to that. Earnings and all, I think the remaining part of the earnings, I think that is what is going to drive the market.
Can I just jump in? Can I just jump in to Radhika, because she is the expert on international matters here. Radhika, what's the reading that you have within all the limitations on this matter? If you're not able to comment, please tell us. But you know, the tariff war has been ignited. The first salvos have been fired. Is this going to reach Indian shores and singe us as well? What can you say about that? I think you are on mute, Radhika. We can't hear you.
Sorry about that.
Yeah.
So I think it's quite clear, first of all, that it's a very transactional world, under the new administration in the US. So for now, tariffs are being used as threats. I think the larger understanding that we have now, I do compare with what happened back in 2016 to 2020 when the first Trump 1.0 was going on. So we did see some, tariff action on India as well, especially, India was under the generalized system of preferences and that window was taken away and it's still not been re-put. So we certainly should remember, and I think what the budget has done in that direction is that they have started to rationalize import tariffs, not only outside in but inside out as well. If you speak to the exporters and the importers, they will tell you that the curve is quite inverted when it comes to sometimes finished goods versus intermediate or intermediate versus raw materials. So to correct all of that, I think there has been preemptive steps undertaken already. But sometimes it's hard to just get a handle on what fancies the US leader. A country could do whatever changes required, but if it's seen as being arbitrary or seen as being anti-US, you could always expect some action. But right now, I think it's quite clear India will not be a part of the first set of action. I think there are certainly much bigger countries which have major imbalance.
Okay, we've reached 1 o'clock. We switch into other elements of programming, but 30 seconds with you, Radhika. Is the bigger event what happens for monetary policy in India in the days ahead?
Absolutely. In fact, you were asking the other guest, now the biggest event is out of the way. I think the markets have a very short-minded focus that way. So you're again going to be looking at 1 week hence. Next Friday, we've got the RBI meeting and what they're going to do thereafter. And I think it's quite clear that that's going to be in focus. I think the fiscal, what the budget does for the RBI is that, first of all, it shows that fiscally consolidation is going on. So they're not going to, they don't have to worry about a looser fiscal. But for the RBI, many other things matter. We do expect a 25 basis point cut as a first of a very shallow rate cut cycle from the RBI.
Okay, viewers, don't go anywhere because we now have Shankar Sharma, market veteran, one of the most well-known faces who is joining us. And as we thank all our panelists at this stage, I welcome Shankar Sharma onto the debate. Shankar, welcome. Hope you've gone through the entire budget. Your key takeaways, consumption booster, dhamaka, 1991 moment, 2007 turning point. Do you have any appellations for this budget today?
I don't think it's even close. I think it would be very, very, incorrect to compare it to 91, let alone to the subsequent budgets or 97 of P. Chidambaram. This is, my view, it is I would call it like a band-aid response to the middle class's cry for lower taxation. Beyond that, it does not do anything to address the core problem, which is India is facing a growth slowdown. I mean, there is no two ways about it. The data is showing it, corporate earnings are showing it. The full year numbers that RBI put out under Shaktikanta Das have been missed by I think almost a percent point. That's one of the biggest misses of any RBI forecast on GDP, growth estimates that I kind of remember. So we have a growth slowdown. Raising the slab to 12 lakhs is great for the people for whom it has been raised. What does it do for the economy? 1 lakh crores, I mean $10-15 billion is like nothing, as in nothing at all in a $4 trillion economy. So it's a band-aid. I wouldn't even call it a large band-aid. It's like a little round band-aid that you put on a little blister. So it is not going to solve the core growth problem that we are facing. And I think the full year number for GDP will be closer to 6, might be even a tad lower than the 6.4 that has kind of been now talked about as the new normalized lower growth number from the earlier estimates of 7%.
Okay, so Shankar, time around when you were with us on the budget day and you saw the reaction as far as the markets go on the LTCG hike and the STCG hike, you said that you've just wiped your tears and come off. After the budget speech today, I hope it was much better this time around. Even if you believe that, that doesn't do much for the growth to get stimulated, what about the markets? Are they going to be getting back on track? 4 months of a slowdown is what we've already seen on the markets and a correction which we've not seen in the last 23 years. Will that at least get reversed?
I don't think so. If they wanted to seriously address the market itself, they should have at least removed STT. That's the fairest thing to do. We talk about fairness in taxation. When STT was introduced, the LTCG was removed. Now we got LTCG back in 2018. We got it hiked in the July budget, and STT was never reduced. Or removed. It should have been removed. And please understand this. The stock market is your golden goose, which has laid 1 egg per day. But wo diwar mein tha na, कि when Madan Puri, tells Amitabh Bachchan that agar main aapko paise na दूं और आपको मार दूं तो, and Amitabh Bachchan says that कि sir, वो मुर्गी के सारे अंडे आज ही चाहिए क्या? या एक अंडा per day चाहिए? It is the same thing. You've raised all the taxation on equity investment, and you want all the eggs in a single day. This hen is going to die, and that's what we are seeing. That today India is one of the worst performing stock markets on a preceding 12-month basis, from being one of the best, the top 2 or 3 markets after the US in the period prior to that. That is telling you enough. Look at FPI, pullouts. In January we have lost, I think, 1 lakh crore. I mean, it's insane figures. Why are they going? Say very simple. Post-tax returns from India no longer justify being in India if you're a portfolio investor. And also, let me also add, we talk about 15% long-term equity returns, but that assumes that there is little or no capital gains taxation, as was the case for the better part of this entire last 20 years. Now, when you bake in 12.5% and 20%, and you take an average number of 15% taxation, for investments, you're talking about 15% minus this, let's say 20-25%, which comes to 12%. With the volatility, it comes down to 9%. Bank FDs are, yielding you 7%, 7.5%. Good NBFCs yield you 9%. What is the case to be made for anybody to put money into equity markets? This is basic common sense. But, I'm extremely disappointed that they did not do anything at all on the STT part, let alone on the STCG and the LTCG part.
Namaskar Shankarji, and it's often seen that Indian investors have got so used to being disappointed that they carry on plodding. Now for stock pickers such as you, of course the large and the mids don't matter, but the small caps do. Of course we had a fantastic rally over the last 3 years or so, and small caps did exceptionally well. In this broad outlook that you now outline, what would be your strategy for Indian markets? Would you stop hunting here and go for some other Asian market or so? Or how would you deploy existing money in India?
So, I mean, whatever money I have in India, that's quite a lot of money. I don't think that there is any case to be, sort of taking out money. It is only a matter of staying here and becoming even more selective, even more selective than what might have been the case maybe 1 year ago. It is no longer a broad bull market.
Yes.
It is going to become a very narrow bull market. In narrow bull markets, you do make money, but it takes a lot more effort, which is what I'm saying, that you needed to understand this phenomenon and give people some degree of succor on the taxation front for the capital markets. I mean, I cannot overstate this, but they have tried to kill the golden goose that laid an egg for the last 4 years in one shot by raising the capital gains tax successively in 2018 and then in 2024.
Fair point. Given the changes that you mentioned, even if it is a small band-aid, a circular one, do you see some merit in at least two-wheeler stocks? Because the folks that will get this immediate benefit of 12 lakh rupees not being taxed at all are possibly buyers of two-wheelers and maybe as an indirect benefit the ancillary space, or even that asking a bit too much?
I mean, we can find something here or there, Shail, which will benefit. I mean, but here in the budget, it's a macro document. We have to look at the macro. Okay? एक two-wheeler sector अच्छा कर जाएगा doesn't mean the whole economy changes picture. Here we are talking about a significant growth slowdown. Does it do enough to address that? I don't think there can be any debate that releasing 1 lakh crores as incentive through taxation even begins to move the needle. So yes, churinda basis pe maybe vada pav stalls will do well, maybe some two-wheelers will do well. But does it really boost consumption to that extent? Does it do what Chidambaram's 97 budget did? I don't think it's even in the ballpark.
What about the FPI flows that you have been saying that, an exodus is what we have seen post the last budget's tinkering on the taxes on the higher side. We've not seen them come back. What will it take for us to really see FPI flows coming back to India?
It's very simple. I mean, there is no rocket science. Just look at the dollar performance of markets in 2024. Or if you want to go back from today, go back 12 months and see the dollar performance of markets. India is like 20th or 24th or 25th on the list of performers because it was already hurting from the slowdown, and on top of that, you increase the taxation. So for a foreign investor, and by the way, I invest globally. I'm a foreign investor in practically 20 markets. I pay zero capital gains tax anywhere. I only pay tax on dividends, which is minuscule anyway. You're not buying for dividends. Nowhere in the world you get tax on capital gains except India. What is so special about this country that makes us believe that people will flock to us despite a taxation regime on equity markets, which is completely a variance to the rest of the world? There's no taxation anywhere on equity. US, which gets more capital than can use, has zero capital gains tax. हम उनसे ऊपर तो नहीं हो सकते ना साहब?
ये बात तो है. I think this is a no holds barred discussion on the budget, but let's talk of something better, which is consumption, and something that you commented upon last evening, which is the place that you went in Mumbai. Siddharth and I were of the view that you didn't take us together, and that's the reason why you found the bar empty. We invite you to Delhi, and that bars here are full, and the liquor is better in Delhi than in Bombay. So more than welcome today evening. People also, absolutely.
Shankar, there was also one comment, Siddharth, who said that probably you went to a place which is so unaffordable for other people that, it's unfair to say that is Mandi, because only people of your wealth go there and your net worth go there.
I will clarify this. I knew this was coming. I will clarify. I asked the waiter also, and he said, "Saab, dhanda manda hai kuch hafton se, mahino se." I forget what he said. So yes, it is unaffordable for many. I have no disagreement about that. But even for the affording class, it was a very low point. And that is the problem, that this is a rich person's place. If the rich are not going, middle class is already hurting, lower class is already hurting. And does this budget do enough to revive those people? The rich can take care of themselves. I have no sympathy for the rich. Let's be clear about it. उनके पास बहुत options है. But middle class के लिए 1 लाख करोड़ रुपए आप दे के बोलोगे 150 करोड़ की आबादी में per person क्या होता है आप calculate कर लो. It's peanuts.
Fair point. Will a rate cut in later part of this week sort of increase the size of the mandate, or will that also be something which is insufficient?
You know, Shail, my view is that India cannot afford a rate cut from a monetary standpoint because of the fact that the currency has been weak. Okay, dollar has been strong against everything. We know that, but let's leave that argument aside. The rupee has been falling. It's depreciating and it's depreciating. You know, big FII pullouts. We know the pressure points. All of those things do not merit a rate cut, because if you cut the rates, you're going to further decelerate the attractiveness of India, because higher rates are required to bring in capital, and agar aap low karoge rates, capital will not come in, or it might even begin to flow out even more. I think it's a rock and a hard place situation even for the RBI. The previous governor, I'm told, I read the press, is that we spent like 50 or 100 billion dollars trying to defend the rupee. I don't understand what was the purpose of that. I mean, you're facing a tsunami by way of the dollar strength. आपके 50-100 billion से कुछ नहीं होने वाला है, but आपके reserves हैं. Our reserves, let's be clear about it, are not earned reserves. These are rented reserves. They are on call. They can go out if somebody demands them back. It's not China's reserves, which has been basically earned through trade surpluses over decades. So, yahan par we need to keep India a super attractive destination on all fronts for foreign capital. Somehow in this Swadeshi and patriotism ke naare mein hum bhool gaye ki foreigners ki ahmiyat hai sahab. We have forgotten that whole basic tenet. We are still a country with a balance of payments deficit, on a capital account deficit, which needs to be filled by foreign flows. Why are we not focusing on that? Why just middle class 1 lakh crore?
You did say that you are a foreign investor and you invest globally. I want to understand from you, geographically, where are you going to be putting in more money? Where does India stand there? And so that, an average retail investor can also understand what is the importance of India and Indian markets in the overall global context at this current time.
Look, I'm an Indian. Foreign investor also, is secondary. I'm an Indian. I continue to invest in India. Yesterday also in Bombay, I had 3-4 meetings with companies. We are blessed with amazing bottom-up opportunities. And this is what I tweeted a while back, like maybe a week or 10 days back, that in the 90s, our macros were terrible, because coming out of the 91 recession, it took time for the economy to really mend. You can't just have a budget and then expect everything to fall in place. I remember we were dealing with terrible macros. Interest payments as a percentage of receipts of the government back then used to be 50%. 50%. 1 रुपया आता था, 50 पैसे interest में जाता था. I used to sit and wonder कि हम फिर actual productive use पे कहाँ डालेंगे पैसे as a nation. But despite that, we got amazing bottom-up opportunities. We got the Asian Paints, we got the HDFC banks, we got so many other Infosys. So many other companies in the 90s period, which was really a very problematic macro period. I want to offer this as a word of encouragement to people who think macro is bad, so micro is bad. In many countries that is true, but that is not true in India.
Absolutely. I think we still remain a stock picker's paradise. Of course, the quantum may have narrowed and the potential return might have also come down. But one more point for you to vent, Shankar, is the fact that retailers continue to have faith and they are putting in 40,000 crores in SIPs to let our foreign funds actually enjoy bars which they can afford to because of the easy exit that we are giving them. Maybe something that you can comment on this one?
So see, from the time that FII started to come in, if you go back in history, FII flows have never been negative for this long and with such aggression. They used to be negative, but very patchily negative. 2008 global crisis, there was a negative year, but they came back in full force in 2009. And similarly, I think in one other year, we had moderate negative. Is tarah ki sustained month after month, day after day selling is beyond my imagination, beyond my experience. And I think that is in large part coming, of course, because of the disenchantment with the post-tax returns from India, but also because they are able to get exit. And you know that, Shail, better than anybody else around, that market में पैसा तब बनता है जब desperate seller से आप माल ले रहे हो, and वो नीचे के भाव में ले रहे हो. जब मार्केट 35,000 की सेंसेक्स पे आप ले रहे होते फॉरेनर से, तो आई कैन अंडरस्टैंड दैट. At 80,000 सेंसेक्स, you're buying truckloads of that equity. I don't know who the greater fool is. I mean, I just hope that we are not the greater fools and that the FPI is the greater fools. But somehow it doesn't look like that. And they are getting smooth, super easy exits. उनके पैसे को इतने आसानी से मत जाने दो. That's the point I was trying to make in the piece, I think obliquely you have referred to.
Shankar, I think where they exited the most was probably the secondary markets, but they also pumped in money in the primary markets. What is your own understanding of how are primary markets placed as of now and into this new year? Do you think this space will interest you?
So primary markets, I only do like an unlisted transaction. I don't invest in IPOs because IPOs, by the time they come out, and a lot of them are offered for sale, so VCs are exiting or PEs are exiting. And the amount that is being withdrawn versus what is being put into IPOs, it doesn't even compare remotely. IPOs for me are a good place if you manage to get allocation in some good ones, but unfortunately that's the problem. They get oversubscribed, you don't get much. Remember one more thing, that the secondary market has been obviously hurting. The primary market is strong, but there is a lagged effect that always happens. Secondary first starts to do well and then primary follows with a lag. On the opposite side, exactly the same thing happens. The secondary starts to react very quickly. IPOs, which is the primary market, start to react late. Right now, there is the pipelines getting filled up. Let us see in 3-4 months' time whether the same situation exists or not.
I think you are seeing that already. IPOs that list on the first day, that premia is getting squeezed dramatically, and all those fancy names that we saw 2.5, 3 months ago, some of them are actually below IPO price, and many of them are well below their all-time highs. One more space that has lofty valuations is the unlisted one. Now, every broker in the smallest town in India is offering you unlisted shares in case you are interested. Is that the next killing zone of the market?
देखिए शैल, मार्केट में क्या होता है, सब बड़ी सिंपल सी चीज है. मार्केट में न्यू प्रोडक्ट्स चाहिए एंड न्यू बकरे चाहिए, और जब न्यू प्रोडक्ट न्यू बकरे से मिलता है तो वो इतना मतलब राम मिलाए जोड़ी होती है. तो अब ये न्यू प्रोडक्ट अनलिस्टेड शेयर्स है, न्यू बकरे हैं जिनको कुछ हवा नहीं है कि क्या ले रहे हैं, क्या बेच रहे हैं, उनकी एग्जिट क्या होगी, लिक्विडिटी क्या होगी. तो बट एज अ लॉन्ग टर्म मार्केट व्यूअर, आई लाइक इट. इट्स ओके, इट्स अ गुड इकोसिस्टम. लोगों को रोजी रोटी चलानी है, निकाल देते हैं प्रोडक्ट, और बकरे हिंदुस्तान में 150 करोड़ मिल ही जाएंगे कोई ना कोई आपको.
चलिए, so against this backdrop, Shankar, where everything is contracting, the broader economy, secondary markets, primaries are getting hit, unlisted is not what you like. How about gold?
Fantastic. In one line, I am a structural bull on gold.
अच्छा, अब कमाल की बात देखिए, कमाल की बात देखिए, the government of India has stopped SGB. That itself is an indication.
There you go. Exactly right. Precisely. I'm a structural bull on gold. I mean, I think it is. I don't like to say one best trade in the world. There are many, but I think it is right now the best trade you can do.
What is the gold that you invest in, Shankar? I know Shail invests in physical.
See, अब Shail तो खैर मतलब मैं क्या बोलूं, he's a colorful guy. I just buy ETFs of gold. I just buy exchange traded funds doing gold, not actual gold.
Actually, if you look, Shankar, look at the premium of SGPs SGBs in India, it's about 12-13%, which is actually equal to the customs duty on gold in India. So that exactly shows you how the margin of safety is being used by at least knowledgeable retailers and ultra HNIs in India. They buy SGP, which is still at a premium. Now our final question to you, Shankar. There is this lot of memes going around in market WhatsApps that this budget is actually meant for Biharis. So you have a new airport coming in. You have a board to sell makhanas, and there are lots of other sops that have been given to the state of Bihar. To my knowledge, there is no better Bihari who can answer this than you.
आपने मेरे मुंह की बात छीन ली. मैंने अपने पर्सनल व्हाट्सएप ग्रुप पे भेजा कि बाकी भगवान जाने क्या होगा आगे, because this came a little earlier in the speech.
Yes.
There is an auxiliary airport announced at Bhita, which is exactly at my village. And there is an IIT which has been expanded there, which is bordering my village. So my ancestral land, which is, I have lots of it there, has gone through the roof, at least in my mind, maybe 20x from where it was in the morning. So I am pleased, I am delighted, I am thrilled that Bihar has got such primacy, in this budget. I'm absolutely thrilled. I don't say this in any kind of joking way. I mean it. We deserve it. Biharis are a very hard-working race. We have exported our minerals to the rest of the country over decades without getting a fair market price for it. We exported coal when it was unified Bihar, mica, manganese, ore, everything from Bihar going to the developed part of India. Who made the real money? We got nothing. It's high time a bit of it comes back to us.
And makhana now.
And makhana tao. Foxnuts are amazing health foods. And by the way, sattu, I'm a fan of sattu. That's another. So we have contributed two amazingly healthy superfoods, makhana and sattu.
Brilliant. Well, with that, Shankar, we'll draw this conversation to a close. As always, if you are in Delhi, you know the place to be as far as sattu ke paranthe are concerned. We look forward to that and take you to a better bar than the Bombay one.
Done. I will take you up on that. Thank you very much.
Thank you, Shankar. All right. We'll look at the markets, half odd percent lower on the Nifty, and the Nifty Bank about 0.8% lower at 49,181. That's the level at which the major indices are looking at. So, of course, some kind of a softness is what we are looking at into the markets. What do you think, Shail, would have dampened the sentiment? Is it the lack of growth that we're looking at, the capex figure? I mean, like that was being expected that it should be raised 15, 25, 30% also. That's been maintained at 11.2. Is that it?
Sakshi, to be very honest, I think it was a relief rally. You're falling so much that then the sensible guys, pause. Maybe they pause for a better price to sell. And that is what has happened in hindsight. And as many people that we've talked to, Shankar, of course, has been forthright in saying that this budget is less than a band-aid. Others, if you sort of notice, they've said, that okay, FMCG thoda bahut auto, lekin what is there in the broader space, considering the pain that we face? And as Harendra very well put in, the Trump tantrum is ongoing. So, from I think today's high was 23,600 almost, maybe 23,620, and from there we've shaved 200 points, but we've also risen let's say 850 points on the Nifty alone. उसमें से 200-150 point निकल गया. ठीक है, let us see. But it's a sell-on rise as far as markets are concerned, and the budget that they were waiting for, this was one major event that seems to have passed without making a considerable dent on the sentiment in large. I think we have new guests.
Yes, Ashish, CEO, White Oak Capital MC now joining in. Hi Ashish, good afternoon to you. Well, the big budget event, at least the speech is out, the fine print still pouring in. Are you happy? Are you unhappy? Are you only satisfied? What exactly is the feedback?
I think yesterday what I noticed was quite ironic. Yesterday the market started going up because market realized that the expectations are low. So that was quite odd actually. But yeah, I mean, see, we have to look at the budget has to be seen in the operating context, right? From that perspective, I don't think there are any negatives. If we can be on a fiscal glide path, if we can still continue to allocate same or slightly higher number to capex, and at the same time, if we can pander to demands for giving tax concessions, do all of that, and then also in the background, we already have the eighth pay commission announced. We're already seeing that in every state election, money is being doled out, or the weaker sections and the women and farmers are being supported. Plus, we are putting up some policy mechanisms to decriminalize laws, to reduce the burden in terms of processes and procedures, simplifying multiple things. So I think overall there is nothing negative really. See, I think what happens in the market is sometimes the market wants to hear what it wants to hear. The market wants to hear that there is some big capex announcement or there is some big, but it's more a routine budget, and I don't think there is anything negative.
Namaste Ashish ji, a very warm welcome. Shail this side. Given that you manage now a very, very large chunk of public money, how do you, how should I say, pivot yourself against the backdrop of this document, against the backdrop of sustained FII sell numbers, weakening third quarter earnings, and how should I say, a slight darkness that's enveloping the Lal Street? What would you be doing?
Yeah, so see, one is that if you really ask me on relative performance, I mean, that doesn't always work well for investors. Investors want absolute performance, they want positive return. But given that in the last few months, market has been on a downtrend, especially since September, on relative performance, actually, we are falling much lesser and we are outperforming quite significantly. If you see our own portfolios, the way they are positioned, we don't have any style bias, like we are not growth or value, defensive or cyclical. And we don't have any sector bias also because our portfolios are benchmark aware, meaning that we have respect for the lay of the land when you compare it with BSE 500. So net, if you really ask me, there is a sector rotation which has played out in last 3 to 6 months. And that is what we have noticed and that is what we have aligned to. What do I mean by sector rotation? If you see last 3 years, market was fully driven by policy driven sectors, macro, railway, PSU, defense, infrastructure, at some point in time, oil, metal, commodities, right? In fact, those market conditions are very difficult for stock picking. Whereas what is happening in the last 3 to 6 months, yes, there is a correction, but at least the market is becoming more heterogeneous and it is becoming more like what you call a stock pickers market. So our portfolios are positioned in a diversified manner. Stock picking is working. There is a sector rotation. If you see what was working very well in the last 3 years, has started to underperform. And what was written off, like say IT, healthcare, consumer in certain pockets, financial services, that is outperforming. So I think it is just becoming a stock pickers market. People have to reorient and rebalance their portfolios.
Post the budget, are you going to do anything on that stock picking and sector picking right now? Is there any addition, deletion on that account now?
Actually, the way our portfolios are positioned and the way the landscape is shaping up, in fact, we may not need to do too much. That's why I said that, when the market is driven by macros, and just if you see 2-3 years, market was working in tandem, meaning that it doesn't matter which stock and what you're talking. If you're defense, it's going up. If you're PSU, it's going up. So railway, infrastructure. So when market drives entire sector after sector up in tandem, it's difficult for stock pickers. And we generally tend to be underweight such sectors. We are more into sectors where there is heterogeneity, where there is bottom-up stock picking which works. So if you really ask me, this environment is better for stock pickers and it's better for generating alpha. So the market, the way it is rotating, is actually coming while we don't have any outright preferences, but the way the market is behaving, it is rotating in favor of the way we structure our portfolios. So I think market at large, retail investors at large, they would have, by now they would be romantically involved with where they made a lot of money in the last 3 years. So the portfolios at large, retail portfolios at large, they need some reorientation. But for us, this I don't think this environment is something to complain about. Stock picking is working. We are generating alpha.
I think that's a very sensible outlook on how markets work, which is that a secular bull market makes it easier to make money. But at the same time, all those stocks that are rising rapidly are not a part of your portfolio. So, for instance, you might have one or two defense stocks, one or two railway stocks, and some PSU banks. Yet the entire sector is up, and if you compare yourself to that index, you have underperformed.
Absolutely. That's what I meant by saying that in certain environments, stock picking doesn't work. And to bolster what you said, I'll just make one very quick comment. Shailji, you take 2023, rip-roaring year for small caps, for example.
Correct.
I can give you just one statistic. The small cap index was up 46%, while
Correct.
BSE 500 was up only 26%. Only bol raha hoon, but 26%. But do you know what? If I split the small cap, and if I tell you that Shailji, private sector component of small cap, it was up 30%.
Yes.
PSU component of small cap, 120% up. So see, it was not small cap or stock picking. If you are ticking two boxes, your PSU and your small cap, 120% up, no stock picking. It just flies. So that environment is difficult. See, in that environment, every retail investor thinks he is a fund manager.
Yes.
And people like us who are doing discounted cash flow and bottom-up analysis and our OpCo-FinCo framework, it will look like, "Arey, boss, what are you doing? You're underperforming," right? So in certain markets, stock picking doesn't work. I am happy because in last 6 months, market has become more heterogeneous and more discerning of what will work and what will not work. See, when the market is booming, it's all order books. But now people will come back to free cash flow. So that works for us.
अच्छा, दूसरी बात इस दौरान ये भी हुआ that 46% rise in small cap index, a lot of fund managers actually underperformed the index also.
See, that is because the tandem sectors are working. What do I mean by tandem sectors? Like, I'll give you an example. Say you take oil marketing, HPBP IOC. If you have it in your portfolio, if it works, everything will fly.
Yeah.
You can't generate alpha by picking one of them. You take, say, public sector banks. When they were flying, all of them were flying. You are a stock picker, you might own State Bank or PNB.
Correct.
But you will not end up owning the whole basket, right? So everything is flying. That is the challenge. That, anybody who makes a sensible portfolio to beat a benchmark, for them, life becomes very difficult if market has no heterogeneity.
Yes.
That's the problem.
Let's also welcome other panelists on the show then. Tridip Bhattacharya, CIO Equities at Edelweiss AMC is joining in, and we also have with us Naveen Kulkarni, CIO at Axis Securities PMS as well. Warm welcome to both of you and thank you so much for joining in. Let me kickstart by asking Tridip, your own take post the budget. Markets have slipped a bit. What stood out for you as a big win and what is still something that went missing in the budget?
I think overall it's a balanced budget. The question is the balance shift from capex to consumption. I think that's of note. Overall, clearly the boost to consumption is positive, whereas the capex numbers, as we are looking through the details, have a few nuances. Couldn't see the animal spirits in terms of growth, which was probably anticipated. But overall, if you balance these two along with fiscal deficit, where they want it to be and what they want to be, I think it's a balance that Honorable Finance Minister has been able to strike well and should bode well for the country overall. It's just that the markets will probably have to focus differently as opposed to where it was earlier.
Welcoming Mr. Naveen Kulkarni, CIO at Axis Securities PMS as well. Namaste Naveen ji, and a very warm welcome to you, sir. Anything of consequence that you look forward to in terms of stock picking within the FMCG and the auto space? These two seem to be the biggest beneficiaries of this 1 lakh crore largesse that has come in from removing tax slabs.
Yeah, so broadly, if we think about it, clearly there is the intention or the direction is to improve the consumption trends, right? So that has been lagging for a while. So the focus is very, very clear to look at consumption. In that context, of course, we can look at various aspects, but I would say that we should be looking at high growth companies in the consumption basket because they were also beaten down very, very recently. So it makes a lot of sense to look at some of these names, whether we look at some of the, let's say, discounting retail models or we look at, let's say, consumer durable space. I think these could be the biggest beneficiaries. Staples, I would still say, has its own long term trajectory of growth because it also depends on how inflation shapes up. There is also a pricing power which comes into play in the consumption oriented stocks, or let's say the pure staples kind of for FMCG names. But if I were to look at the other aspects, which is, let's say, consumer durables, small ticket consumer durables, or even look at auto sector, two wheelers, I think these companies could stand out to be the biggest beneficiaries over the next 12 to 24 months.
Okay. Ashish, let me come to you now with a question, and that will be, beyond these sectors that you talked about, IT, financials, FMCG, consumption-oriented sectors, all of them which were so far underperforming have now come into flavor. What else looks attractive to you? Where would you increasingly put fresh flows now that the biggest event is out of the way?
So, if you really ask me from whatever has worked in past, I mean, in recent times, apart from the names that you gave, our team definitely comes across a lot of ideas when we speak about, say, manufacturing in general, right? There is a lot of ideation which continuously happens in, say, electronics, export-oriented, export-oriented stuff, capex. So a lot of companies which are into manufacturing in these segments, there is consistent new ideation that keeps happening. So apart from what I said earlier, I think this is one thing which I would add to the list.
Gentlemen, let me start with Naveen. 100% allocation of FDI into the insurance space, Naveen ji. Of course, your parent, your corporate parent has an insurance play as well. Do you see this as fruitful? Insurance has been one of those dark spots in the overall, how should I say, return portfolio of India over the last 5 years. Nobody's made any money.
Yeah, so insurance as a theme is again a little complex theme, right? So there are a lot of moving parts in the insurance sector. One is, of course, if I were to look at, let's say, last 5 years, not many people have made money, but also the period prior to that, this sector has seen a stellar run up and valuations were, of course, very, very high, right? So from here on, whether 100% FDI is going to make a huge difference to the sector is something which remains to be seen, right? Because the sector already has enough competitive intensity, and also many of the companies are stuck with products which actually are not very, very profitable, right? So there are these multiple challenges which these companies are facing in terms of delivering on overall profitability. So I think we need to focus on those aspects. We have to look at each company on an individual basis rather than taking a broader call on the sector based on, let's say, FDI limits being raised, and there are probably going to be more buyers for, let's say, insurance companies than sellers, and that may not necessarily work in the near to medium term, is my opinion.
I think, Naveenji, you are being more than generous when you say there has been a spectacular run up in insurance stocks. Nobody has made any money over the last 5 years. Let's get Tridip's view on this one. Tridip bhai, what do you think of insurance now, post 100% FDI? What would you buy, if at all?
It's uninsured, so the structural story is certainly there. But the question really here is that ultimately this will kind of bring in more competition, and that's probably the intention. Because whenever there is less competition, the transaction charges, etc., are on the higher side. So to that extent, as consumer of these services, you would have more options. But from an investment standpoint, the profit pool might be thinner per player, maybe 5 years now, if more players come in. The question really here is that is it easy enough for future players or many players to really come in? And that's why we'll have to wait and watch Overall, I think the regulations needs to be eased a little more before that happens. But it's a starting point, a step in the right direction in terms of making it more broad-based, in getting more competition in and more options for players, I guess. So, am I looking to buy on the back of this any insurance stock? Probably not. At the moment, we have in answer to your previous question, we have a consumption fund which is undergoing we are going through an NFO. That probably is one area that one could look to kind of add more in terms of sectoral stocks.
Okay. I'll ask Naveen to pick out some sectors and stocks for us. How are you looking at the government's announcement in the budget on, the tourism space and the focus on heal in India, the medical tourism and infra space that they have announced? So, are you looking at both tourism-related stocks, hospitals, and hotels at the same time?
Yeah. So if I were to look at, let's say, tourism as a space, that has been a huge allocation for us because we own a good amount of, I would say, that hotels in our portfolio because that's going to be very, very interesting. New airports coming up probably will lead to more number of hotels coming up. Second, of course, we also are travel and leisure is also another space that we have been very, very positive because that's getting to be a very very strong trend, right? So these two spaces and the kind of announcements which the government has made and combine that with the higher disposable income in the hands of middle class, I think this category looks very very exciting. It's already done well, but I think it will continue to do very well over the next couple of years, right? So maybe next year we'll also have the 8th pay commission that will also have an impact, right? So there are many, I would say, that triggers for this sector and this category to do well over the next 2 to 3 years.
This is a question which is again coming to you, Naveen. What's happening in SRF? Is this the first sign of maybe a turnaround in the chemical space, or am I reading too much?
See, if I were to look at SRF as a company and if I were to look at the whole chemical space, I would say that we'll have to little bit take the whole sector in a measured way, right? Because different products, different chemicals, right? They all have their own set of prices and trends which move. Uh, when it comes to SRF, there are two trends which are playing out. One is the rough gas prices have moved up, are likely to move up in the US market, so which is a positive for SRF. Second aspect, which is of course very very critical from SRF perspective, is their whole specialty chemicals businesses, right? I think that is also doing well, and they have a strong product pipeline. So SRF has been a stock which did very very well till 2021, and then it was sideways for almost 3 years, more than 3 years, and now we are seeing some bit of strengthening and of prices, right, of end products. So SRF looks interesting at this juncture. But having said that, how much upside is still left is something which remains to be seen. This is a stock that we own in our portfolio for quite a while. So I would say that we will be very, very measured in terms of looking at SRF from the current levels.
I think it's after 3 years that a flourish on the green side is coming on SRF. The price you see is a record high. The stock may not have corrected as much as many other chemical players have, but this is something that has to be kept in mind, and price is what the market believes in. A record high after many years on SRF. One stock that I'd like to mark is Zomato. Post the tax cut, Sakshi, a lot of activity happening on many stocks, and Zomato of course giving an opportunity again. The stock corrected all the way down to 220. In fact, almost yes, 204, 203. And this was from a high of about 305. Let's get Ashish Bhai into this conversation. Mr. Somaya, Zomato.
See, I think if you really ask me, we have been long-term constructive on it and pretty much owning it all through. And there have been, many ups and downs, right? After listing, then the acquisition of Blinkit, and now obviously the recent investment and competitive pressures. But I think long-term positive. We don't see, these are intermittent passing business challenges, but long-term we continue to own it.
Okay, let me go back to Tridip now and have you also pick out some key sectors and stocks for us in terms of where the EMS space, particularly customs duties being increased on the panel level but decreased on the raw materials part. How are you looking at the EMS plays, Dixons of the world, Keynes, Amber? These have been erstwhile favorites, volatile in the recent past. How would you look at these stocks?
I think the long-term story in terms of potential for EMS is similar to that of IT services that was there about 15 to 20 years ago. I think it's that big a potential that one can happen over a period of time. And there are teething troubles in the way to the manufacturing ecosystem would like to come about in this, and clearly this space has seen a bit of valuation correction over the last month or so. So I would say that not from necessarily from the budget standpoint, the more important trigger that I would be waiting to hear in more detail, maybe in the next couple of months, is the component PLI scheme, which is likely to come at some point, and the details of it and where they are being allocated. As and when that happens, that might mean this the broad basing of the sector, and they would stand to benefit from that. Positive on the sector. Maybe a lot more positive earlier. The currency valuations we've taken probably a bit of weight off, but we continue to be overweight in the EMS in our portfolios.
Naveen, let me come to you as well, and I want to understand from you, how would you really look at these PSUs, those that were eyeing the budget with a hawk eye, looking at some big announcements to be made, railways, defense, PSU stocks particularly. What would you do on those? They have actually been a tad bit disappointed, but they were just here and there, few announcements on maybe shipbuilders, again, some duties being slashed there, but no major announcements as far as defense or railways are concerned.
Yeah, so clearly the defense budget, I think, is not increasing much for FY 25-26. That's going to be a challenge area for sure. Second, combine that the macro is not supporting the defense companies at this point in time. Combine that with the expensive valuations which still many of these companies have, right? So from that perspective, I think these companies will face some degree of challenge in the near term. But having said that, this is still a critical area. At reasonable valuations, I would see that we would again start looking at defense as a sector, right? Because that's a sector that in the current world order we cannot ignore, and it can be stepped up at any time. It need not be through, let's say, a budgetary allocation, because if there is a serious need, then obviously the government will step up on defense spending. There is no doubt about that. But the challenge that we have seen is the valuations are just too steep still for us to have significant allocation and make meaningful returns. So that has been our challenge, and I think maybe this could provide an opportunity in the next 6 months.
Let me just take a detour into the markets. As of now, it's absolutely even Stevens. 1110 shares are in the green, 1173 are in the red. So it's a 1:1. Now we started with 19 stock indices in the green. About now 10 are in the red, led by the Nifty energy and IT and metal sectors that are seeing the heaviest profit booking. Apart from that, auto, FMCG to some extent, and of course the small cap and the next Nifty 50 are the ones in the green. Let's get Tridip into the conversation. Tridip bhai, I am very sure that your research team will work overnight into Sunday, and of course then come up with a document to see the best beneficiaries that the budget will throw up post the fine print. In your estimate, has the budget done enough to sort of put the economic survey on the right track, which now estimates the GDP growth between 6.3 to 6.8%? What is your view, sir?
So I think one of the things that we have been focusing on over the last few months is on consumption anyway. In fact, in my year-end piece, I had called out consumption to be the dark horse of calendar year 25. And what came about in the form of budget is a step in that direction. So to that extent, some part of stock picking with regards to the consumption basket is probably done. And as I said, we also have an NFO on consumption. But overall, so in terms of sectoral orientations, we are probably just about right oriented at the moment. But in terms of from a growth standpoint, has enough being done? My guess would be that at this point in time, it is a more balanced budget, which keeps the fiscal consolidation in check. I think this, along with a couple of rate cuts as we go along the year, would actually be kind of needed to back on track with regards to the numbers that you talked about. The composition of growth will probably change a little bit more towards consumption than capex stories that we discussed earlier. But I think some rate cuts might also be needed. So some help from the monetary side will also be needed to kind of get to our growth ambitions that we harbor for the current year. That's how I would look at it.
Tridip bhai, it is these NFOs, thematic NFOs, that have basically destroyed the sentiment on Dalal Street. It started with a defense fund and now you have a consumption theme also. जब तक AMCs ये बंद नहीं करेंगी लाना, तब तक selling रुकेगी नहीं.
डिपेंड करता है कौन से सेक्टर फंड्स की आप बात कर रहे हैं ओवरऑल. But yes, NFOs keep coming and going. Ultimately, it's an opportunity for investors to sort of come and go. But we were talking more with regards to sectoral allocations.
Absolutely, absolutely. I'm just pulling your leg, and both Ashish and Naveen are also smiling. All of us know, how the launch of thematic funds signals a top in the market. Nevertheless, be that as it may, we'll look forward to it. Final words from Sakshi?
Yes, I'll ask Ashish to really put in that for our viewers right there. Ashish, a lot was hinging on this budget to probably get the markets out of slumber. 4 months of losses is what we've seen, perhaps the longest streak of losses in last 20-23 years. And for especially those millennials and Gen Z investors, for the first time that they've seen, this kind of long stretch of loss. Do you think this budget has done enough to put the markets back on track, or are we still at the risk of losing where we are from at and we could slip further?
I'll tell you on a lighter note that, when you talk about spirituality, they say that सारे सवालों के जवाब हमारे अंदर है. It doesn't apply to stock markets. Every time FIIs sell or the market falls, we don't have to look for reasons within. If you really ask me, this fall started from 28 September 2024, and it started first with a minor feeling that, okay, there is reallocation to China, and then it very quickly became Trump trade. And then, you can see dollar appreciation, and you can see across the board emerging markets underperforming developed markets, more specifically the US. And if the dollar is appreciating, it's causing headwinds for every emerging market currency. So we are getting more the headwinds of US exceptionalism or a rise in US dollar, money moving to US. We are facing those headwinds much more than our reasons. If you really ask me, when the market started falling, we didn't have
the tax relief which has gotten to the investors. Do you think this will affect investment in the capital markets, and also consumption will increase?
Absolutely. I think there are three main pillars of this budget. One I call keeping more money in the hands of the consumers, the middle class. The second is having a focus on infrastructure, and third is having control over fiscal deficits. And the larger aspect which is being discussed is the more money in the hands of the consumer or the middle class. I think it's a brilliant way to also give some relief, but also ensuring that the middle class now not only consumes more but also invests more into the markets. Today, NSE has 11 crore plus unique investors, which account for almost 20% or 22% of all households in India. And out of 11 crore, almost 25% people are women. And so there is much more focus on investments. So large portion of this tax break which has gone into the hands of middle class will of course go into consumption, but that is also going to increase the profitability of some of these companies which work in those areas. But some of that amount which is available to the middle class is also going to come into the stock markets, because now literally the NSE has reached via mobile into every nook and corner. Only 30 pin codes out of 19,300 plus pin codes, only 30 pin codes do not have investors, and that's where I think overall this budget is going to give a great fillip to the culture of savings, but also culture of investment in the stock markets.
We were talking about stock market, so there was no talks regarding the capital gains and STT. Do you think that is the reason why market hasn't really seen much highs after the budget?
No, it's slowly, I think in some ways this was one of the shortest budget speeches of Honorable Finance Minister. This is her 8th consecutive budget and congratulations to her. I think this is a record of any sort for a consecutive number of budget presentation. But overall, many of the details which are usually spoken out during the budget speeches were not given, and then later on they started coming up like the capital expenditure expected and things like that. And so slowly people have come to terms with some of the this implications of those numbers, and that's where slowly you would have seen after the budget speech got over, the market has started going up, and today now again it has come into positive as we speak.
Government has also given credit guarantee for the MSME startup. So do you see this will affect the capex from the private side also, or how do you think the government capex will affect the whole thing?
The MSMEs have always been bulwark of job creation in India. Even in her speech, she said more than 7 crore people are getting jobs from MSME, but they also account for 45% of all the exports of the country. And that's where India has to become.
All right, so that was Mr. Ashish Chauhan, NSE CEO, speaking live with our reporter right there at the NSE, giving his reactions on the budget right there. But we also have some more guests joining in. We have Mr. Dheeraj Relly now joining in on the show, MD and CEO, HDFC Securities. Hi Dheeraj, good afternoon. Good to have you with us. Tell us, has the budget speech been in sync with what you were expecting, or are there still a lot of asks that went unheard?
Hello. I think the budget speech of almost 75 minutes reflected the experience and the maturity of finance minister. She could able to cover many sectors, and that too in greater details. There were key issues that were to be addressed. One of them were consumption. I think she could able to address that issue very well by leaving more money in the hands of taxpayers. We've seen that there has been some slowdown in the GDP growth that was having an overhang on all industries, particularly on the consumption and discretionary space. So that's something very good measure. Also, she's touched on a MSME and tourism sector through Udan and Heal in India and many more initiatives. So I think overall, I believe this is a pragmatic and positive and very balanced budget.
Dheeraj, and a very warm welcome. Balanced budget it is, and there seems to be, Sakshi, a lot of buying happening in all consumer related stocks. Look at Radico Khaitan, up 7% now, 23.34. Look at anything that is related to food. Devyani International, Bhikaji Foods, Zomato being the prime. Yeah, of course, both Zomato and Swiggy, all of them are gaining ground. And of course, we talked about the staple companies, which is Colgate, Britannia, Hindustan Unilever, Nestle. All of them are in fine shape. In fact, the Nifty's almost recovered a lot of its losses, now down just 11-12 points, 23,500 for you. And the intraday high was 23,611. We are at 2 p.m. An hour 30 left. Let's see how the market gives. Yes, disposable.
I think भाई रोटी कपड़ा के लिए हो गया, लेकिन मकान तक के लिए अभी तक नहीं हुआ है. तो I think real estate stocks are not doing well. So it's only food and
DLF at intraday high.
Okay.
Look at SBI cards.
Yeah,
5.2% higher, 821. This is exactly what the consumption theme that we were talking about. Dheeraj, in terms of what your research team has thrown up at HDFC Securities after a quick take on the budget, what could be the broader themes which investors can address in terms of the long side in the next 1 week or so?
So as of now, I think the knee-jerk reaction is coming on the more consumption stock, but I believe that the money that is left in the hand of the taxpayers will not only have an impact on the FMCG or a consumption space, it will have a wider impact on the discretionary space also. So discretionary space is something which includes tourism, healthcare, will also have a good positive impact. So overall, I think the key takeaway for me from this budget is that the government has a handle on the ground. They are well aware of the issues at the ground and they are willing to address the issues. I think that is very positive development. If you go into the more details and read more fine prints, I think you will get to understand that they are working on each and every sector, as well as like Sakshi was saying, nothing for the makan. So some of it will go to the EMIs for the housing loans as well, Sakshi. So with some lag, you will see some impact there as well. So what I am trying to just articulate here is that it's quite a balanced budget and has something for everyone. If you look at capital market space point of view, I think no tinkering with the capital gains or short term or long term or STT. I think these are steps in positive direction and are very pragmatic, give some continuity to the wealth and financialization ecosystem.
Fair point. I think we need to also respect the fact that the budget is a macro document and addresses the medium to long term concerns of the economy and perhaps tries to kickstart a slumbering sector as it has done in the FMCG space and the auto space. Dheeraj, in this entire consumption basket, which is led by newbie companies like Zomato, like Swiggy, new listings like Bikaji, Devyani International, so on and so forth. What would be the top pick at HDFC Securities in this space?
I would more go with the discretionary space rather than this consumption space. Consumption space is will already, I think, whatever volume growth or a premiumization that has happened. We are seeing some uptick in the rural rural consumptions. Urban consumption will take some more time. I would rather go for the discretionary sector rather than consumption as a space.
Okay, and in discretionary, what would you be picking?
I would refrain from talking about the stocks. I can give you a perspective on the macro and sectors level. I think what we are missing here is that continuity in the capex also. We are all looking at, we are all having an overhang only on the taxation related issues, continual thrust on the fiscal prudence and commitment to the capex by the government. They have been doing the heavy lifting in the capex. They will continue to do the heavy lifting of capex, and also with this decisive demand visibility, I think private sector capex should also pick up. That's something has been lagging for quite some time. That animal spirit should come out clearly in next few quarters.
Anything, Dheeraj, that you would avoid given the budget document is now public?
Sorry, I missed that.
I'm just saying that any sector, any space that you would avoid because it's been left unaddressed by the budget?
I think there was nothing for the IT sector as such. Rupee is depreciating. We are not seeing decisive demand coming in from the US and other countries. So that's one area for us to watch. We were negative and now we are neutral in the IT sector. So it is a wait and watch for us to see that how things will pan out. I think there was nothing mentioned for the defense and railways also. So I have not seen any mention of defense by finance minister. So I don't know what kind of an outlay will be there because these are trading at an expensive valuation. So maybe one can avoid defense and railways for the time being.
I think shipbuilding was mentioned in great detail. So maybe that is a space that can be looked forward to. But yes, I think in terms of just the speech itself, railway did not find mention. And that seems to be acting inimically to the broader markets. Dhiraji, let's also look at the possibility of a rate cut because later next week we have the RBI with its credit policy. What are your estimates on this one? Do you expect a rate cut in the offing? And if yes, what could be the quantum?
I think we will get couple of rate cuts in this calendar year. 50 basis point rate cut will happen in India. May not be the next week as a start point. RBI still may look at a wait and watch because Fed has been somewhat hawkish on the interest rates, and what consumption data we saw in US, it's looking pretty robust there as well. So from that point of view, we do not expect interest rates easing out in a hurry. But I believe that if you look at it, the sectors like tourism, I believe, should do better because there was a mention of expanding the Udan as well as Heal in India and spiritual and religious tourism. So that's and also including hotels into infrastructure in some of the areas.
And that's the reason why you see a bit of buoyancy in Indian hotels as also lemon tree. In fact, the entire hotel space, let me just revisit this in terms of the broader change. Yes, look at Park Hotels. It got, of course, Park is in the red. Okay. So there is a green tick on Lemon, which is 2.1% higher. Taj GVK is 2.4% higher. What are the sector leaders doing? I'll pay attention to Indian hotels, 3.5% higher. This is the infrastructure space that the government has added hotels in top 50 cities which have a religious bent. So please keep this in mind. There are lots of subsects to it. So Indian hotels is 3.5% higher, mainly because it's the largest chain of hotels, followed by of course East India Hotels, again up 4.5%, and that's 395. One stock that is buzzing, ladies and gentlemen, is Trent, beaten down dramatically after its entry into the Nifty. The stock is in a very decent uptrend, 6200 for you and 7.6% higher. Remember, this is also one of the beneficiaries of this 1 lakh crore bonanza that the government has handed out in terms of changing the tax slab for those who don't have to pay tax now at 12 lakh rupees. You won't give a view on Trent as a space, but retail. Look at DMart as well, Dhiraji. That is also buzzing a bit.
Yeah, so this is what I was mentioning some time ago, that it's not just the pure play consumption in the form of FMCG, because their volume growth may not come, but large part of this money which is left with the taxpayers will go into discretionary consumption. Some of it also will go into the investments and probably ease some pressure on the banks on the liabilities front also. Not that everything will go into consumption also. So in a whole, it will create a lot of positive environment, and this is a right thinking and steps in the right direction.
Okay. We'll be shortly joined by Miss Amisha Vora, Chairperson and MD at PL Capital, which is Prabhudas Leela. There she is. Namaste Amisha ji, a very warm welcome. We are again reconnecting, this time digitally. Last time I had the pleasure of meeting you in Mumbai. Great to have you. And of course we have
pleasure.
We have Dheeraj ji also with us from HDFC Securities. So
Hi,
this
Dheeraj.
is going to be an interesting discussion. Okay, first up, Amisha ji, your initial reaction to the budget. What do you think are 2 or 3 major plus points, and how do you think the market has reacted to it?
I think the biggest plus point is that their agility and their watch on the economy is as intact, and they took a bold move as every quarter of the economy was crying consumption slowdown. They could take a very bold move to put some money in the hands of masses, and I think that should be considered very positive. Second important point is, in doing whatever, the fear also was that across the states, the elections is fought too much on some freebies, but center has maintained their discipline in terms of the overall fiscal consolidation trajectory. So, which is also very positive in my view. Lastly, we see that somewhere the growth in capital expenditure is slowing down. But I still feel that overall, consistently maintaining, but for March 25, because of the elections where there is a huge slowdown, but consistently maintaining that 11 lakh, 11, 12 lakh crore kind of a budget will continue to support the economy. So, all in all, I think that it was once again a very good budget.
Fair point. Of course, in this kind of a backdrop where we have so much of global uncertainty in terms of supply chains, in terms of what Mr. Trump will do, to consistently maintain your capex, at the same time also offer a 1 lakh crore rupee SOP in terms of a tax giveaway is a credit to this government. Dheeraj, coming to you, do you in terms of the PLI benefits that have come in on the electronic DMS space, is this a sector that HDFC Securities tracks? If yes, what would be the one or two top picks from that one?
We are quite positive on the manufacturing space. We believe that the PLI with some lag has its own benefits, but I won't be able to comment stock specific as I mentioned some time ago, but we are positive on this case. I think in manufacturing space, we are still to unleash our animal spirit and more efforts are to be done. I think two areas which I believe were not covered here, spend on R&D, very limited mention was there. Like we've seen that how China has taken a leapfrog in the generative AI and AI space. I was expecting personally that there would be some more mention on that front, and we should do more investment by government as well as private sector. So there has to be more encouragement there. Also, I think divestment and other routes of financing the capital expenditure is something we are missing in this budget. Continuity in the capital expenditure thrust has been positive, and I think that will go in a long way. It's high time that we should get some private sector capex to kick in now.
Okay. Amisha ji, now that the budget document is public, what has the PL Capital Research team come up with in terms of top picks?
So, of course, the analysts are still working on it, but some of the obvious ones which were part of our topics and which gets further supported by the budget move continues to be auto as a sector, where we had Maruti, Bajaj Auto, and M&M in our topics. The underlying reason was that their product portfolio was becoming most robust, and within that, the high value added products were doing better. Now, as the disposable income increases, both Bajaj with its EV offering and Maruti with its new EV offerings can have better traction in terms of volume. So they continue to be part of the overall portfolio and recommendation. We were, of course, more bullish pre-budget on capital goods side of it, because we thought that the slowdown in spending which happened because of the elections across last year, now it has started picking up. As you know, December was a good month in terms of government spending, and that would have continued. So we were pretty bullish on capital goods side. We continue to remain, but I think that the large mutual fund portfolios will get slightly rebalanced in terms of domestic consumption, which could be across the board, as what we said, in terms of whether experience consumption, or which means hotels and airlines, or it could be in terms of last mile, which is Zomato, Swiggy, or in the middle layer where we see autos, companies like Voltas, and so consumer durable, entire basket, some of the stocks and companies which are having any which way good plans, I think will continue to remain in our portfolio.
Mutual fund rebalancing towards consumer segment is a very well thought of point, Amisha ji. And it's being visible on the screens. Look at the volume Zomato has clocked today. Let me just mark that for you. Zomato is about 1300 crores. This is par for the course. But yes, we hear you, and that's a very sensible way to look at stocks. Both Zomato and Swiggy have corrected substantially in the last 3 odd months. Zomato moving down from almost 310 to a shade above 200, and you see the move that we've seen today. So that's a good one, Amisha ji. I'd also like to mark Exide. The government has come up with some processes on clean technology, manufacturing of solar PV, battery cells, so on and so forth. And it seems that the market has taken this to heart. And look at Exide, 4% higher at 388. Dheeraj ji, in the ancillary space, the auto ancillary space, what would be in terms of stocks the top picks at HDFC Securities? I don't want you to comment on the nature of the stock, but maybe just the name.
No, basically, the discretionary sector is something we are positive now, and auto is one space. I was actually just coming from another event to office to attend this call, and happened to pass through a Maruti Suzuki showroom, and I can there were few buyers and they were celebrating. So that kind of an exuberance is there. Not that the immediate impact of the budget, but overall, leaving this money in the hands of investors will have a positive impact, as Amisha ji also mentioned about hotels and aviation sector. Similarly, on the auto sector as well. And also for the banks, they will lend now more, and they will also open up their purse for the unsecured space also, which was also, we've seen some tightening in there also. So that will lead to a even cascading impact in the overall consumption, and that will drive the auto sector also. And within the auto sector, then you will have all ancillaries. Having said that, you mentioned about the some soaps on the green side. My take is that the lithium batteries or investment into the green space is going to continue, and government will have to have a continuous thrust on the same. Everybody will buy second or third car as an EV, and we believe that this will remain as a mid to long term theme.
जी, धीरज जी कुछ तो दया कीजिए, सेकंड थर्ड कार आप खरीदवा रहे हैं, पार्किंग स्पेस नहीं है दिल्ली में, आपके मुंबई में तो बिल्कुल भी नहीं है.
देखिए, इंडिया में यू कैन नॉट स्टॉप द ग्रोथ. देयर आर द एस्पिरेशन ऑफ इंडियंस इज बीन ड्राइविंग द इंडिया, एंड आई थिंक if you look at everything which is more concentrated to within the economy facing, that's where the robustness will be there. Not so much on the exports, though she mentioned about the MSME and seafood export and many other areas. But having said that, we are still struggling to increase our exports significantly. But when it comes to economy facing, we should have a animal spirit coming out very clearly. And we should not stop here. I think this is just a beginning in this direction, and there will be more off the budget measures that will come to boost the consumption also.
Okay, Amisha ji is so far above this conversation. Second, third car, she is looking at her 11th car. But nevertheless, let's get her into the conversation. In her opening comment, she mentioned Maruti as one of her top picks.
Let me interrupt. I am thinking if we make good roads, I might as well use a bicycle. I'm done with cars, by the way.
I'm sure many people know that the distance between where Amisha ji stays and her workplace is bicyclable. So that's the reason why she says, but fair point. And I know of bicycles that are priced more than an entry level car. So I'm sure Amisha ji will favor that. But yes, I think health is something that is also favored in this budget, especially medical tourism. Look at how hospital stocks are reacting. I'll request the PCR to fire Medanta, Apollo Hospitals, Indraprasth Medical, and the likes of the other hospital chains. Amisha ji, this space, Hospital space is doing very well. Look at Max Health, look at Indraprasth Medical, and given now this tailwind that is coming via the budget, what would be PL's top pick here?
Healthcare as a segment, and particularly hospitals, if you know, we have almost 8 stocks under coverage.
Yes.
And pre-budget and year before also, we've been consistently recommending this space with the rising, per capita, the awareness, be it in precaution or action, both ways, healthcare will continue to do well. And we continue to remain positive. And Aster DM is one of the stocks that we have been recommending very aggressively, apart from most of the others also, where we have a positive bias.
And of course, many, in fact, all hospital chains have been showing a higher average revenue per operating bed over the last several quarters, and this has been one space where perhaps not much of profit booking has happened. So please now keep an eye out because of the tailwind in the budget, which intends to spend 25,000 crore rupees boosting not only medical tourism but also medical college infrastructure. If you look at the last 10 years, the government has added about 1 lakh medical seats across the country. Hotels doing very, very well. I think you will have a digit change today in Indian hotels. It will go past 800. So that is something to look at. Amisha ji, M&M, the third stock that you mentioned in your top picks is also almost 3100, 3.5% higher. A very strong EV portfolio on M&M. Amisha ji, how does this stock look at 3100?
No, I think the continuous focus, the revised focus of the management and the kind of portfolio of vehicles and the pipeline that they have, I think the stock will continue to do well. And most importantly, while their PV portfolio and the car, but passenger vehicle portfolio is doing better, heartening is that their agricultural equipment portfolio is not doing so bad, then the growth there is also maintained. So both put together, the stock continues to do, the numbers continue to turn out to be good, and we continue to remain still bullish on the stock.
Okay. The Nifty is back in the green, ladies and gentlemen, and how? 38 points higher, 23,550 is back on the board. Remember, it went all the way down to almost 23,400, and from then, actually 23,300, and from then on it's a slow but steady recovery, up 250 points from an intraday low, and is now most likely to scale a fresh intraday high. We had 23,632 in the morning. Amisha ji, Trent came into the Nifty, was beaten black and blue, went all the way down to 5,800, and with this announcement of a tax benefit coming to the retailers, Trent is shooting up. Is this also in your coverage?
This is not under our active coverage, but this being such a one of the key jewels like Titan of the Tata Group, we know the broad story, and I believe that their newer format of Zudio has been doing so well. This kind of a budget and consumption push or some other impetus here and there is good, but the overall underlying story is an extremely good story. And it will continue to pan out over not next just 1 year, but I think over next 3 years also. So this could be a definite part of anybody's portfolio.
Okay. Dheeraj, what do you make out of the underlying granularity of today's market uptick? The advanced decline, let me check. Last I checked, it was 1:1. Now almost 1,300 shares are in the green and 1,000 are in the red. What do you make of the market's reaction to the budget? A bit of a downtick right in the middle, and now it's recouped all that more, and we still have about 1 hour left.
I think
think in the past we've seen a significant correction in the particularly in mid cap and small cap space. When we entered this calendar year, we had an overhang of valuation, froth in the valuation, also on the macro environment. We've seen the outcome of US elections. We've now seen the policy action coming in from US also. And directionally, we have better visibility. Budget is also out of the equation now. So now everything will move towards the now tracking more of our
Yes.
earning and valuations and bottom up stock picking. I see, you know, recovering from 22,839
Exactly.
odd levels. Yeah. So now we are well placed to look at an upside. I think the confidence of the retail investor is very much intact. It is visible from the
Yes.
IP inflows. It is visible from the in investments into mutual funds and insurance companies. What we need to see is that how we can attract foreign portfolio investors. I think there has to be some work done in that space. It's only a matter of time that we will see the inflows coming back to India.
I think that's very well put. The missing piece is the foreign portfolios investors insistent selling. Amisha ji, you've been in the market for a very, very long time. How do you see this, the market action over the last 5 days and in particular on budget day? What enthuses you?
See, market dynamics are something like this, that FIIs are net long only 11% and short 89. Their FNO put call ratio is in this fashion. So, which means that from here on, they cannot consistently go short or hedge their portfolio. And the way budget is given fillip to consumption, I think that it will trigger a little short covering as Monday or next week starts, and that will further give legs to markets really. I'm not discounting the fact that with the Trumps coming in and US economy and currency both doing better, there is a little headwind for India. As also China continues to remain a strong contender with a very, very attractive valuations that they are in. Having said that, I don't think at this juncture Nifty is showing extreme premium over its last 10 years averages. And I don't see a big threat of any large correction. Of course, with the slowdown in capital expenditure which happened last year and the consumption slowdown, numbers are and credit growth numbers
Right.
were all taken a little backseat. But I think that on a base level, as we will see over the next 3 quarters, we will start even getting support from that. So I continue to remain moderately bullish.
Right. With that, Amisha ji and Dheeraj ji, thank you so much for your time. And we all look forward to the Mercedes cycle that Amisha ji will be buying and posting it on her Twitter feed. Thank you for your time.
Perfect. Thank you.
As good as a time as any to welcome my very dear friend Shri Vijay Kedia, MD at Kedia Securities, and also one of the best participants in the market. Namaste Vijay ji, आपका बहुत बहुत स्वागत है और बताइए क्या देखा बजट में, कहाँ सा तीर निशाने पे लगा और कौन सा ऐसा तीर जो समझिए निशाने से चूका?
नहीं, ऐसा है कि मेरे को बजट के पहले बहुत ज्यादा कोई एक्सपेक्टेशन नहीं थी, तो बहुत ज्यादा एक्सपेक्टेशन नहीं रहती है तो आप फिर हमेशा मजे में रहते होगे। जब हमको कोई आकांक्षा ही नहीं है तो फिर हमको क्या सोचने का है। तो और लेकिन बजट जो जैसा सोच रहा था उससे अच्छा आया, क्योंकि जिस तरीके से उन्होंने 12 लाख रुपया का जो भी एग्जेम्पशन लिमिट जो बढ़ाया है, वो एक जैसे जीएसटी का रिफॉर्म हुआ था एक फॉर एग्जांपल, उसी तरह का एक रिफॉर्म है, उसी तरह का मिलता जुलता उतना बड़ा रिफॉर्म है, क्योंकि 1 लाख करोड़ रुपया समझिए सिस्टम में आएगा, तो वो ठीक है, कंजम्पशन को बढ़ाएगा, सब ये बोलते हैं, सब अच्छी बात है, वो चाहे एफएमसीजी में आए या कहीं भी आए। लेकिन मेरे को क्या लग रहा है कि अपने इतनी बड़ी जो इकोनॉमी है ना, जो सर $4 ट्रिलियन की इकोनॉमी है, उसके अंदर में ये जो आया है और जहां पर हम आज खड़े हैं और जिस गति से हम बढ़ना चाहते हैं और जिस गति से हमको बढ़ना चाहिए, हम बात बात में बता देते हैं कि चाइना से कंपैरिजन कर देते हैं, बोल देते हैं कि मोस्ट क्या रैपिडली राइजिंग इकोनॉमी, फास्टेस्ट राइजिंग इकोनॉमी हमारी है। तो ये मेरे को ऐसे लगता है सर कि हम अपने आप को थोड़ा सा छलावा देते हैं कि हम फास्टेस्ट राइजिंग, आप परसेंटेज वाइज फास्टेस्ट राइजिंग आप बताते हैं ना, 6.5%, 6% या 7%, उसके हिसाब से बताते हैं, लेकिन आपका बेस बहुत छोटा है कंपेयर, जो बार बार हम चाइना चाइना से कंपेयर करते हैं। तो कमिंग टू योर पॉइंट, तो मेरे को लगता है जो भी ये छूट आई है, ये इससे मेरे को कोई बाजार के मार्केट के लिए, ये मिडिल क्लास के लिए अच्छी बात है। 1 लाख करोड़ रुपया सिस्टम के अंदर में आएगा, ये बढ़िया बात है, इकोनॉमी के लिए अच्छी बात है। लेकिन मार्केट में इससे कोई बहुत बड़ा फर्क पड़ जाएगा, कोई तोड़फोड़ हो जाएगा, नया इंडेक्स आ जाएगा, ये जो भी माहौल चल रहा है ये चेंज हो जाएगा, ऐसा मेरे को नहीं लगता है सर।
जी जी जी, बात तो आपने पते की है विजय जी, लेकिन क्योंकि आपने मेरे से ज़्यादा बाजार देखा है और आपका तजुर्बा हमसे बहुत बेहतर है, ये बताइए पिछले 6 दिन की जो आप बाज़ार में हलचल देख रहे हैं, ख़ासकर 4 महीने की गिरावट के बाद, इस बजट को मद्देनज़र रखते हुए क्या जो बुरा समय था वो पूरा बीत गया या अभी भी पाइपलाइन में कुछ बम वम पड़े हुए हैं?
नहीं, मेरे को लगता है सर अभी पिक्चर अभी बाकी है, ये इतनी जल्दी खत्म नहीं होता है। ये जो मार्केट इतनी तेजी से गिरा है, और आप देखिए जो बढ़ता है तो एक एक कदम बढ़ रहा है, जबकि गिरा तो एस्केलेटर से नीचे आया, और बढ़ता है तो एक एक कदम 400 पॉइंट बढ़ता है। पहले आप तो सोचिए 1500% मार्केट गिरता था, 1500 पॉइंट बीएसई इंडेक्स, और 1500 पॉइंट 2000 पॉइंट रिकवर होता था। आप उस समय की मार्केट का चाल अगर आप देखेंगे तो वो अलग ही एक तरह की चाल थी, क्या फास्ट चाल थी। 2000 पॉइंट गिरा तो 2000 पॉइंट बढ़ गया। अभी बढ़ने के बाद में गिरने के बाद में बढ़ने में मार्केट को संभलने में थोड़ा टाइम लग रहा है, वो बूंद बूंद करके वो स्टेप स्टेप करके बढ़ रहा है वो। तो ये मार्केट में दिखा रहा है कि मनोबल की फिलहाल अभी मार्केट के अंदर में कमी है, और शेयर्स जो एक्सपेंसिव थे ऊपर से, वे थोड़े से अभी समझिए रीजनेबल वैल्यू पे आए हैं। लेकिन ये सारा शेयर बाजार कोई रीजनेबल वैल्यू पे आ गया हो ऐसा मेरे को लगता नहीं है। मेरे को लगता है अभी थोड़ा और कंसोलिडेशन होना बाकी है।
चलिए, ये जो केडिया साहब ना कहकर कह चुके हैं वो आपको बातों ही बातों में समझ जाना चाहिए। बहुत अच्छे गायक हैं और बहुत अच्छे शायर भी हैं, तो उस तरीके का भी जायका आपसे लेते हुए दिखेंगे। विजय जी, ये बताइए पिछले 3 महीने 4 महीने में आपने कहीं अपने जो पोर्टफोलियो है उसमें कुछ काउंटर्स को नमस्कार किया हो, जहाँ पर वैल्यूएशंस बढ़ गई हों उनको ट्रिम किया हो, या कुछ नई चीज़ ऐड करी हो, तो उसका जिक्र कीजिए।
नहीं, मैंने कुछ मेरे जो शेयर्स हैं, कुछ जो मैं उनमें थोड़ा सा मैंने ट्रिम किया है पिछले 1 महीने में, 30-40 दिन में समझिए, कुछ मैंने उसमें जरूर मैंने ट्रिम किया है। और
पूरा करने वाला बजट, ये हर भारतीय के सपनों को पूरा करने वाला बजट है। हमने कई सेक्टर्स युवाओं के लिए खोल दिए हैं। सामान्य नागरिक विकसित भारत के मिशन को ड्राइव करने वाला है। ये बजट एक फोर्स मल्टीप्लायर है। ये बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा। मैं वित्त मंत्री निर्मला सीतारमण जी और उनकी पूरी टीम को इस जनता जनार्दन का बजट, पीपल्स का बजट, इसके लिए बहुत बहुत बधाई देता हूं। साथियों, आमतौर पर बजट का फोकस इस बात पर रहता है कि सरकार का खजाना कैसे भरेगा, लेकिन ये बजट उससे बिल्कुल उल्टा है। लेकिन ये बजट देश के नागरिकों की जेब कैसे भरेगी, देश के नागरिकों की बचत कैसे बढ़ेगी और देश के नागरिक विकास के भागीदार कैसे बनेंगे, ये बजट इसकी एक बहुत मजबूत नींव रखता है। साथियों, इस बजट में रिफॉर्म की दिशा में महत्वपूर्ण कदम उठाए गए हैं। न्यूक्लियर एनर्जी में प्राइवेट सेक्टर को बढ़ावा देने का निर्णय बहुत ही ऐतिहासिक है। ये आने वाले समय में सिविल न्यूक्लियर एनर्जी का बड़ा योगदान देश के विकास में सुनिश्चित करेगा। बजट में रोजगार के सभी क्षेत्रों को हर प्रकार से प्राथमिकता दी गई है। लेकिन मैं दो चीजों पर ध्यान आकर्षित करना चाहूंगा। उन रिफॉर्म्स की मैं चर्चा करना चाहूंगा जो आने वाले समय में बहुत बड़ा परिवर्तन लाने वाले हैं। एक, इंफ्रास्ट्रक्चर स्टेटस देने के कारण भारत में बड़े शिप्स के निर्माण को बढ़ावा मिलेगा। आत्मनिर्भर भारत अभियान को गति मिलेगी। और हम सब जानते हैं कि शिप बिल्डिंग ये सर्वाधिक रोजगार देने वाला क्षेत्र है। उसी प्रकार से देश में टूरिज्म के लिए बहुत संभावना है। महत्वपूर्ण 50 टूरिस्ट डेस्टिनेशन, वहां पर जो होटल्स बनाएंगे, उस होटल को पहली बार इंफ्रास्ट्रक्चर के दायरे में लाकर टूरिज्म पर बहुत बल दिया है। इससे हॉस्पिटैलिटी सेक्टर को, जो रोजगार का बहुत बड़ा क्षेत्र है, और टूरिज्म जो रोजगार का सबसे बड़ा क्षेत्र है, एक प्रकार से चारों तरफ रोजगार के अवसर पैदा करने वाला एक क्षेत्र को ऊर्जा देने वाला काम करेगा। आज देश विकास भी विरासत भी इस मंत्र को लेकर चल रहा है। इस बजट में भी इसके लिए भी बहुत महत्वपूर्ण और ठोस कदम उठाए गए हैं। 1 करोड़ पांडुलिपियों के लिए संरक्षण।
That, ladies and gentlemen, was Prime Minister Narendra Modi highlighting the budget benefits, in particular those from the shipping sector and the hotel industry, both of them doing fantastically well in the markets. But we are now blessed with the presence of Mr. Saurabh Mukherjee, founder and CEO of Marcellus Investment Managers, and a little later we'll be joined by Mr. Balasubramanian, MD and CEO of Aditya Birla Sun Life AMC. Namaste Saurabh ji, a very warm welcome. There is this slight smile on your face. Are you happy with the budget or does it leave a lot to be desired? क्या बात है, चाय भी चल रही है, मैं भी मंगवाता हूँ।
तो शैल जी, दिन की शुरुआत में I began the day by saying मेरा विश लिस्ट था मिडिल क्लास टैक्स कट, चेक। मेरा विश था डीरेगुलेशन इंटेंट होना चाहिए, चेक। राइट, सरकार ने पूरी कमेटी लगा दी है डीरेगुलेशन के लिए। और मेरा विश लिस्ट था रेवेन्यू एक्सपेंडिचर ग्रोथ इन डबल डिजिट्स, जो लास्ट 5 साल से हुआ नहीं था। एफएम ने चेक कर दिया। और मेरी इच्छा थी कि कैपेक्स ग्रोथ इन सिंगल डिजिट्स, आई थिंक थोड़ा ज्यादा हो गया ये सरकारी कैपेक्स, 30% कैगार लास्ट 5 ईयर्स में थोड़ा ज्यादा हो गया था। वो वाला कैपेक्स ग्रोथ आई थिंक एफएम ने 10% कर दिया है। अगर वो 8 या 9 होता और बढ़िया होता। बट मेरे 4 ख्वाहिशों में से 3.5 FM has delivered on. But jokes apart, I think this is a decisive change in the NDA's policy. We've seen a de-emphasis on government capex. We have seen a re-emphasis on the core vote banks, which are the poor, which are small business owners, and the middle class, right? So I think the 2024 election message has been taken on board, and it's quite remarkable. Already they're preparing for 2029, right? The core vote bank, SMEs, poor and middle class, पूरा फोकस उनके ऊपर है. In spite of a massive windfall from the RBI, the government has de-emphasized capex and chosen to fiscally consolidate, जिससे I think RBI rate cut का पूरा दरवाजा खुल जाता है. So kudos to them, and sign of the political intent. They are so determined that 2024 के जो इलेक्शन के मैसेजेस हैं, that they're not letting it go. So happy as an investor, but also I think happier as an economist, Because I think the last 4 or 5 years were a little strange in the way government capex had been ramped up.
ओके सौरभ जी, क्योंकि आप दिल्ली से ताल्लुक़ रखते हैं और यहाँ के एक बहुत जाने माने शायर थे मिर्ज़ा गालिब साहब, उन्होंने 2 लाइनें कही थी, हज़ारों ख्वाहिशें ऐसी कि हर ख्वाहिश पे दम निकले, बहुत निकले मेरे अरमा फिर भी कम निकले। अब आपके 4 में से 3.5 ख्वाहिश पूरी हो गई। ये बताइए आगे क्या? हैज़ द बजट सेट द टोन फॉर possibly an uptick in the market, or is more pain expected?
I think, look, we've had 3 good years from the economy. We had 3 good years for earnings growth. Earnings growth has decisively conked off. The cooling down in earnings growth that we have seen in the last 5 quarters, Shailji, that has actually no precedence in Indian history. If you leave aside Lehman Brothers and COVID, you'll struggle to find a period in India's history where in 5 quarters, Nifty EPS growth has gone from 30% to 5%, right? These sorts of cyclical earnings slowdown don't just go away in 1 or 2 quarters. I think we've got a few quarters of weak earnings growth ahead of us. The consumption stimulus today, the middle class tax cut imparts roughly 1.5 lakh crore consumption stimulus. That's 1% of GDP. That will give a fillip to the economy. But by the time the fillip to the economy comes, I think we'll be another 2-3 quarters out. Given that valuations are elevated, right? Nifty forward P22 hai, long-term average 17 ke mukable, I think there is. I think the market will struggle going forward, but the direction of the market, i.e. the composition of winners in the market, will decisively shift away from capex-centric plays towards more consumption and export-centric plays.
Okay. We also have Mr. A. Balasubramanian, MD and CEO of Aditya Birla Sun Life AMC. Namaste, sir, and a very warm welcome to you. Your first reaction to how this budget has panned out. What were the hits and what were the misses?
I think there are many hits, if I have to say it with a high level of confidence. First and foremost, fiscal, which is now been projected at 4.4%. It's my view is a bold step, especially at a time where the booster is being given for improving the consumption in the country by way of tax cut. And second, the capex continues to remain similar kind of budget, which essentially means making the fiscal at 4.4%. It also shows the confidence of the government in terms of the steps that they have been taking for improving the tax to GDP ratio. This is something is definitely give them a edge over them. And second is, my belief is the agriculture sector is one of the largest sectors in the Indian economy, and giving significant emphasis on agriculture sector, both from the point of view of increasing the farm output, and also the building the skill development that is most needed for people to pursue their career in the agriculture sectors. Given the fact the next 4 or 5 years, agriculture sectors can be good turnaround sectors. Also providing employment through the tourism sectors, giving emphasis that they are given on tourism, which also can provide to large pool of people who are in need of jobs. So that's also something I see as a big positive.
Right, sir.
And the last but not the least is I think the bringing in some kind of high level of focus on bringing consumption-led booster that should come from the economy. That finally is being recognized itself. My own belief is it's a good move from the finance minister.
Okay, let's get Saurabh into the conversation. This 1 lakh crore benefit that taxpayers have got via the rising of the tax slab. Saurabh, in terms of sectors, would Marcellus have a view on how it changes the dynamics of the food space? Look at Zomato, look at Swiggy, look at how SBI card is moving up, look at Trent. How do you react to this development in terms of more money coming into the hands of the consumer and probably that getting reflected in the markets?
I think that there's 3 ways to look at this tax cut, right? Firstly is bilkul basic consumption, right? FMCG volume growth has been 2-3% now for several quarters running. I think 4-5-6 quarter ho gaya hai. If you put 80,000 rupees extra in the hand of pretty much every taxpayer, I'm pretty sure a few more packets of biscuits, toothpaste and soap will sell. I think the FMCG volume growth gets an uptick. I think that's a simple one. Secondly, if you move to slightly bigger ticket items, quick commerce, food delivery, I think similar. there will be benefits. Given the elevated valuations of the QCOM stocks, I'm not so sure how easy it is to translate this into share price action. I think the QCOM stocks probably are benefiting more from the announcement that gig workers will be included in PM Jan Arogya rather than the tax cut per se. Third is we come to sort of consumer discretionary, जिसको बोलते हैं, right? So apparel benefits trend is a big part of our portfolios. We are happy to see trend do well, but I think one level higher is I think perhaps even more meaningful. I think auto will get a benefit. Remember, small entry level cars, right? Bhargava Sava Maruti has been saying for several quarters now the entry level cars,
Correct.
10 lakh ke niche gaadiyan have been struggling. I think that will get a fillip, and so will two wheelers, right? And we've been long standing shareholders of Eicher, so two wheelers will get a fillip, as will entry level cars. We don't own Maruti, but it's easy to understand why Maruti will be a significant beneficiary here, right? So FMCG में Tata Consumer हमारे portfolio में है, consumer discretionary में we have Trent as a play on that, and then slightly upwards Eicher Motors, both as a play on the two-wheeler space reviving, and also as tractors. Tractor demand was already pretty healthy, but the pro-farming aspects of the budget, the oil seed mission, the pulses piece, the irrigation facilities that the FM spoke about, should also help the farming sector. So overall, I think consumption and non-urban consumption, including non-urban consumption, should get a nice fillip. And the post-COVID ravages that we had seen, in small ticket consumption and in non-urban consumption, I think those gradually fade away. Those nasty memories fade away, and we go back to where we were in 2018, 2019.
One thing that also needs to be more, put into perspective is brown goods makers. Look at Blue Star, look at Voltas, look at Whirlpool. That is also look at Havells. This is also a space which has come up because of this tax cut, and that is something that needs to be also appreciated. Bala sir, coming to you, a rate cut later this week, later next week?
Yes, some of this is the monetary policy. From RBI point of view, definitely they will watch out on how well we are putting a roadmap on FRBM Act and fiscal consolidation. Definitely is the budgetary provisions and projecting 4.4% would provide big comfort to RBI monetary policy. And second is broadly what is being budgetary provisions are not inflationary in nature, but at least will bring back the growth momentum which Zarabi was saying. And so that is being the case, RBI monetary policy, which is on 7th of February. There's a high probability they will not only, of course, ease the liquidity, which is the most needed of the hour currently. They may also consider a rate cut, which in my own personal belief is, I'll not be surprised if they go for a 50 basis point rate cut, given the fact that I think the next 2 years of roadmap, both on fiscal consolidation as well as the large debt to GDP kind of numbers which the government of India has, the finance ministry has put, all of them should give enough comfort to monetary policy authorities, wherein the government borrowing does not crowd out the private sector borrowing. And given the fact that India needs now growth on credit side come back, as they have tightened last few years, I think if it has to come back, then it has to be led by interest rate favorable cut.
Right.
So my gut feeling is 50 basis point rate cut we should expect. One should not rule out, I would say.
Okay. Bala sir has been one of the best bond traders that I have had the pleasure of knowing in the last 25 years. And in the opening comments that Saurabh gave us, he said that we have an opening to a rate cut perhaps later this week, and a journalist likes nothing better than a contrary opinion on his shows. So Bala sir has made a point, and now Saurabh will defend his position.
So look, I think the RBI should be pushing through a rate cut, perhaps not 5th of February, but over the next couple of months. The reason they might do it over the next couple of months rather than 5th February is, I think the pounding of the rupee, they might want some breather to the dollar appreciation and the pounding of the rupee. If Trump throttles off on his tariff threats, I think that gives the RBI the opening to step up and push the rate cut through without jeopardizing the rupee sliding further. But it's very difficult to see how the government can push through this sort of punchy consolidation without the RBI having to play its role in stimulating the economy. Therefore, my reading is in next 2 months, we will see the beginning of the rate cut cycle. Just one caveat here, all the stocks that I'm mentioning, and in a way, this economic position that I'm mentioning is
Yes.
Marcellus' position, I and my parents are financially invested in all of this.
Yes, absolutely. We understand that what you talk about is the portfolio of the company. Bala sir, one view that I would like to take yours on is this discretionary spending now increasing in the economy. There was this talk of private consumption slipping below GDP growth, somewhere to the extent of 2.5, 3% is the number that we had. You also wear one more hat, which is from the AMFI side. Now tell me, do you see SIPs slowing in the coming months, given the fact that the retailer is now getting a whiff of perhaps not all is well with the markets?
The way I see the SIP is something now is becoming the way of investing. That at least one good thing that happened for the industry is irrespective of what the market conditions, SIP now become quite regular. Therefore, I would assume that SIP's gross subscriptions would continue. But having said that, investors are also smart. Whenever we have seen historically, the 1 and 3 year return gets reduced and goes below the single digit, there is a general tendency for either the SIP to be stopped for temporarily, or they can hold back the SIP incremental investment and come back a little later. I think this is the way generally I see a behavior of investors coming in. But having said that, one bigger trend that I think mutual fund industry is witnessing is the number of investors who now want to get into the market on the basis of the correction are also equally high. I think if you look at the whole industry, there's only about 5.5 crore unique customers that we have. We still have a long way to go to get to the number of about 15 crores unique customer base, which essentially means that for every one existing investors, you will find one new investors coming in. As long as the trend continues, I think SIP may not disappoint too much in terms of flows continuing in the industry. I think we'll probably see the flows coming in, but marginal reductions could happen by way of expiries, cancellation of SIPs. We generally see that trend even today also. In the current market volatility, SIP cancellations have gone up. But that doesn't mean that net inflows and SIPs, it gets reduced significantly.
Okay. Saurabh, I'll request you to now take off the economist hat and wear that of a market observer. How do you see the market internals and dynamics over the last 6 days, as also in particular today?
I think my reading is that the FII selling pressure is not going to go away so quickly. This is a good budget. This is a budget that will stimulate economic growth. But the translation of economic growth to earnings growth, the translation of economic growth to nifty earnings growth will take a few quarters. And given that valuations are elevated, I think there will be more selling pressure on the market in the coming months. So at the overall market level, I would urge those who are watching to be circumspect, to be careful. But as I said, the composition of winners in the market are quite clearly going to change. Given that we will have 2 years of zero growth in government capex, that entire ecosystem of capex and PSU plays and so on, that will be on the retreat. That's roughly 60% of the Indian stock market in different ways is linked to capex plays directly, indirectly. That piece of the retreat, and on the upward will be consumption and export centric plays.
Okay. So you see, in very simple English, you see money moving away from government PSUs that were capex oriented towards consumers. Am I right?
And I also see money moving away from private sector companies who are catering to government capex, right? So the capex related ecosystem, 60% of the market is capex wala ecosystem. Money will move away from that. It'll move into consumption. It'll move into exports, IT services, pharmaceuticals, light industrials, and the entire FMCG, apparel, auto space that we were discussing.
Okay. Bala sir, in your estimate, where will fresh money come into in terms of sectors, in terms of broader industry places?
I think broadly, the money will come into the more like asset allocation fund with got a mix of equity and fixed income, gold and silver, which is basically multi asset allocation fund. That's where I think incremental money would come. When it comes to the question of market, clearly if you look at the financial sectors have taken a 2-3 years of consolidation, and valuations have become relatively at comfortable positions. With the rate cut expectation from RBI may also be more favorable for banking system to get revived. I would assume the banking and financial sectors which is somewhat of benefit. I think consumption-driven companies again have gone through 2.5 years of pain period. We should see some sort of bounce back coming in the sectors. Valuation is again favorable. At any kind of uptick can only lead to the incremental volume growth coming in for them, so they're more favorable. I think sectors like real estate, e-geeks have been one of the sectors where the government also has given reasonably good push. I think we should see that as well as hospital sectors, given the fact that tourism, a lot of push is being given. These are some of the sectors, at least you will see earnings expected improvement and net growth, I think, would come.
Mr. Bala, Sakshi this side, warm welcome, good afternoon. Good to be speaking to you on the budget day. Although you must have discussed a whole host of aspects, I just want to ask you, how would you rate this budget out of 10? Where does it, come in on the scale?
Interestingly, actually, I rated on a 1 to 10 scale 9. The reason is I gave after the highest ranking I had given. For one simple reason, this is a budget. You are asking for fiscal reductions, it's coming. You're asking for consumption boosted by way of tax credits coming. Capex is not reduced. Government capex continues to remain the same as last year.
Yeah.
And on top of it, debt to GDP number that they are putting for the next 3 years, I think more comforting. I think all in all basis, if you look at it, there are no what do you call the numbers which are doubtful for you to actually add the math whether it will come to about 4.4 or 4.6.
Yeah,
So I given a ranking of on a 1 to 10 scale 9.
That's wonderful. Finance Minister will be really happy, and so will be the entire team right there. I'm sure for the middle class, this was the top ask. I mean, on the run-up to the budget, every time we were asking was like, okay, taxes have to be reduced, middle class burden has to be eased. Do you think enough has been done this time around to make at least those demands pretty happy, those salaried class payers very happy, or still do you think something else would have been done or should have been done?
What has come in the budget is some portion of outcome. I think my own belief is next 2 weeks, I think next 1 week they have said that they will release the new income tax code. So as this budget is focused more on ease of doing business, making it more easier for doing a KFC and other stuff they have mentioned about the budget, I would assume even the income tax code when it's being released, you will find some kind of positive surprises by way of various surcharges that's being taxed and so on and so forth may get revisited. Therefore, it will become more simplified tax structure, which may get released in the IT document they are going to present. I will also not be even surprised. Anything related to the capital market, there has not been any mention about the capital gain tax. There is a high probability capital gain tax related surcharge and other things that may also get revisited in the income tax, the revised note that they are going to present next 1 week time. So I would assume, I think they are doing a lot of stuff outside the budget. With respect to the taxes, which is biggest tax is about GST. I'm sure as the collection starts improving, they'll be able to give enough push through even GST as you move forward the next 1 year or so. So my own belief is the whole the commitment for the government is to actually get back on growth path, as FM has mentioned, as PM also mentioned in his address. Clearly, I think what is most push that is being given is to ensure that our growth is back on track.
All right, Mr. Bala, thank you so much for being with us and sparing your time for us on such an important day. Of course, we'll go through the fine print and get you back very soon to probably look at some more data points as to see how things can go progressing going forward into the new fiscal year. But always a pleasure to speak to you. Thank you so much for your wonderful insights. And clearly, 9 on 10 budget for Mr. A. Balasubramanian right there. So he's very happy with this balanced budget that has come in. Okay, viewers, we already have now new set of panel experts who are joining in to really help you out with their views as far as budget is concerned. We have Mr. Pankaj Pandey, Head of Research, ICICI Direct. Firoz Aziz joins in, Deputy CEO, Anand Rathi Wealth. We have Sanjay Sinha, who will be joining us, Citrus Advisors, and Tahir Batra also will be joining in shortly. We have Tahir Batra now, President and CIO at Invesco, who will be with us on the show. And we also have with us Mr. Amarpal Chadha, tax expert, EY India. Warm welcome to all of you, and thank you so much for joining in. But you know, Amarpal Chadha, I'm going to be understanding from you. Yours is the most interesting bit as far as the markets and the budget is concerned. This is the time when everybody's top ask was reduce taxes, axe the tax, give some easing of the tax burden as far as the middle class is concerned, salary class is concerned. That prayer has been answered by the finance minister clearly. How are you looking at the measures that's been announced under the new tax regime? 12.75 lakh rupees of an income with zero tax and new tax slabs that have been announced under the new tax regime. Are you happy with it?
Yeah, absolutely. I think this is one thing which everyone was expecting, but was not sure that it would happen, because small tinkering is something that people have come to expect. But this move to straight 12 lakhs, I think this is being cherished. Till now, it's not sunk in with people, but it's a very big relief that people are getting. And like what you said, with the added standard deduction for people with salary, it goes up to 12.75 lakhs. So benefit ranging from maybe a 30-40,000 if you're above 12 lakhs already, going way up to 1,10,000 direct savings on tax. I think this is a very welcome move. And also the whole concept of trust in the taxpayer, which the finance minister reiterated multiple times, gives us very good indication and a positive flavor to the whole taxpayer experience.
Okay, so we are already playing for all our viewers on the screens what exactly is the new tax slab for all of you under the new tax regime. All those changes have been mentioned right there. But under this, could you help us understand how have you done the math, including you're saying that over a lakh kind of savings come in tax payments now for investors and for taxpayers who were under the new tax regime already. And there is further incentives for those who were in old tax regime perhaps to recalculate and see whether this one or the revised tax slabs will further add on to some benefits for them. Which is the income band where you believe maximum benefits can be seen now after this new tax slab?
Yeah, so just to understand, see the very basic, the tax at 12 lakhs. So if I would just take an example, if your income was 12 lakhs 75,000, you would earlier pay a tax of 83,000. Okay. Now that tax will disappear. And the maximum benefit will come if you are in a higher slab, because you must have noticed that the whole focus was on the middle class. So the maximum benefit, actually, if I were to take an income of 23 lakhs or 24 lakhs, at that level, the tax would come down by approximately 1,10,000. So also one more very interesting thing would happen is that now the choice to go to old tax regime will be really difficult, because unless you have really big spend on HRA and others, now mostly you will see the transition to the new tax regime, given that this is also favorable in it.
Okay. Ms. Chadha, just last one question to you before I let you go. I do know that you have a paucity of time right there. And that's as far as the announcement of the new income tax bill is concerned. Now, already these changes have been announced. What more are we expecting in the new tax bill that could be coming in next week? And then there could be further changes. What exactly could be announced? Could there be a sunset of the old tax regime completely? What are you expecting this time in the new tax regime there, new tax bill?
I think the finance minister very clearly articulated the objective is to simplify, reduce litigation, and make it easily understandable by the taxpayer and reduce the tax. She said it will be 50% of what it is today. So definitely all that will come into the new code. And also you're right, maybe directionally the old tax regime would die out, isn't it? Because anyway, everything's moving to the new tax regime. So very likely that the new regime that comes will give very directionally a future focus, very simple tax law is what she's promised today.
Okay, got that. Thank you so much, Mrs. Chadha, for being with us on this edition and helping us out, breaking it down for our viewers who benefits the most when it comes to the new tax slabs and the extension of the rebate that has now come in as an announcement from the Finance Minister today. Good to have you with us. We'll probably just get into the fine prints and get you back soon on Business Today in the days to follow as well. All right, viewers, we now have Pankaj Pandey, Head of Research at ICICI Direct, joining in. Also joining in is Sanjay Sinha, founder of Citrus Advisors. Warm welcome to both of you. Pankaj, coming straight to you. You must have now read through all the headlines, seen how the markets have reacted in the 2 to 3 hours of trade right after the announcement of the budget speech. What is your biggest takeaway for the markets and for investors?
Yeah, hi, good afternoon. Thanks for having me. I think this budget is all about consumption push through personal income tax benefit. And I think fiscal and all about fiscal prudence. I think given the way the government has done the capex allocation of nearly about 10 odd % compared to the revised FY25 number, I think there is definitely a moderation in the capex, and which I think is something which is not really liked by the market. And so overall, one needs to be now selective in the capital expenditure oriented stocks. And I think consumption stocks definitely are the flavor as of now. But we also need to see that this capital expenditure again has been muted largely because of the slew of elections which we have seen in the recent past. So on the lower base, I think probably the overall push or the overall allocation might not look higher, but even then our sense is that it is still a decent allocation. But definitely not the kind of one would have expected, because see, capex as a template has been the hallmark of this government for quite some time. So I think this is the first time we are seeing a bit of a change or tweaking in that template, and which is why one set of stocks or capex oriented stocks are not really doing well in the market. But having said that, we still need to see the fine print and also the comfort from the government that in case if we are able to spend these kind of a number, whether the government will be willing to accommodate further expenditure or not. I think that is where probably we need to see and wait it out for. But as of now, it is all about consumption and fiscal prudence.
It is all about consumption, and the fact that those in the incomes of above 15 lakhs or so will also be getting this benefit of a 12 lakh rupee, how should I say, non-taxable income, and that's the reason why you see many discretionary stocks also doing very well. We have the pleasure of welcoming Mr. Sanjay Sinha as well, founder for Citrus Advisors, and a very, very long-term watcher of the markets. Namaste Sinha Saab, my first question to you. I am sure this is your 35th budget in succession. Is it more?
Yeah, it would be.
Right. And I'll start with an unusual question to you. Sir, a lot of things have been done for the budget, in the budget for the state of Bihar. I'm sure you are very happy being from Dhanbad yourself.
No doubt. In fact, one thing which has been interesting in the last three budgets have been the mention of Bihar and Andhra Pradesh. And in fact, in this budget, Bihar had the unique distinction of being the only state mentioned repeatedly in the budget, and that has invited a lot of attention. Some of my friends have actually messaged that I should seriously look at relocating back to Bihar.
नहीं, आप मुंबई में ही ठीक हैं. बजट में अब कहलवा दिया दिल्ली वालों ने आपके लिए, अब इससे ज़्यादा क्या कीजिएगा. We have another common friend who's from Bihar. He was equally enthused with the mention of the state in the FM speech, and I'm sure good things are in the pipeline. It's just a matter of convenience and luck that the elections in Bihar are due. Otherwise, there was no reason for them to be mentioned. With that background in mind, Sanjay ji, tell us the hits and misses. What, according to you, the budget addressed very well, and what possibly was left unsaid?
Okay, so I guess, if I look at just the budget speech, because, I haven't had the time to go through the entire finance bill, and the devil will lie in the detail in the finance bill. So I guess in the budget speech, there are a couple of things which addresses the issues in the short term, and there are some of the issues which are being addressed in the medium to long term. I think what is being addressed in the short term is now being very widely discussed. The slowdown in urban consumption was something which was a matter of concern, and the fact that now the tax relief has been given, most of the salaried people will be in the urban centers, so therefore it is logically expected that this will give a fillip to consumption. I think this may not be as simple as it looks like, because consumption. If tax was the only reason which was holding us back from consumption, then life would have been very simple. Tax is what we pay on the margin. What normally affects my consumption capacity or my distribution of the consumption pie is actually my income itself. And therefore, that is the more material thing, and that will be a function of a couple of things as we go forward. Last year, one of the things which has impacted consumption in India is not just any other factor, but inflation. So till the time that we have mastered inflation, we may not necessarily see this tax relief flowing into consumption upswing. But having said that, we do need to acknowledge that the announcement is very bold, and therefore at least it addresses the here and now or the more immediate issue. I think what is more important that the budget is all about, and I think these are the issues that the budget addresses in the medium to long term. If there is a serious intent to build India into a manufacturing hub, then one of the things that we need to put into place is ease of doing business. I think repeatedly in the budget speech, if I go by just the speech itself, the finance minister has made a number of announcements which seem to indicate that there is a serious intent on the part of the government to make the conduct of business easier now than before. So whether that be in terms of the trust between the taxpayer and the tax authority, whether in terms of simplification of the TDS and TCS process, or the sheer announcement that the new tax code will be placed in the next week, and that will be significantly lower in terms of volume of words and chapters to deal with. I think that is more important, and therefore I feel that how is that going to be executed will be a more material test of this budget than the euphoria or the excitement that we are seeing in the consumption stocks and the stock market today.
Okay. Pankaj, I know we have to let you go, but very quickly, in 30 seconds, if you could tell us what do you expect on the Nifty now post the budget this year? Is it going to be good? Are we going to retest the previous highs? Are we going to go beyond it? Or are we going to slip from where we are?
As of today, it's a sort of a non-event, but our sense is that possibly since the capex is going to be slightly less intensive, so overall, possibly the revival in growth might sort of get delayed, and which is why, while I'll not be surprised if the market touches new high, but not the levels of 28,000 which we had predicted at the beginning of this year.
With that, Pankaj, I think you would deserve a very, very big party in Delhi if we are able to reclaim even our previous high, which is 26,000. More than welcome, sir, to claim that party. Let's hope that happens fairly soon. There are a lot of discontent and pain in the market. Right. We'll take Sanjay sir's view on this. Post this budget, Sinha Saab, is there a pivot in your mind in terms of where fresh money will be allocated? Or is it par for the course?
No. So therefore, there has been a significant amount of under ownership in consumption-oriented stocks, and in fact, if you look at the index performance also in calendar year 24 or even some period before that, there will definitely be some shift in the new allocation that will now go to consumption-oriented stocks. While this is going to be happening, I hope that people will also be paying attention to the valuations at which they will be picking up stocks. Therefore, I think we might see what we understand as consumption to be a little more broad-based, in the sense it will not be limited to only FMCG. It will also include autos. It will also include real estate. It will also probably include premium retail, so on and so forth. So that is one shift in the allocation that I'm going to be seeing. Second is that, in close to about 500, 600 results which have come out till now, And when we have looked at the top 1,000 stocks in terms of market capitalization, in terms of their Q3 performance, what I did was that I divided this entire spectrum into four major boxes. One was consumption oriented, the second one was export oriented, third was finance, and fourth was industrial. So contrary to the way the stocks have been reacting on the market, I found that at least the first three baskets, which is consumption, export, and financials, have actually done reasonably well year on year in terms of profit growth. But I guess the expectations of the market were significantly higher, and the stocks have therefore not been able to meet those expectations, and there has been some disappointment. It is in the industrial segment that is where I saw maximum pain and decline in profit. So when we go forward from here, today I see that there could be a two-pronged pressure on this segment of the market, industrial. One is that the narrative is that against an increased allocation that people were expecting in the budget, the allocation to infrastructure has been retained somewhere close to where it was in the last budget at 11.2 lakh crores. And the second is that the near-term performances of these stocks and sectors have also not been doing well. So I guess there will be less interest to put money into industrial and more interest to put money in consumption, which could be a shift that I might see in the market in the near term.
Right. As good a time as any to welcome Mr. Feroz Aziz, Deputy CEO at Anand Rathi Wealth. Namaste Feroz ji, a very warm welcome. I am very, very sure that this entire tax benefit that has come in via the government in the budget, you want people to put into SIPs.
Yes, how I wish that happens. But I'm very happy if the government gets some more consumption boost rather than just the investment boost. As a industry participant, it's so exciting to say 1 lakh crore के SIP के आंकड़े बढ़ सकते हैं साल के, because 1,10,000 crore goes into pocket, पूरा पैसा आ जाए SIP में. But I think to be fair, even if 40-50% of that came, I would be very excited.
Right. Feroz, warm welcome. Good afternoon. Sakshi this side. Tell me, what were you all expecting? And has that all come into the budget, or is there still some thing left out of the budget to be done by the government now?
I think, see, my expectation over the last few interactions I've had with media or with clients, one was consistency, simplicity. Let me touch upon what they've done on these two counts. Consistency, the fact that there is a direct tax code coming in, there's no capital gain tax key, any baat is a very, very good thing. Second, simplicity, they have already simplified TCS and TDS, which is very good. They've simplified remembering tax slabs. जिंदगी में आई हैव नॉट बीन एबल टू रिमेंबर टैक्स स्लैब्स, क्योंकि बार बार बदलते रहते, 5 लाख तक टैक्स फ्री, फिर 5.5 लाख, नाउ दे मेड इट 2 मल्टीप्लिकेशन टेबल्स. 4 के टेबल में 4, 8, 12, 16, 20, 24, those are slabs. Tax rates are 5 के टेबल, 5, 10, 15, 20, 25, 30. So now unless they again tweak it, at least I can say confidently that मुझे याद है और कोई भी आम इंसान को याद रह सकते हैं. That's the second part of simplicity. Third, she said, I'm going to eliminate half the provisions in the next 1 week, which I think is going to be a great news. So I think simplification was done, consistency was done, rectification of different asset classes were not done.
Okay. Feroz, staying with you, in terms of fresh allocations, what would you advise existing investors who want to put in fresh money into mutual funds, and new investors who are coming in, how to make their portfolios keeping this budget in mind?
I personally think if you're a fair human being, then this is advice only for fair human beings who expect the right things. If you're ready to weather the volatility of 5-7% here or there, and broader markets of about 8-10% here or there, there's a quite large likelihood that at a discount of 8% you see from September, 6 months of time correction, and an 8% broader market, nifty correction, and a broader market correction of almost 11-12%, I would surely buy into it. Why would I buy into it? Is because the kind of capital expenditure we are seeing, 11.2 crores, 11.2 lakh crores, is a reasonable capital expenditure, and they're actually meeting it and actually spending it. And if I have to give some context to this number, because 11.2 crore, 11.2 lakh crore भी बड़ा है, 3 लाख करोड़ भी बड़ा होता है, तो इसको कॉन्टेक्स्ट में डालूं तो पहले मोदी जी के मोदी 1.0 में 12 लाख करोड़ 5 साल में खर्च हुए थे कैपिटल एक्सपेंडिचर. नाउ वी आर स्पीकिंग 5 साल का काम 1 साल में हो रहा है, वो भी दूसरे साल भी उतने का उतना. सो दिस विल बी द थर्ड ईयर वेयर आवर बजट इज अबव डबल डिजिट लाख करोड़. एंड कोई भी देश देख लें इस दुनिया में, they've gone into a different trajectory of becoming a developed country. It is always preceded by huge infrastructure and capital expenditure, and that's one thing which they've been steadfast on. Okay, they're spending one thing which I didn't understand, or I'm still trying to comprehend. They're trying to spend 2,33,000 crores, 211 crores on home affairs, which is a 68% growth, which is hurting me. And they're spending only 9% growth on education, which is not so. 1% growth on education and 68% growth on expenditure of home affairs is not, for a country which is so young, like 29 years of average population, is not making sense.
Got that. Okay, so Firoz, tell me, post the budget, does anything change by way of investment strategies for retail investors, or should one just stay the course? You were with us, at the beginning of the new year, and you were suggesting some funds and schemes that one could look at in terms of their diversified portfolios. Is there a need to add any thematic fund? Is there a need to alter that, or put some additions looking at where the government is looking into the direction now?
Yes, Sakshi, if you recollect that day, I said that the problem is not with Nifty. The broader market is skating a little on thin ice.
Yeah.
Now that broader market correction is, to my mind, behind us. If you dissect the broader market fall of becha kisne, right? And after some research, I figured out that becha na to FII index fund FIIs ne nahi becha. These short-term FIIs, ARB funds, hedge funds have sold brutally. There were 38 companies where these FIIs had doubled their shareholding. They have sold it, and all of that is already emptied. That's one information I'm giving you. In my opinion, these short-term FIIs have emptied their small cap portfolio. So broader market may not be into a pain because there will be a sharp pain in a short span of time. So you don't have to worry as much as you would worry if the markets fall like this. 32.9% is the growth in earnings for the 80 companies in the mid-cap space which have declared results out of 150. People are not speaking about it. 32.9%. वो 80 कंपनियों ने लास्ट ईयर सेम क्वार्टर में 77.86 रुपीस कमाया था और इस साल 103 रुपए 50 पैसे कमा चुके हैं. Of course, there are 70 more companies to declare results, but broader market fall is almost over. 8-10% falls here or there is not something which I can surely not guess. Of course, LG can, because he's always got it right.
Okay. We'll discuss this in person. I'm coming to Mumbai. I'll come and say hello to you in your office. Thank you so much, Feroz ji. It's a pleasure listening to you. And in the same breath, ladies and gentlemen, we've kept the best for the last. Joining us is Mr. Tahir Batra, President and Chief Investment Officer at Invesco Mutual Fund. Namaste Tahir ji, and a very warm welcome to you. You are absolutely the right person to ask in terms of what the budget ticked in terms of boxes, what it missed, and what will it mean for the small cap and the mid cap space.
Sir, are you on mute by any chance?
So you'll have to unmute yourself.
I'm so sorry. So I think, most of the boxes have actually been ticked quite appropriately in my view. I think keeping the where we were in terms of the market situation as well as in terms of the economic situation, I think the budget overall at one level has delivered to my mind to the expectations of the market. This was, I have said this earlier, that this was an important budget in a good number of years. This was important because we were at a little bit of the crossroads as far as the economy was concerned, and I think this budget now starts giving a much more firmer direction. One important thing which had to be resolved was the balance between investment and consumption, and I think that has also been to a decent degree addressed. We have been having a investment-led economy, which was important, which was also very critical. But given that it was to some extent coming at the cost of low-end consumption, it was becoming a little difficult to bring that balance in. And I think this budget effectively addresses that. On the uh, uh, you know, uh, on the investment related aspects and the amount which has actually been budgeted for capital expenditure, it might probably appear that it is a little muted. In percentage terms, of course, yes, maybe we are trending a little lower compared to what we had been doing over the last couple of years, more single digit, high single digit compared to strong double digits, almost close to 20% plus in the last few years. But I think when we look at the internals of this number, I think and not just probably public expenditure, but even every line item of public expenditure. I think the government has tried to ensure that the important segments do get the necessary allocation. Those which matter, for example, whether it be defense or whether it be things like renewable energy, probably even an allocation of more than 2,000 crores for new technologies like AI. These are keeping with the times. There may have been rationalization in few of the other areas which are probably not as important at this stage, or perhaps they have been farmed out to the private sector. For example, think some parts of maybe the railway ecosystem have been farmed out to the private sector, like for example, railway stations, etc. So I think to some extent the railway allocation perhaps appears a little disappointing. But at an aggregate level, I would think that many of the line items do continue to reflect the government's focus on some of the more strategic parts of the economy. That is where thematically many investors have positioned themselves, including ourselves in several of our portfolios, segments like defense and urban metros and so on. That part has actually been well taken care of. For example, even the metro allocation, I'm told, is higher by 25% compared to the previous year. So the relevant segments have been, given a fair bit of allocation. And I think it strikes a good balance in the context of the fact that we've recently seen a correction in the markets. To your question about mid caps and small caps, I think I still believe that the mid cap and small cap space in general will be quite vibrant in India over the next few years, given the fact that we expect the domestic economy to be reasonably strong, and with the possibility that it might even accelerate as we go along. Mid-size and small-size companies typically are the biggest beneficiaries of a strong, resilient domestic economy, and I think that then becomes an interesting space to invest in, and especially in the background of the correction which has happened. I heard Feroz ji call out a few numbers with regard to the performance of some of the mid and small cap companies, and I think that's quite fair. And there have been, of course, expectations which are also reasonably right up there, and to some extent that would have created a little bit of disappointment. But I generally feel that these will be the areas where you will get growth which is well ahead of system rate of growth, and typically if you get some of these punchy corrections in the market, especially in the mid and small cap space, of course you can't put all of the money to work, but can you put some part of the money to work? Definitely yes, and I would do so in such circumstances, because these kind of dips in the market do um, boost your aggregate returns, especially when you sit out 3 years from now or 5 years from now. You'll be happy to have done some of those allocations in such times.
Right. Mr. Pasha, just 1 minute to go before the markets shut shop on budget day. I just wanted to take one view of yours, and that's on should the retail investors change their investment strategy post the budget? Should they stay the course? What exactly would you recommend is needed to be done on the markets now? Because we've seen, the initial reaction on the positive side. We digested it, and it was being seen that last 5 days of a rally was only a hope rally or a relief rally, and that's things are back to 23,400, 23,500 band. How would you really expect the retail investors go about it now?
Well, my simple, premise for this calendar year is that you are probably going to see a decent amount of volatility in the first half of this calendar year, perhaps running up until May, June,
Okay.
budget notwithstanding. While I'm reasonably happy with the budget outcome, I would like to say, as I said, but I would like to think that this year will be first half will be relatively challenging and returns will be relatively more back-ended. So second half will be relatively better. Much of the global volatility will also probably because of global circumstances and a few of those things which are also at play. I think that will settle down during the course of the next few months, and markets will then start looking at some acceleration in the economy, by which time we would have probably seen a time correction, and maybe even the earnings base would have actually start becoming favorable for growth to once again accelerate. So I am looking at a back-ended return profile, which from the small investor point of view, it basically implies that you should actually start investing in during this next 4 5 months. The market might stay sideways. You might get some modest absolute correction as well from here. I think the big leg of the correction probably in the market, to my mind, is over. You might still get a smaller correction from here on, but in that phase, you have to utilize to make your investments, your product choices, your SIP plans, etc., in place, so that you subsequently end up with returns in the second half of 25 and going into calendar year 26 as well.
Right. I think that will also be the time, the second half of 2026, when this liquidity injection by the RBI a fortnight ago, and of course the benefits of the budget will start converting themselves from an economic push towards an earnings push. That is something that a lot of other analysts have also said. Mr. Batra, one thing we wanted to understand was your view on a potential rate cut. Given the fact that the currency itself is depreciating, do you think the RBI has some legroom to cut borrowing costs? Would that be an icing on the cake?
Definitely, and I believe that while I understand that the challenges around getting that trinity right between growth, inflation, currency, etc. But I think at this stage, what is important is to actually restore the confidence in growth as far as the economy is concerned, and to some extent, I think. Looking at both the liquidity measures which have been undertaken by the RBI in the last week or so, and then now looking at the budget, I think that there seems to be a certain amount of coordination between government as well as the central bank in order to ensure that we get better monetary as well as a fiscal policy. I think this budget loosens up a little bit in terms of allowing for better growth and a more balanced growth, and RBI's liquidity measures also allow the overall monetary system to also loosen up a little bit, and that I think will be good from a growth standpoint. Some part of the currency challenge, in my view, will revert once, like as I said, as we see some of the global issues settle down. The new US administration is going to be on their policy drive for the next 2 3 months, and that will perhaps pull up the dollar and at the cost of some of the other currencies around the world, including emerging markets like India. But that is exactly what I expect will probably reverse as we get into the second half of the year. Flows start improving, and then the whole cycle that we are going through right now probably reverses. The dollar probably settles down a little bit on the lower end. Rupee stabilizes, domestic liquidity conditions improve, and foreign flows also then potentially return in the second half of the year. So that is a script which I think the market will probably follow in the coming weeks, and that will then open up the room for RBI to even cut rates. So I think we still remain in the hunt for RBI to start, at least going down towards a shallow rate cycle or rate decline, perhaps beginning, let's say, in the next 2 3 months.
All right, Mr. Batra, thank you so much for being with us then on this edition and sharing your views with us on the budget day. Hoping to have you soon once the fine print is out and we get to see more details coming out of the document today.
Thank you.
Thank you so much. Appreciate your time. The markets have shut shop, viewers. 26 points lower on the Nifty, 23,482 right there on the Nifty. What's shot up and celebrated the budget is the real estate space, 3.3% higher. Top moving sector. You also have the FMCG index up 3%, consumer durables up 3%. It's the tax bonanza and the government's push towards consumption that has lifted all these stocks and sectors higher in trade. Even the autos are up by almost 2% odd. Some gains coming in on the small caps today. What's fallen back and is on the back foot are those which were so far outperforming: IT, metals, you have the pharma stocks, banks, financials. These have been slightly on the back foot, but probably these will be the sectors to watch out for when 7th of February the RBI comes out with the monetary policy. Shail.
Ladies and gentlemen, let's look at the outperformers today, and you will notice a clear trend towards spending, which is consumption. The top gainer on the NSE 500 is brown goods major Blue Star. So get ready for ACs, get ready for fridges, get ready for washing machines. This is where the disposable income, because of the removal of the tax slab, will come in. Followed by DMart, 10% higher. When was the last time we saw DMart rising 10%? Well, that's the consumption theme playing out for you. Liquor company Radico, followed by United Spirits. All food players are up. Look at Sapphire, look at Devyani, look at Sakshi, Phoenix Mills, spending place.
Yes, absolutely.
Malls. So
Malls.
Phoenix Mills is 7.5% higher, 1764. Westlife, again spending. Campus footwear, there is a special mention for shoes in the budget. We'll focus on that, and of course the entire staple space, which is Hindustan Unilever, Colgate Palmolive, Nestle, you have Britannia, you have Dabur, you have Marico. This is where the initial part of very basic expense goes. Then you have discretionary. Look at Trent, look at Aditya Birla Fashion Retail, look at how stocks in the semi-luxury real estate space have moved. Those who make medium-sized housing, look at Anantraj. Look at how low the developers have moved. These are mid-sized builders. They don't do the top end. Of course, they make a lot of luxury projects, but that's not much of a contributor to their top line and the bottom line. So clearly, the budget has chosen to move towards consumption. And Sakshi, one more important point that the budget has made is telling corporate India that we've put money in the hands of the spending class. Now it is for you to pick up the baton and start capex. Will that happen or not happen? Only time will tell. But so far, the reaction of the Nifty to the budget has been a sign of maturity. Perhaps, just perhaps, you might see the worst behind us, but then markets are dynamic, markets are volatile. Let's hope for the best and plan for the worst.
Absolutely, Shail. I think the biggest task has been delivered. That was the biggest task, that you deliver on tax cuts, and that has been delivered. Remember, we were discussing how 100 crore rupees houses have been off the shelf in just a day, but it's the PMAY scheme that has not taken off. So I think that's the strata that the government has clearly focused on, and probably that will move the needle for the economy. Let's hope for the best. And we'll wind it up at that. Thank you so much.
You have to go and spend.
You
go to a restaurant.
Celebrate.
You know, Friday evening went by, it's Saturday evening.
Yeah.
Please prove Shankar Sharma wrong, go to a bar. United Spirits, Radico, Piccadilly, everything is up.
Additional money. Go into
Eat
parties.
out, Devyani International, Swiggy, Zomato, कुछ कीजिए. फाइनेंस मिनिस्टर ने कर दिया जो उनके हाथ में था. अब आपके हाथ में पैसा है.
अब इकोनॉमी को चलाइए. All right, viewers, thank you so much. It's been a pleasure covering the budget day for you with various stock market experts, economists at large who've been guiding you through this day. Thank you so much, but do stay tuned. The action is not over. It's in fact just beginning. We're going to be seeing action from the CII in the evening, and of course, we will be getting secretaries of finance, those which have been part of budget making exercise today, helping you understand why they chose to do what they did and what is the impact that they expect all through the evening. So you are right in the middle of the budget action. Stay tuned. Don't go away.